listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney. We are live here in the Bloomberg Interactive Broker Studio in New York. We are streaming live on YouTube as well. All right, I'm looking at some Bloomberg reporting here. President Donald Trump says he intended to send letters to trading partners in the next 1 to 2 weeks, setting unilateral tariff rates ahead of a July 9th deadline to reimpose higher duties on dozens of economies. So sending out letters, I'm not sure what that means, but I guess, do I watch my...
Dear sir or ma'am.
Exactly. To whom it may concern, we're raising your things. Nathan Dean, he knows stuff because we pay him to know this stuff. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Nathan, just give us your latest kind of overview of where we are on these tariffs here, a little, I guess, context.
Yeah, what I would say is there's really two phrases we're saying at the moment. The first is uncertainty. And look, if you're in the markets, this isn't a new word. You know that uncertainty is the word for 2025. But I would also use the phrase status quo, because even though President Trump said yesterday that he's going to send those letters out, and for what it's worth, that's a much easier way than going to the Rose Garden and holding up a little card that says here what the new tariff rates. You know, I think what we're going to see is we saw some reporting from Bloomberg News just last night that President Trump was also talking about extending this. So I think the current idea here is that you're going to have a situation where you have President Trump going out there and making threats or making statements that raises headline risk. But subsequently, you're also going to have this idea that we're just going to try and keep the status quo because we don't want to rock the markets. And so I think you are going to see some examples. I think President Trump may pick on a couple of countries or the European Union in particular to try and raise a renewed threat or a headline risk in order to spur negotiations. But I think for the next 3 to 6 months, the markets are going to face this status quo of a 10% baseline plus an extension or plus an exemption or plus a certain additional threshold like we saw with the China agreement. And that should probably stick through the third quarter.
Are these agreements, we're just looking at China and the UK, are they actually different, or are they just kind of circling back to where we were before all of this trauma unfolded here?
Well, so the China one is mostly status quo from where we were before, but the UK agreement was different because the United Kingdom didn't have a trade deficit with the United States like other certain countries do. So the base case scenario that you should be looking at is a 10% minimum tariff on every country. I mean, look, you know, we heard Treasury Secretary Scott Bessent say if they don't have any trade, tariffs on us, we're not going to have tariffs on them. But this idea of a 10% baseline is something that's usually sticking around at the White House. But then you're also going to see exemptions. For example, automobiles, technology, anybody that can get into the White House is going to be pushing for President Trump to offer exemptions. And we just go back to this idea that if you are going to see sectors that impact consumer prices, so think of things like Apple MacBooks or Amazon or, Walmart, like Treasury Secretary Scott Bessent was just getting pushed about in the Senate Finance Committee, then you are going to see exemptions, but then there are going to be additional, tariffs for other countries. But we should say that a lot of this depends on negotiations. Bloomberg News reported just 20 minutes ago that Prime Minister Mark Carney said the U.S.-Canada is going well. They reported last night that negotiations with India weren't going so well. So that idea for examples to be made before July 9th could come about.
Okay, I guess we just keep in touch with him.
I hear some skepticism from Paul at this moment.
It feels like we're going to get to a spot kind of where we did last time, which is at the end of the day, it's a lot about nothing, And I think the markets, certainly the equity markets, might be pricing that in with the rebound here. All right, Nathan, for the adults in the room here, what's the next thing from D.C. we should be focusing on here?
So the number one question we've been getting from our clients just this morning is, when is the Senate Finance Committee going to release its legislation or its text of President Trump's one big beautiful bill? So if you're an equity investor and you're exposed to the solar industry or the wind industry, this is very important to you, because Senator Crapo just last night was saying that things like certain tax credits should be phased out earlier, and we think he was hitting at solar and wind, and others would be extended, which was nuclear and geothermal. Now, obviously, we're still waiting for that text. Now, I think that text is going to come after market close on Friday. I think it's going to come Saturday or Sunday, but keep your eyes out, because there is this potential for some, I used to say marijuana stocks have hot sauce. Now I say the solar stocks, they have hot sauce. So these things move around. So definitely keep your eyes out for that. That's probably the next major catalyst you're going to see coming from Washington.
Is that like is hot sauce reference is a good thing or a bad thing? Or just spicy? Just stuff
It's
happening?
just spicy. I stole it from our friends over in the ETF space.
Okay, no, fair enough, because the solar sector is just really in a mess based on when the tax credits land when it comes out of the Senate. Do you think the timeline still works?
I do. I think, obviously the senators want to have all this legislation out in the public arena before Juneteenth next week. They're going away for a couple of days. And I think the Senate can eventually get there. They seem to be a little bit more, I'd say, on board. There were still major questions about the deficit, getting the Rand Pauls on the debt ceiling and, the other senators, Ron Johnson's, if you will, on board. But I think they can get there by the 4th of July or maybe even after the 4th of July. We still are thinking an 80% chance this gets done before the August recess.
All right. I mean, those recesses are actually a good incentive to get stuff
Like
done.
deadlines.
Yes, so
Yeah.
it's good. All right, Nathan.
I'll take
Appreciate it as always, Nathan Dean. He is our go-to person in D.C. to explain all the craziness down there in terms of the policies. Nathan Dean, senior policy analyst, Bloomberg Intelligence. He's down in our D.C. bureau. And again, we're going to get some tariff discussions continuing. And it's all about the big, beautiful tax bill, or will it be something different coming out of the Senate when they send it back to the House? So a lot going on. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now. The market's showing a little bit of red, a little bit of green, a lot of direction in the equity markets. Yields coming in. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, happy Thursday, everybody. Happy Friday Eve. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are covering all the top news for you within this hour. We're going to get the latest on Boeing and the Air India Boeing 787 crash after it took off in India. Sid Phillip will be joining us. He's Bloomberg Deputy Team Leader, working overtime there in London. Jake Silverman is Bloomberg Intelligence semi-analyst about Micron investing about $200 billion in U.S. chip manufacturing and R&D. I want to know, what's new? What's already planned and what's new in that? Max Wasserman is co-founder and senior portfolio manager at Miramar Capital. We'll get his take on the markets. And Jason Kelly, Bloomberg Originals chief correspondent. He has the latest episode of The Deal with Alex Rodriguez. And this title?
Yep.
Magic Johnson.
That's going to be awesome.
Oh, yeah. We will definitely get to that. But let's kick it all off right now with the Bloomberg Business Flash. And for that, we go to John Tucker.
All right. Right now, the major stock averages, they are, we'll call it mixed. We had data this morning. Inflation muted in May. The producer price index rising just 0.1% from the month earlier. So this could give the Federal Reserve room to lower interest rates. But Gennady Goldberg at TD Securities says, you know what, investors really can't take any solace from the recent data.
Are we done here? Can we just all move on? Or is this really just the eye of the hurricane and there's a lot more coming? I'm more in the latter camp. I do think there's more pressure coming. There's a lot more coming on the inflation side, almost certainly. We are looking for high threes by the end of the year.
And there is coming a 30-year auction today. Ahead of that, the long bond down 4 basis points, right now at 487. The major stock averages, the S&P 500, 18 points higher, up 0.3%, 6,041 on the index. The Dow unchanged, and the Nasdaq 100, 80 points higher. That is up 0.4%. Oracle was at a record best performing stock in the S&P 500, also leading gains in technology shares. They said cloud infrastructure sales going to soar. Boeing, again, that is the worst performer in the S&P 500 after the Air India crash. Meantime, the difference between expected returns on stocks and U.S. Treasuries hovering around its lowest point since 2002. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. John gave you the index overview. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele, and we're joined by Bloomberg's Denitsa Sikova. Denitsa, what are you looking at this morning?
Let's start with a quick check on Boeing. Obviously, it's coming off the devastating news of the crash with the plane heading to London from India. The stock is down about 6% today. Along with that, we're seeing General Electric, we're seeing Spirit Aerosystems, we're seeing a lot of those avio companies suffering devastating crash. More than 200 people have been found dead, and obviously we're getting more and more developments on that. It's raising a lot of questions about the safety of civil aviation. We know the 2024 was a pretty bad year. 2025 had a rough start. There were more and more questions about Boeing, and it's clearly those questions are coming back. The motor was from General Electric, so those stocks are also seeing pressure. So devastating story, and indeed raising a lot of questions going forward for civil aviation.
Yeah, absolutely. All right, what else are you looking at?
We're looking at GameStop as well. The stock tumbled more than 19%. It's about 20% now. If we look year to date, it's down 27%. Pretty rough start of the year. They're implementing that stolen from strategy from Michael Saylor, and they're planning to offer about 1.75 billion worth of convertible bonds. They made a lot of changes in March, and it seems like this hasn't reflected that much on their share price. They updated the policy to allow executive and directors to promise securities as collateral. They also allowed in their investment policy to invest Treasury Reserve assets in Bitcoin. So those two big changes were supposed to help the company, but clearly investors are not reacting well to that big loss year to date. Of course, this is a retail favorite, so things move very fast and fortunes change. But so far, the news today are not taken well by investors.
All right, anything else?
We have BioNTech buying CureVac. That's a very interesting one where the two companies have been rivals for many years. And now BioNTech is buying it for 1.25 billion, all stock transaction. So BioNTech won the race with Pfizer when it comes to becoming one of the leading biotechs in Europe. CureVac shot never made it to the market, actually, but they have pivoted away from infection diseases work, focusing instead on cancer immunotherapies. So that acquisition is adding to BioNTech effort in that. The stock is up just over 1% today, but year to date, pretty strong gain of 6%. So some good news for vaccine makers.
All right. Thanks so much, Denitsa. Really appreciate Denitsa Sikova joining us from Bloomberg. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Let's dig in a little bit more what Denitsa was just talking about when it comes to Boeing. So the Boeing 787 Dreamliner that was operated by Air India crashed shortly after taking off in India, killing all 242 people on board. Joining us now is Sid Phillip, Bloomberg Deputy Team Leader for Global Aviation. I said he was in London, but he's not. He's in Paris. I should have known from the Eiffel Tower that's behind him for those of you on radio. Sid, this is all right before the Paris Air Show, right? What are you hearing on the ground?
Thanks, Alex. So yeah, at the moment, we don't really have details on what really went wrong with the aircraft and what caused it to crash. I mean, it reached an altitude of 625 feet, and then it sort of just plummeted to the ground in a massive fireball. And we know that over 200 people have been pulled out dead. There has been some mention of survivors. We don't really know how many. The police said that survivors have been taken to hospital. We're not quite sure whether those survivors are from the aircraft or whether they're from the residential building. So the plane crashed into a residential building. It was a medical college hostel, and that's where students and doctors were eating lunch when the plane crashed. So it was a massive tragedy for Air India, for India, and obviously it's raised lots of questions on Boeing, and we're still waiting to see what those answers actually are to those questions as to what caused it and where do we go from here.
So typically, who leads these investigations here? Is it the host country? Is it the airline? How does that work?
Yes, so the investigation will be led by investigators from India. So typically when a plane crashes, the country where the plane crashed leads the investigation into what went wrong. The other countries that we have FAA input, we have NTSB input, we have input from the manufacturer, in this case Boeing, and also from GE because they made the engine. So there will be input from others. And we've also seen the UK Air Accident Investigation Board talking that they will be sending some investigators to India tomorrow. So it'll be a multinational effort in terms of trying to find out what went wrong, and then they will determine where the problem came up from and what really caused this crash.
We are seeing Boeing shares down, obviously looking at GE because they were using GE engines. Are those market reactions, investors' reactions, legitimate, considering how much unknowns there are, how hard it is to fly planes, and the variables like birds?
It's difficult to actually put input this onto Boeing or GE because, this aircraft has been in service for over 11 years, almost 12 years. So it's not a brand new aircraft that's just come fresh off the line from Boeing. So, it is far-fetched to pin the blame on Boeing without ascertaining the causes of what happened and what went wrong. Obviously the investigation will determine what went wrong and who is at fault, and if there was pilot error, if there was any technical issue, if there was something wrong with the plane or with the engines. But it's all still too early to determine the cause of it. And so it does seem to be an initial reaction, and we will get more clarity on what really went wrong in the days and months ahead as we as the investigators pour through the flight data recorders, the cockpit voice recorders, and piece together minute by minute, second by second, what really went wrong.
All right, Sid, thank you so much for joining us. Really appreciate your reporting. Siddharth Philip, Deputy Team Leader for Global Aviation, Bloomberg News. He is based in London, but he's reporting from our Paris bureau today. Let's switch gears, get back to technology. One of the big stories in the tech space today, Micron, to invest about $200 billion in U.S. chip manufacturing and R&D. To break it all down for us, Jake Silverman joins us here from Jake Silverman from Bloomberg Intelligence joins us. Jake, how big of a deal? $200 billion, that gets my attention. It seems like a big number. Is this part of this onshoring, reshoring commitments that we're seeing across a lot of different companies and industries? Is that what's happening here with Micron?
Yeah, I would liken it to that. We've seen pretty high-profile announcements from companies like TSMC, Apple, Global Foundries, and so Micron's already committed to spending a lot in the United States, and this is just a continuation and extension of that.
So what's the new spend and what's previously announced spend?
Yeah, so it seems like there's a few numbers kind of thrown around there. It seems like there's an additional $30 billion. A lot of that, I believe, is in R&D, but I've seen $125 billion beforehand. But regardless of the fact, it was $100 billion plus now, at least $200 billion over likely what amounts to be several decades.
So in reality, how does the industry view building chips here? Like historically, what chips were built here or created here and what were fabbed outside of the U.S.?
Yeah, so just to keep it Micron specific, as we already know, right, you have Intel in the United States, mostly, supplying to themselves, and TSMC being kind of the world's foundry of global foundries with their fab, and a lot of internal fabs across the United States. But Micron specifically, the vast majority of their capacity comes from Taiwan and slightly lesser extent, Japan. And so this is really is a bit of a shift in terms of their strategy, but something, as we've just talked about, has been a plan for several years now.
How much does Micron usually spend in CapEx a year? And would this be comparable?
Well, it's a little bit difficult to determine exactly because we don't know the timeline, like the exact how much they're going to spend per year. But
typically, what do they normally and what have they been spending in CapEx?
No, they're planning this year to spend between I think roughly $15 billion in terms of fiscal year. I have to double check my numbers, but that would sound like a number that would over the course of several decades, we expect them to spend, plus R&D as well.
Where are we going to be building these plants? Have the companies kind of disclosed where they're going to be building all this stuff?
Yeah, so the plants are already announced in Idaho, Boise, Idaho, and Clay, New York. So there's going to be several.
Clay, New York?
Yeah, it's in upstate New York. There's several facilities within these. There's several fabs within these facilities.
Where does Micron sort of play in the AI world right now?
Yeah, so they're kind of specialized. So obviously you have your GPUs, you have your hyperscaler ASICs, and each of those chips tends to require HBM, high bandwidth memory. And so these are this is memory that's stacked on top of each other and then packaged on the same substrate as the GPUs. And so it's a pretty important part of that because you can't really have a lot of these chips. If you think about Blackwell for NVIDIA, before that Hopper, Google's TPU, Amazon's Trainium, I could keep going on, but all of them require HBM. There's other options that don't require HBM, but regardless, you're going to have to use high bandwidth memory for planning to build out these large scale AI data centers.
Clay, New York, just north of Syracuse. Next door to Clay, New York, and Cicero, Cracker Barrel Old Country Store. So the engineers will be well fed there at the fab in Clay, New York. So yeah, I'm sure that's a good spot to be there, right in upstate New York. So Jake, give us a sense, just where are we in the cycle for semis here? Is the semi space being driven by the AI spend in the global tech stack, or what's driving it?
Yeah, I mean, AI has continued to be a secular driver for the entire industry as a whole. We've seen a little bit, I mean, one of the bigger contributors to semiconductor demand is smartphones. I think with trade-related, potential headwinds, that could be a problem there. But overall, smartphones, PCs have been relatively healthy, trade aside, tariffs aside. But we're starting to see also a return of demand for industrial. Automotive is a little less clear, but you still have things like ADAS, and you still have infotainment, connectivity. Those are continuing to be drivers within automotive. So it's a little bit mixed, I would say, overall in terms of like different sector to sector semiconductor spend. But generally speaking, I think we're at a somewhat more healthy levels right now in terms of demand.
Okay, so here's my update. I need to buy a laptop. I have not bought a laptop in like 20 years. What do I buy? I was looking on Best Buy, right?
What is this, a consumer segment for you?
Well, yes,
this is Alex's consumer.
Well, but this will go back to the chip thing because I'm going through the list and it's like blah blah chip with the thing and the process and the 200 and the Mac 2 and this. And I'm like, I don't know what any of this means. What is the better chip? What has AI? What doesn't? What am I supposed to do?
So PCs are not my area of expertise. But
you can play it on radio. It's fine.
I will say, I mean, there's a push for a lot of like AI PCs right now. I think there's a case to be made that enterprises need that. I think for consumers, there's a question mark of, can you just rely on applications like ChatGPT if you want to get AI? But generally speaking, I mean, it kind of depends what you want to use it for. I would assume that
like
you're
emails and stuff. I don't know.
Just get the Ray-Ban glasses.
Are you streaming gaming?
AI.
I don't know.
I'm definitely
Are you
not
streaming on
streaming
Twitch?
gaming.
Yeah. So you
No.
probably don't need anything that's like a particularly.
Are you an Apple person?
I mean, I have an iPhone. That's all I got.
Just get the Mac Air or whatever those things
You
are.
don't know. I'm not. What do you know?
Laptop. You're getting a laptop, right? Yeah.
Mac Air.
Get a cool one that just looks cool.
Yeah.
Just
See, this is why I asked the professional.
Send your suggestions to Alex Steele, care of Bloomberg.
That's right. astill6@bloomberg.net. Thanks a lot. All right, Jake, thanks a lot. We really appreciate it. Jake Silverman joining us from Bloomberg Intelligence. He's helping me find a computer, and more importantly, also talking about Micron and the investment in the U.S. All right, let's take a look at where we are within the markets. I got to be honest. If you were to tell me that the narrative was disinflation, and you would have had initial jobless claims, continuing claims rising more than we thought, I would have thought that would have been good news for risk assets because that would increase the probability that maybe the Fed could cut sooner rather than later. And it doesn't feel like we're seeing that narrative unfold. And I'm wondering why.
Well, I think it still may be the conversation we had about policy coming out of Washington, D.C. There's still tariffs. We feel like we're moving in the right direction, i.e. getting away from the worst case scenario.
Right.
It feels like the tax bill is winding its way through Congress, but there's still a lot of uncertainty around those two things, and it's a Friday, Thursday. I mean, it's a Thursday in the summer.
He wishes it was a Friday.
Yeah.
But this is also my question, too. We're just kind of removing worst-case scenarios, but
Yes.
that's different than having clarity. And who's really, is it the Fed or is it policy from D.C.? Like, which one is going to really be in charge? This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. It's for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Is this a conflict of interest? The S&P 500 bouncing as Oracle is leading the tech gains, actually soaring to a record. They are projecting dramatically higher sales. Again, the S&P 500 is higher as a result of that. Right now, 10 points higher, up 0.2%. We're at 6,032 on the index. If you're keeping score at home, the S&P 500 trading less than 2% away from its record close. Dow Jones Industrial Average, that is down 36 points. The NASDAQ 100, 35 points higher. That's up about 0.2%. And we have more evidence of inflation extending a week-long drop in bond yields. And that's your flash, Alex and Paul.
All right, John Tucker, thank you so much right now. Let's go to Bloomberg Television right now. We have an interview in progress. Chris Britt, co-founder and CEO of fintech company Chime, is speaking with Bloomberg Television anchors Ed Ludlow and Caroline Hyde.
Fluctuation of the stock, even if it goes up today, I'm sure there's going to be other days that won't be as great. So we remain focused on the long term, and that is being a company that's member obsessed and focused on solving the most important needs of everyday consumers that we serve. So I think today's going to be a pretty exciting day.
You've got 8 million plus of those consumers, Chris. How do you increase your own revenue in the scale of the business? Is it more products serving them? Is it more people coming in?
Yeah, we see multiple ways to grow. First of all, in Q1, we grew our active member base by over 23%. So that's increasing year over year. And at the same time, we continue to look for opportunities to offer new products that drive product attach and lead to more primary account engagement. At Chime, 2/3 of our members use us as their primary bank account. So they rely on us for their everyday transactions. And we love to, as a technology company, we monetize the relationships really through a payments-driven business model, which is very different than the way traditional banks go to market.
Chris, we love to read the risk factors section of the prospectus. I do it all the time. How real are those risk factors for you, specifically on interchange fees and how you're thinking about it?
Oh, we, I guess, I'm sure there's lots of risks that the attorneys put into the prospectus. We get questions about interchange all the time. We really like this model of relying primarily on payments-driven revenue. That's about 72% of our revenue comes from payments. And what we like about it is it's aligned with the best interests of our members. We have to earn our position as the top of wallet card every day, and we do it to the tune of about, our average customer does about 54 transactions a month. So they're incredibly engaged. And when you couple that with the digital-first, low-cost structure, that allows us to develop very healthy, profitable relationships with this interchange-driven business model. The reality is that our model has allowed us to offer fee-free banking to millions of consumers who otherwise would be paying hundreds of dollars a year to have a bank account.
You're able to be cheaper because of AI. I'm interested quickly, though. Regulatory risk that those interchange fees go smaller, particularly if you become bigger.
Well, we have a balanced set of revenue in the payments area. We have a debit card payments volume. We also have a secured credit card that's actually growing at a faster clip than debit. So we think we're very well balanced. And given the love and engagement we have, there's no shortage of opportunities for us to offer new products and services over time.
All right, Chris Britt, Chime CEO. We're waiting for the start of trade, but indicating a big jump at the open. Thank you very much for joining us on Bloomberg Tech. All right, coming up, we're actually going to go back in history a little bit and speak to one of...
Okay, right now that was Chris Britt, co-founder and CEO of Chime, speaking with BT anchors Ed Ludlow and Caroline Hyde. So that was interesting. Chime has not opened yet. As IPO'd at price last night, has not opened yet. Again, back in the day when I was doing these things, we had these babies open at 10, 10:30, no later.
No more. You're thinking 1. Like now we're looking 1 at best.
No, and then they had anchor investors. We never had that. We just kind of made a bunch of phone calls and we got it out the door. All right, let's switch gears to something really cool, and Chime is really cool too for a lot of folks that are on to that fintech stuff. Jason Kelly joins us here, Bloomberg Originals chief correspondent. You and Alex Rodriguez, the deal with Alex Rodriguez and Jason Kelly. Man, you guys got a good one coming up.
Their sound.
Oh, their
We have
sound.
sound. You can hear a preview because
Here we go.
basketball legend Magic Johnson broke down how he was able to make the transition from being a legendary basketball player to a successful businessman. And Jason Kelly and Alex Rodriguez sat down with him on the latest episode of The Deal.
The hardest thing I thought I was going to do was play against Larry Bird and Michael Jordan. The hardest thing was to go before the board and then go into a movie theater packed with good shareholders and try to convince them this is a great move for Starbucks. And sure enough, I was able to do that, and they all signed off. and I became the first person to ever own Starbucks outside of Starbucks. We built 125 in 40 different markets across America. They all did extremely well, and that really gave me, first of all, the stamp of approval. It gave me the track record that I needed of success so I can move on to something else.
That was basketball legend Magic Johnson speaking with Jason Kelly and Alex Rodriguez for their next episode of The Deal. Now, he's so famous, even I know who he is. I don't have to stretch far now for this conversation. So what else do you guys talk about?
You know, Magic is one of one, as you guys know. He was one of one on the court. And interestingly enough, he really has become one of one in the business world. He really set the template. You know, one of the things we talked about in a very personal way is that there is no Alex Rodriguez as we know him today without Magic Johnson. And Alex tells this amazing story in the episode about how he reached out to Magic, you know, sort of through some intermediaries, you know, wanted half an hour turned into 3 hours. And Magic very generously just said, here's the playbook. Here's what you need to do to make, to your exact point, Alex, the transition to being a successful businessman. And, you know, you fast forward, Alex is an owner of an NBA and WNBA teams. He has a huge real estate portfolio. He's, you know, got this diverse set of investments across venture capital and tech and all of these things. And Magic really taught him how to do it.
Wow, that's amazing.
So I've been following Magic, like most people my age, since the beginning. Can you just summarize kind of what he is doing in business these days? He mentioned that example of Starbucks, but he has such a vast array of holdings. What's he focused on?
Yeah, I mean, so really what he's focused on now, Paul, is ownership. Okay. And he has been for a long time, but really ownership in sports. And so, you know, you heard that little clip about the Starbucks deal, and I encourage people to listen to the show because he goes really into how he got to Howard Schultz initially, what the pitch was to Howard Schultz. Then, you know, you heard him talk about presenting to the shareholders. That was a seminal deal for him. What he said to us is the greatest deal he's done to date is actually his recent minority ownership in the Washington Commanders. Yep. He's part of that deal with Josh Harris and Mark Ein, David Blitzer, and others. But, you know, Magic was the guy, and I think Josh Harris, who we've also had on the show, would validate this. You know, Magic really leveled it up. And it's a huge moment to have, you know, a former athlete, and I'm speaking about things that Magic spoke about, a former athlete and a man of color in such a prominent position in, as you know, from following media and sports for so long, Paul. Sorry, Alex. No problem. And, you know, the NFL is the juggernaut. Yep. Like that is the holy grail in terms of, you know, owning a sports franchise.
Wow. So what was hard? Did you talk about like what it was hard to make that transition? Like he clearly obviously came with brand recognition, but.
So yes, it was. I think when you're an athlete, sometimes it's hard to be taken seriously.
Exactly. Yeah.
He definitely faced that. He faced questions even as he was trying to do the Starbucks deal around, because his whole pitch was, you need to bring Starbucks into the urban core. And, you know, a lot of people at Starbucks are like, we're good with the burbs, bro. You know, and he was like, no. I have the proof from Magic Johnson Theaters, which he had created early on. That's right. This is a market. It's going to explode in the best possible way in terms of demand. And nobody's there. You need to be there. And it turned out to be huge. How
long did it take for him to convince them?
About a year. And it starts literally with him meeting Howard Schultz after a game. He walks across the court when the Lakers are playing the then Seattle Supersonics and basically starts to make the pitch. The other really difficult thing he talked about was making the transition from investing his own money to investing other people's money. And he goes to CalPERS and makes the pitch and essentially says, I know how to do this. Like, I know how to invest in these markets that you want and need access to. And he said he went up and back and up and back from LA to Sacramento over and over again until he finally got the money. He got a little bit, that turned into a lot. And, you know, you guys know how this works. Guess what? They gave him more and he kept investing. So it's an amazing story.
I'm a Wall Street guy, so I got to ask this question. What's the estimate of his net worth?
He's somewhere between $1 and $1.5 billion at this point. I mean, so he's in very rare air in terms of former athletes, current and former athletes who have, you know, had that be after their name. that number is growing really fast. You guys talk in the show, we talk all the time on our show about the value of sports franchises, how much they're going up. You know, you think about there are going to be some transactions coming in the NFL in the next few months that are going to make $6.05 billion for the Commanders look like an absolute steal. And so, you know, the current value of that deal alone has probably gone up 50 to maybe even 100% for him already.
But what's so amazing about what he did with Starbucks is that had nothing to do with sports.
Nope.
Like that's what was so fascinating. Because then, of course, you're like, oh, okay, that's still in your wheelhouse. It's still in your zeitgeist. But that was totally different. And that's what makes it so amazing.
Totally. And what's interesting is that he, in a sort of strange way, he had to go prove himself there before he came back to sports as an owner. And that's exactly what A-Rod did. And it was interesting. In the interview, you'll hear it. I asked him what his greatest deal was. He said the Commanders. And then he tells a great story about how he got involved in that. And then Alex follows up and says, what was your best non-sports deal? And so, and that's when he talked about Starbucks, because that's what's on Alex's mind. And that's, I mean, it's part of what makes the show so interesting, I think, I dare say, is that, you know, Alex is coming from this perspective. He can compare notes with former athletes, but what he really wants to learn is business. And so when he's sitting with a Josh Harris or a David Blitzer or a Magic Johnson, he wants the business playbook. He knows how to be successful on the field.
That's why he's sticking with Jason, man. That's why it's a good team. Not that you're not awesome in sports, but, you know.
All right, so Jason, thank you very much. We appreciate it. So check that out. Jason, give us your pitch on that real quick.
Yeah, I mean, so the deal, it's a weekly show, and you're going to go somewhere else.
Yeah, we're going to go somewhere else. All right, Jason, thanks so much. Right now, let's go down to Washington, D.C. President Trump is making some comments.
He's the man. I get nervous when I talk to him. He's doing a great job. Nuclear, I say, okay, you can take 2 weeks for that approval. It used to take 20 years, then they wouldn't approve it. Now I say, Lee, nuclear, I'll give you 2 weeks for an approval. A coal-fired plant, you only get a couple of days. And oil and gas will give you a week, okay? Something like that. But he's doing it so fast, and we have so many plants being built right now. It's so beautiful to see. And one of the reasons they're coming here is because they have to produce tremendous, especially the AI, they have to produce beyond believable amounts of electricity. And they're doing, I said to them, I think this was more or less my idea. They didn't have the idea only because they didn't think a thing like this was possible. I said, as you build your plant, you're going to become a utility. And you're going to build a separate plant right alongside of it. You're going to build it. You're going to build a plant that produces electricity. And you'll produce it through natural gas, coal, nuclear. We don't want to produce it through wind because we don't feel like ruining 50 miles of beautiful plains and beautiful vistas. And but we want to produce it. You know, interestingly, China's opening up a coal plant every single week. But now I'm finding out it might be 2 plants every single week. And, you know, usually that's a good gauge. If they're using coal, I guess we're supposed to use coal. And, you know, we went to a coal standard. And not that you have to use coal. You're going to use whatever's best. I want to introduce also Senate Majority Whip John Barrasso, who's a tremendous guy, doctor. Okay. And he is a tremendous guy, tremendously talented doctor. When I have a medical situation for the country, for myself, I haven't used him, but I might have to. Maybe I'll do that. If it's serious enough, I think I'd probably do that. But he's a tremendously talented gentleman who happens to be a senator and one that's very respected. Chairwoman Shelley Moore Capito, and congratulations. I just endorsed your son. Did you know that? I endorsed your son. I endorsed your son, who's running in West Virginia, and he's great. In fact, he's all Trump all the time. I think much more so than you, actually. If you want. You were his largest impediment. No, I'm only kidding. He's all Trump all the time, and he's going to win big, and so congratulate him. Okay, he's really been fantastic. So many people have told me. Thank you. And House Majority Leader Steve Scalise, who's a brave man who went through hell. Steve went through hell. And we have a lot of other people here that I won't be able to because they don't have your name down, and I'm looking, and I see people's names. I'll do a couple of you, but thanks as well to Mark Wayne Mullen, Senator, Mark Wayne. Thank you. Stand up, Mark Wayne. Don't fight him. He's a serious fighter in a lot of ways, and he's a great guy, too. Thank you, Mark Wayne. Deb Fisher. Deb. Thank you, Deb. Good. Pete Ricketts, who's going to do very well in the upcoming election. Thank you. Thank you, Pete. John Husted, who's really moving along in Ohio. John, good luck. You're going to do well. All endorsed people. John Curtis, who's doing terrifically. John, thank you. Good job. They all say excellent. What can I tell you? Good job. And Bernie Moreno, who won a race that was not winnable. They all said it's not winnable. He won in Ohio. They said you can't win that race. It's a waste of time. You're just wasting your time, right, Bernie? Wasn't a waste of time, was it? Huh? And he won by like 5 points, too. Won by a lot. Along with Representatives Kevin Kiley, Vince Fong, Jay Obernolte, Doug Lamaffer, Darrell Issa. Where's Darrell? I haven't seen you in such a long time. Look at you. How good you look, huh? Good when you have those big margins. It's easier. John Joyce, great guy. John, thank you. Thank you, John. Dusty Johnson, Morgan Griffith, Troy Balderson, Troy from a place called Ohio, and he played very cute at one time, but then he got, boy, I'll tell you, he's become a good politician. Where is Troy now? Where I haven't seen him used for years. I endorsed you early when he was early and younger, but you still look young, and you've done fantastically good. Good work, really good work. Claudia Tenney, New York. Claudia, thank you, Claudia. John James, I don't know. You know, he's running for governor, but I'm not sure I'm happy about that, John. Do we have somebody good to take your seat? Because otherwise we're not letting him run for governor. We can't. You have somebody good, right? Okay, as long as you like him, they'll win. Tracy Mann, Tracy, thank you very much. Thank you very much. Appreciate it. Michael Baumgartner. Michael. Thank you, Michael. Good job. David Rouser. Thank you. Glenn Grothman. Hi, Glenn. Thank you very much, Glenn. Brett Guthrie. Brett. Thank you, Brett. Rudy Yackham. Thank you. Thank you, Rudy. And I want to thank you all. And there's some additional people in the room, but we have to get back to this. Is like so big. This is a big one. Under the previous administration, I could go point after point, everything they did, open borders, men playing in women's sports, transgender for everybody, let's go transgender. What a group of people you had over there. They must have hated our country. Under the previous administration, the federal government gave left-wing radicals in California dictatorial powers to control the future of the entire car industry all over the country, all over the world, actually. Because they have to build a car. They can't build 19 different cars called the same thing. And really, it was all over the world what was happening. They approved Governor Gavin Newsom's ridiculous plan to impose a 100% ban on all new gas-powered cars within a very short period of time. Think of this. You couldn't buy any other car except an electric-powered car. And in California, they have blackouts and brownouts. They don't have enough electricity right now to do the job. And countrywide, you'd have to spend $4 trillion to build the firing plants, to be able to, they call them a lot of things, charging plants, firing plants. $4 trillion you'd have to spend. In the Midwest, they built 9 of them. 9 individual, it's like a pump. It's just like a pump, except instead of gas, electricity comes out. They built 8 of them. $9 billion they spent for 8. 8 little hoses, $9 billion. Now, I'm sure they could have done it for about, 1/1000th of that, but even if they did, it's unaffordable. They approved Governor Gavin's ridiculous. It's so ridiculous. By the way, you would, if I didn't bring the military in.
All right, that was President Trump in Washington, D.C., in the White House, making some comments there. Right now, we're going to reset here, and we'll go to Mr. John Tucker and get a Bloomberg Business Flash. John, what do you have for us?
All right, the major stock averages right now still mixed. S&P 500 10 points higher. That's up 0.2%. The Dow 38 points lower. NASDAQ 100 up 41 points. That's a rise of 0.2%. Boeing shares worst performing stock in the S&P 500 after the Air India crash. Those shares down right now just over 5%. Best performer, Oracle. Oracle shares reaching a record high. The company projecting a 70% gain in cloud infrastructure sales this fiscal year, driven by its focus on AI work and cloud computing. More tame inflation data today, but Adam Posen at the Peterson Institute, he's not expecting anything from the Federal Reserve anytime soon.
We're not falling off a cliff in terms of unemployment or growth. So anyway, forecast, they're going to sit tight, and they're going to sit tight at least through September, probably till fourth quarter.
And we do have the long bond auction. That is at 1 o'clock, looking for signs of take-up or maybe investors skipping that today. What are the insiders doing? Corporate executives selling shares at the fastest rate since November, with 778 selling their shares, 200 buying through June 11th. Some of the latest data there. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right. Thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. Just an update here. President Trump is speaking at the White House. He will at some point be answering some questions in a wide-ranging speech. He's talking about EVs, chargers being too expensive, changing the laws potentially in California about cars. He's also touting coal, natural gas, as well as nuclear energy. On the flip side, you are seeing oil, which he says he didn't like, on the upswing here. You're looking at WTI up 68. You're looking at Brent almost at 70, at 69. The reason, though, is pretty scary, and that is heightened tensions within the Middle East. A recent report from ABC saying that Israel is mulling military action against Iran in a couple days. Mike McGlone is Bloomberg Intelligence senior commodity strategist, and he joins us now. When we take a look at sort of the worst case scenario, it would be the closure of the Strait of Hormuz, where you have, like a third or more of oil flows through. What would be the price impact of something like that?
Well, you've seen the most widely used numbers around $100 a barrel, but you mentioned the worst case scenario. It's never happened. The Strait of Hormuz has never been closed. So I love the threats, but even if Iran does try to close it, it's basically suicidal. It would cease to exist. And if we did have that kind of bump, it would be a global recessionary trajectory. The world's already seen pretty significant downtrends in GDP and demand pull growth, and most notably for crude oil demand, and supply increasing. So if that happened, it would just incentivize that tilt towards a global recession, and then crude oil eventually getting much cheaper later. So right now, it's just a classic bear market rally, and it found an excuse. All markets, bear markets, find an excuse. It's a question of how it goes. So I'll end with this. The 200-day moving average of WTI crude oil is around $70 a barrel, and it's still heading lower, and we're below that. It's quite the bear market.
So, Mike, as we think about just supply here, what I guess is different now versus 10 years ago, 15, 20 years ago, as we think about supply constraints, perhaps in the Middle East, is the U.S. is now a net exporter. So that changes the calculus a little bit, doesn't it?
That's been the main pressure factor on commodities overall, most notably crude oil, for about 15 years, Paul. You nailed it. It's that excess of supply coming out of the U.S., declining demand, the absolute need to export, and you can look at OPEC. Their part of global production is less than a third now. 20 years ago, it was about 40%. So they're declining, becoming less relevant. And my EV is 11 years old. So it's significantly a downward trend. But it's not just crude oil. I mean, I'm a commodity person. You see it in iron ore, in the grains and corns and soybean and wheat. And then you look at that bond yield in China, it's heading lower, about 1.7%. This is a clear global deflationary trajectory for a lot of commodities, with one exception, copper for now, most notably gold. But crude oil is not alone. Particularly, I have to mention corn because we get almost 13% of our unleaded gas in this country now from corn, from ethanol.
Yeah, and I should point out too that if we take a look at corn, there's been issues and reports about farmers being worried about labor, et cetera, and that you had President Trump saying like, "Oh, we're going to look into it. We're thinking about it. Things will be fixed." What does that mean? And are you hearing about worker issues when it comes to farmers?
Not in the Corn Belt so much, Alex. Maybe in some of the fruits and vegetables markets, somewhat maybe in California. But that's the key thing about the Corn Belt is we've used maybe such a fraction of people now. The key theme I get out there every time is the technology is moving so fast. Even autonomous tractors now, where we just don't need people as much anymore. So if that's a problem, it gets incentivized more this tilt towards technology replacing production and actually increasing supply. So the thing is about the grains, it's global and it's on the back of major supply out of Brazil. And why is that happening? Because prices spiked at the 2022 peak and they're still heading low. We still have that overhang of supply, and that's still the case in things like crude oil.
Hey, Mike, I've been a little remiss here because I've been focusing on gold, and granted, it is up 29% year to date, but spot silver's up 25%. That's a nice little move there.
It's just catching up, but remember, silver's known as the devil's metal for a reason because
the devil's metal.
I've never heard that say
right.
the devil's metal.
Yeah, the devil's metal. It's oftentimes moved, and people who trade it like me, I used to have hair. Its volatility is double that of gold, and right now it's just catching up. So if gold's up about 30% on an annual basis, silver on a volatility weighted basis for a risk adjustment should be up about 60%. But the fact is, it's just catching up. It's broke above a pretty good resistance, about $35 an ounce. I think it's getting to 40. It's a matter of time. But most of the metals, including platinum, silver, and a little bit of palladium, are just catching up to gold because they're so cheap relative to beta. And beta in precious metals is gold.
All right, Mike McGlone, thank you so much. I remember years ago, hey, Mike, what's your commodities call? Buy gold and sell everything else. But that was an easy trade, and I blew that again. Missed that easy trade. Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence, calling in via that Zoom thing from his headquarters in Miami, Florida. So we saw the president making some comments. Again, if he takes any Q&A, we'll try to dip into that. Otherwise, we're just looking at these markets here, the S&P. Not a lot of direction here. You know, it's kind of what we've seen most of the morning here. The Dow's up 7 points. Excuse me, let's start again. The S&P's up 7 points. The Dow is down about 60. And NASDAQ up 11 points. So a lot of red and green on the screen. What is moving our yields? They continue to come down here. We got the 10-year yield down about 5 basis points. That's called 4.37%. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Thursday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. So June is Pride Month. So over the next couple weeks, we're going to highlight segments on topics related to equality. And today we're speaking with Laura Mowdy, a CEO and co-founder of Bobby. Now, Bobby is the only mom-founded and led pediatric nutrition company in the U.S. and the third largest fully integrated infant formula manufacturer in the country. Laura, we remember speaking to you over the pandemic when there were shortages of things like infant formula. What is first and foremost on your radar right now, like the biggest struggle that you have right now?
Lovely to chat with you guys again. Hello. The biggest struggle I think right now is, you all remember the infant formula shortage in 2022. There has been a very concentrated effort to make sure that we diversify and break up the concentrated market. And the only way to do that is to invest in more domestic manufacturing. I think the last time I spoke to you guys, I mentioned that we have co-created a bill that really allows and incentivizes more domestic manufacturing for infant formula. And right now, that is the number one focus.
The Infant Formula Made in America Act of 2025. Talk to us about that.
So, again, like I said, this is on the back of the shortage. And what we recognized was nothing will change if nothing changes when it comes to the footprint of infant formula manufacturing. So this bill incentivizes new players to up-level and to break ground and build infant formula manufacturing here in the U.S.
How hard is it and how expensive is it?
It's very expensive. It's very expensive, but maybe nothing like other investments that are being made right now in manufacturing. It takes around 3 years, and it could be anywhere from $60 to $150 million to get a basic footprint in place, and sometimes even more. And given how long it takes to be able to get more manufacturing up and running, this is why we can't wait for another crisis. The investments have to happen now. And what this bill is, and it's finally gotten bipartisan support. I don't actually believe there's anything more bipartisan than investing in how our next generation is fed and building the resiliency of this market. I am just hoping that this bill gets introduced as something that gets passed sooner rather than later.
Just remind us, Laura, where do we source most of our infant formula these days?
Yeah. Look, most of it is sourced domestically. But what we did do is that we allowed some international formulas, some foreign formulas, to come into the country on the back of the shortage. We essentially have imported our way out of a crisis, and that is still happening. So over the last few years, we've gone from less than 1% of infant formula being made and sourced in the US to now over 10% of American babies are relying on formula coming in from overseas. And the big push that I'm trying to have is high quality formula should be able to be sourced and made here in America for American babies.
Yes, but because it's expensive to say build the plants here, etc., can we get that at a price point where you can stay in business and make money, but also it can be available to all different types of families?
The push I would have on that is it takes more than the private sector to be able to make that happen. And we're talking about infant formula. This is where we need something like this bill to be put in place to help bring down the costs. Because what they are is it's a production tax credit, which means that for every production run we make, there's tax credits given back so that we can bring those costs down. And it's really important that we make those investments today. Otherwise, what we're doing is we're waving the white flag as a country and saying, America's unable to do it. So we're going to allow other countries to feed our babies. Fast forward in 7-10 years, we could be in a much bigger crisis if we're relying on other countries to feed our babies.
Laura, just give us the latest updates for your company, Bobby.
Well, we've been pushing a lot of innovation. I think the one thing we can't lose sight of is that the quality of infant formula deserves its utmost attention on an ongoing basis. So we recently launched the first USDA organic whole milk infant formula made at our facility in Ohio. And we're going to keep watching the way science evolves. And when the scientists say that there's new updates that need to happen, we're going to be making those changes to our product. And my entire focus as a mother is to keep innovating and up-leveling the nutritional requirements of formula for American babies.
Do you have a lot of competition right now?
There is competition. There is competition, and it's healthy competition because we need choice. And this is probably one of the only products in the market that doesn't have enough options. It doesn't have enough choice. And I believe I speak for many parents that when you walk down the formula aisle of a retailer today, it can often be an empty, sad, and lonely aisle. But you're feeding your babies, and it shouldn't be. So I believe and I hope that with something like the domestic manufacturing bill, it actually introduces more competition. We need to see more Bobbies on shelf, and that competition will force all of us to up-level the standards we need.
All right, Laura, thanks a lot. Really appreciate it. Good luck. Laura Mowdy, CEO and co-founder of Bobby, an infant formula maker here in the United States. All right, for our listeners in the U.S., here is a reminder. You can listen to us via satellite radio on SiriusXM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM, channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now. As you look at the NASDAQ, up just 1/10 of 1%, the S&P up 0.2%, the Dow is flat. Volume is a little bit mixed. You are continuing to see, though, a bid within the bond market as yields continue to trend lower, down 5 basis points on that 2-year. Good luck trading, guys. We'll see you tomorrow. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. There's breaking news from the White House. Another federal showdown with California looms as President Trump is signing a resolution blocking the state's move to phase out the sale of gasoline-powered cars.
We officially rescue the U.S. auto industry from destruction by terminating the California electric vehicle mandate once and for all.
That plan had been adopted by 11 other states. California plans to go to courts. A federal judge today hears the state's challenge to the president's deployment of federal troops to L.A. to deal with protests over ICE raids. On Capitol Hill, Minnesota Governor Tim Walz and other Democrats are before a House committee defending sanctuary cities.
Minnesotans are angry with what they've seen happen to their neighbors. They're angry that the federal government has been snatching people up, putting them in prison, and deporting them without a shred of due process.
Now to New York and the Harvey Weinstein sex crimes retrial. CBS's Michael Wallace says a mistrial on the last charge was declared.
The jury was stuck on that third-degree rape charge after delivering a partial verdict yesterday. They convicted the former movie mogul of one of the top charges but acquitted him of the other. The judge declared the mistrial after the jury foreperson said he would not return to the jury room to deliberate because he felt bullied by another juror. The verdicts announced yesterday will stand.
Investigators are at work in India after the crash of a Boeing 787 jetliner that was bound for London. CBS's Chanel Call.
The Air India plane we know took off at about 1:38 p.m. local time, and it went down just 8 minutes after takeoff in the western Indian city of Ahmedabad. There were plumes of black smoke coming from the wreckage in the moments after that crash. The plane we know was carrying 242 passengers and crew on board, and at last check, emergency crews on the scene said they'd recovered 204 bodies from the crash site. CBS News also confirming the tail of the plane landed on a hospital and that several homes were destroyed.
At least 4 people dead in San Antonio. Dozens of water rescues made all over that city as heavy rain flooded highways and left people stranded. A new Forbes Global 2000 list of the top companies that are shaping markets is out. Forbes staff writer Hank Tucker.
The top 5 is JP Morgan, then Berkshire Hathaway, then China's biggest bank, actually the world's biggest bank by assets, the Industrial and Commercial Bank of China. Then at number 4, there's Saudi Aramco, the Saudi Arabian oil company, and then Amazon's number 5.
And checking Wall Street, the Dow's up 12 points. NASDAQ and S&P are trading higher. This is CBS News. A menacing creature may get close to a popular East Coast vacation spot.
Global nonprofit O-Search reports picking up a signal from the dorsal fin of the biggest great white shark researchers have ever recorded off Pamlico Sound in North Carolina. They say 30-year-old-ish contender, who measures 14 feet and weighs more than 1,600 pounds, is likely making a stopover for food to build his energy reserves for the 1,000 or so summer migration to the northeastern U.S. or Atlantic Canada. Deborah Rodriguez, CBS News.
7 families have filed suit challenging Arkansas's upcoming requirements that public school classrooms display the 10 Commandments. Betsy Jocham, the last surviving member of the 1940s Women's Baseball League that inspired the film A League of Their Own, has died. She was 104. I'm Steve Kathan, CBS News.
This is Balance of Power, live from Washington, D.C.
Evacuations begin in Iraq as reports indicate Israel may be about to attack Iran. Welcome to the Thursday edition as the U.S. moves personnel out of the way in key spots throughout the Middle East for fear of possible retaliation. We're going to have the latest on this precarious moment here ahead of more talk set for the weekend with Natasha Hall at the Center for Strategic and International Studies. Republicans wrangling over reconciliation with a big meeting today between the leadership and the White House. We'll have the latest from Bloomberg News as we also track the latest on the investigation now into this terrible Air India crash. Analysis today from our panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. And so we wind up the band again today. Little Friday with Charlie Pellet and his update on Wall Street in New York. Hey, Charlie.
And indeed, good day, Joe Matthew from New York. We have got the Dow trading lower. Dow Jones Industrial Average right now down 36, down 0.1%. The S&P is advancing by 9 points, up by about 0.2% right now. The Nasdaq Composite Index higher by 25, up 0.1%. Stocks higher as more evidence of cooling inflation extended a week-long drop in bond yields. The 10-year right now 4.36%, the 2-year 3.90%. Gold up $32 the ounce, now up by 1%. Spot gold at $33.87 the ounce. West Texas Intermediate crude oil just about flat on the day now, $68.20 for a barrel of WTI. Bitcoin now lower by 1.4% at $107,390 on a Bitcoin. The 30-year Treasury auction set to take place at 1 o'clock Wall Street time. Investors watching closely for signs of demand amid concerns over spiraling deficits and the impact of President Trump's tax bill. New data this morning on producer prices. PPI up 0.1% in May, indicating muted inflation across the board and no signs of price shocks from tariffs. Richard Clarida is a global economic advisor to PIMCO, also a former vice chair of the Federal Reserve. And on surveillance this morning, he talked about tariffs and the economic backdrop.
We're not seeing in the data that U.S. companies are using the tariffs as a reason or excuse to raise prices preemptively. We may see that once tariffs go into effect more broadly. But yeah, so far, I think you'd have to acknowledge the U.S. economy is holding up quite well.
Former Fed Vice Chair Richard Clarida interviewed this morning on surveillance. Keeping an eye on Boeing shares. Boeing, a member of the Dow, now lower by 5%. That Boeing 787 Dreamliner operated by Air India crashed shortly after taking off this morning, killing all 242 people on board. The worst accident involving the U.S. playmaker's most advanced twin-aisle aircraft. Again, recapping, S&P right now up 10, gain there of 0.2%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Charlie Pellet here on the Thursday edition of Balance of Power on Bloomberg Radio, satellite radio, channel 121, and on YouTube, where you can find us right now. Search Bloomberg Business News Live as you can watch and listen to the program. Also available on Bloomberg Originals. We're going to have more on this terrible news of the Air India crash a little bit later on this hour with Shelley Banjo as Charlie follows the Wall Street side of this whole story. We've got a couple of plates that we're spinning today, as always, so welcome. It's great to have you aboard. With our eyes on the White House, President Trump has been speaking for a little while right now in an effort to actually, he's got some business at hand. He's now talking about tariffs and a few other matters, but in fact was signing a couple of resolutions. White House called them bills, resolutions that target California's EV incentives. They repeal the state-level mandates that have been in place now, supported by the Biden administration, GM, Toyota, among those lobbying against California's rules. If he makes some news here on the story that we're about to tackle, we'll bring you to the White House, because this is a precarious moment ahead of more talks that are scheduled for this weekend. May not be an accident, considering the timing with what we're seeing here, but a stark headline at the top of the New York Times: Israel appears ready to attack Iran. Knowing that this has been in the air for some time, and we've talked about it certainly quite a bit since Benjamin Netanyahu made his most recent visit to the White House, a visit in which President Trump reportedly waved him off, and it might be a little bit different this time with what we're hearing. Israel appears to be preparing to launch the attack soon, according to officials in the U.S. and Europe, obviously at a very sensitive time here in the Middle East. But as I mentioned, American and Iranian negotiators are supposed to get back to the table here on Sunday for another round of talks. And that's where we begin our conversation with Natasha Hall. I'm delighted to say she could join us today at this moment. Non-resident Senior Associate, Geopolitics, Foreign Policy Department at CSIS, the Center for Strategic and International Studies. Natasha, it's great to see you. How much of this do we think is bluster ahead of the next round of talks, or is this a real attack that could be in the offing?
Thank you so much for having me. It's a very tense moment, I have to say. And I think that's really the question, whether or not this is a negotiating tactic. As you mentioned, Witkoff is heading to Oman on Sunday for the 6th round of negotiations with Iranian officials, both direct and indirect. And also tomorrow on Friday, Witkoff will meet with Israeli officials so that Israeli officials can talk about their concerns with regards to the Iranian nuclear program. And one would think it's also about a potential attack. Now, whether or not that attack actually takes place, I think remains to be seen. Because for sure, Trump does not want a never-ending war. The issue is that Netanyahu does. It protects him politically. And surely there are fears in Israel of any kind of Iranian nuclear activity. But the question again, and I think I mentioned this the last time I was on the program, is on enrichment. Israel does not want Iran to be able to enrich, and Iran sees it as an issue of sovereignty that they can.
Mm-hmm. Well, so we were just looking at images of Steve Witkoff, who is still planning to attend the negotiations. He certainly knows this, Natasha. Is he capable of walking Iran back from that line, or have we in fact found ourselves at a standoff here?
Well, what's interesting is just yesterday he said that Iran can't enrich uranium. And the U.S. has been back and forth on this, including President Trump. It's unclear if they understand the details of uranium enrichment and a nuclear program for Iran. And I suspect that they're getting a lot of their advice from Israel. Now, the big question is if they are willing to go along with an Israeli attack. Because certainly a coordinated U.S.-Israeli attack on Iranian nuclear facilities would be more profound than Israel going it alone, so to speak. But they would have to at least get the green light. Obviously, Witkoff knows all of this. So potentially we're seeing the evacuation of personnel. We're seeing a lot of this bluster as a means to sort of up the ante prior to these negotiations to really push Iran to the edge. It's still totally well accepted.
Seems like a lot of trouble to be moving all these people to just put on a show. But Natasha, we do have and a really important piece of news here that Steve Witkoff will have with him at the table. This is the hook the administration, I guess, could lean on if, in fact, an attack moved forward here. The IAEA declaring Thursday Iran is not complying with nuclear non-proliferation obligations, the first time the UN's watchdog has passed a resolution against the country in 20 years. What did you think when you saw that headline?
Yeah, I thought it was interesting because, again, you said it's unprecedented. It is unprecedented, and it shows that the U.S. is working with the E3 and with the IAEA on really putting the pressure on Iran. to move forward with this. So, I mean, we could be hopeful. But again, last year we saw something like 170 Iranian proxy attacks on U.S. assets in the region. So very, very scary times. I think we'll see a lot of tensions, especially in some of these other countries like Iraq, where there are softer targets as well. But the IAEA can't do much, but it is another negotiating tactic, I think.
Well, you make an interesting point here about U.S. involvement, because it does seem that Israel would need some help based on some of the reporting that we've done here. You consider the use of bunker busters, air defenses, refueling. How far would the U.S. go in taking part here?
I mean, I think that's the million-dollar question. It's unclear if the U.S. would even be public about coordination with Israel. I think most people would agree that they would be green-lighted, and in order to do the attack, it would be quite brazen for Israel to go it alone. But judging by the statements of Witkoff and of Trump in recent days, it looks like they are very publicly giving the green light, which is, again, why they're evacuating personnel. But I would just say one more thing for your listeners. An attack on an Iranian nuclear facility has happened before. But Iran just goes back to enriching uranium at another level and accelerates potentially. So we could see that again. And, quite frankly, we've been talking about rising tensions in the Middle East quite a bit for 2 years, and it's unclear where this ends. But hopefully it will come to some kind of de-escalation by next week, because I think everyone is on the edge of their seats at this moment in the region.
Israel certainly believes it's in the position of power here, right, Natasha? As we've discussed, there are a couple of reasons why we've found ourselves at this moment, and a lot of it has to do with the lack of air defenses right now that Iran has following the most recent back and forth with Israel, but also an emboldened Benjamin Netanyahu following some of the strife that we've seen in the region here. The idea as well that Iran would respond with hundreds of ballistic missiles, as I read in this story in the New York Times, is being laughed at by Israel, because last time they tried that, most of them were knocked down, Natasha. Does Israel not have the moment that it was looking for?
Iran is in a very vulnerable position, as you point out. There was many different Israeli attacks on Iran and Iranian proxies last year that severely degraded Iran, including Hezbollah, which Iran uses to essentially launch attacks onto Israel and neighboring Lebanon. It doesn't really have that as much anymore, and certainly not Iran and Syria. And so Iran is in a very, very vulnerable position. That said, again, Iran doesn't go to war toe-to-toe with the U.S. or Israel. It sort of negotiates itself in the weeds of these various countries like Iraq. And I would have you know that, the 170 attacks also last year, Iranian attacks, very few casualties of U.S. airmen, of U.S. servicemen. And so, I mean, it's weak attacks, but it does, up the ante considerably. And it makes it much, much harder for the U.S. to have a presence in the Middle East as well.
We're out of time, Natasha. If this happens, would it be after Sunday?
I would suspect this would be after Sunday, yes, for sure. I think, again, whether or not this is for real or not, it's certainly a negotiating tactic.
This next round of talk is going to be critically important. Natasha Hall, I'm so glad that you could join us from the Center for Strategic and International Studies, a real voice of expertise that we can bring you here on Balance of Power. I'm Joe Matthew in Washington. We've got a lot more to talk about. Laura Davidson's going to join us coming up next as we turn our attention to reconciliation. And Bloomberg's Tyler Kendall will pay a visit to us here. We're live from the nation's capital on the Thursday edition on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow just turning negative right now in the red. Little change, perhaps the key takeaway at this hour. Looking at the Dow down by half a point. S&P 500 index, though, off session highs, up 15 now, up by about 0.3%. The Nasdaq Composite Index up 47, up 0.2%. The Nasdaq 100 Index doing a little bit better, up now by 0.3%. But a down day for small cap shares. We have got the Dow lower now by 0.5%. Your 10-year, 4.36%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. I'm Joe Matthew in Washington. Thank you for being with us on Balance of Power. We're going to steer you right back to the White House, as we told you. President Trump has just stepped up to the podium to take some questions after signing a couple of resolutions on California EV incentives. Let's get to live Q&A here from the White House on Bloomberg.
I told you the Auto Workers Union, we got tremendous votes, but they like me today even better than they did on Election Day on November 5th. Because they see the results now. They're all happening. And yeah, and they have plants moving in, Brian. A lot of plants are moving in. Thank you very much for that question. Yeah.
Trying to kill the auto industry.
Oh, he was killing the auto industry. I don't think he knew it. I think he's a guy who, he's just got a faulty thought process. You look at that train, the train is the most, I've seen people, stupid people with cost overruns for years. I've watched where something would cost twice as much or 3 times. But this thing is costing 20 times more. It's the most incredible disaster I've ever seen. That's one. The cars are just as bad. Everything's bad. And now you have this situation. So his own sheriff, who's a good man, by the way, said 2 days ago or 3 days ago that we could not have done this without the military. They were going to take over this whole, they couldn't have done it. Now today they got him to change his tune. He said, oh, I think we could have handled it. You know, it's so sad. He was so honest. I was using his quote all over the place that they got him to change. But he knows. Los Angeles would be right now burning to the ground just like the houses burned to the ground. It's so sad what's going on in Los Angeles. Think of it. They had a fire that should have never had because they should have listened to me in the water. Eventually, we broke in and we had the water come down from the Pacific Northwest. I could show you pictures now with the half pipes, the big half pipes coming all the way down California. Water, so much water. They don't have any droughts. They don't have any. They have so much water. They sent it all out to the Pacific Ocean for 20 years. So ridiculous. And we got them to take it now. But what they do and what they're doing, this is a big problem. And what they really want to do is keep criminals because they're trying to protect criminals. Sanctuary cities are a disaster in this country. And most of the voters don't want them. Politicians like them for whatever reason, but I think the politicians are wrong. That's why we won in such a convincing fashion. We won all 7 swing states. We won by millions of votes. We won 2,750 districts as opposed to 505. That's why when you look at the map, it's almost all red. It's got 2 little blue stripes on each side of it. It's almost all red. But now you have to, I always got along with Gavin. I like Gavin. I've liked him, always. He said I never called him. You know, they asked him a question on Fox, I guess. I never spoke to him. He doesn't remember the call. He doesn't remember. I never spoke. And then I produced a phone call. I had it. It took me about 2 minutes. I said, well, here's the call. It lasted 16 minutes and 4 seconds. And it was at 12:30 in the evening. I actually made a call, didn't pick up. I called him a second time, and he picked up. And I told him, I said, you have to get your ass in gear because you're going to have a problem there. And he would have. If we didn't bring the military in, he would have had, you would have right now something. And I went through it because I follow the rules 100%. And I watched in Minnesota where you have the man who ran for vice president of the United States. Fortunately, he was a disaster. But he wouldn't call in the National Guard. And I eventually called in the National Guard, but it was seven days late. I said, I'll never do that again. I'm never going to, if I see problems brewing, if they're not going to do the problem, I'm not going to wait 2 weeks. Because that city, Minneapolis, burned down. If you remember the CNN anchor, He was standing there saying, yes, this is a peaceful rally. And behind him, the entire city was on fire. Looked like World War II. And I appreciate the question. Please.
Mr. President, thank you very much for taking
Thank you.
Two questions, if I may, sir. First, the terrible, horrific plane crash in India today. I'm sure you saw the images on TV. Your reaction to that first, and will you speak to Prime Minister Modi?
The plane crash was terrible. I've already told them anything we can do. It's a big country, a strong country. They'll handle it, I'm sure. But I let them know that anything we can do, we'll be over there immediately. But it was a horrific crash. It looks like most are gone. They actually maybe have a couple survivors, which is just heard. But that was a horrible crash. Nobody knows. Nobody has any idea what it might be. I gave him a couple of pointers. I said, maybe you look at this or that. You know, we saw the plane. It looked like it was flying pretty well. It didn't look like there was an explosion. It just looked like the engines maybe lost power. But boy, that is a terrible crash. It's one of the worst in aviation history. Yeah, second.
How confident are you, sir, that conflict with Iran can be avoided?
Well, I'd love to avoid the conflict. Iran's going to have to negotiate a little bit tougher, meaning they're going to have to give us some things that they're not willing to give us right now. I'm the last person. I've kept us out of wars. We defeated ISIS completely, 100%, and I haven't had it's peace through strength. I believe in peace through strength. We're the greatest military in the world. I rebuilt the military, as you remember, for 4 years. I rebuilt the military, and then we gave a chunk of it away, but it was still peanuts. It was a lot, but it was peanuts compared to what we rebuilt. Gave it to Afghanistan, one of the most embarrassing moments in the history of our country with the whole withdrawal, the way they withdrew. Was very embarrassing, but we rebuilt the military. We have the greatest, strongest military. We defeated ISIS. We defeated ISIS. We defeated ISIS in 4 weeks. It was told to be 5 years. It was going to take 5 years, anywhere from 4 to 5 years. We did it in 4 weeks, with, by the way, headed by the general who's now the head of the Joint Chiefs of Staff. That's why he's there. He said it would take 4 weeks, and he did it in 4 weeks. He did actually a little bit faster. So we have a great country, and we're going to keep it that way. And when it comes to Los Angeles or other cities, if we see other cities are gearing up, and these people are agitators, they're paid, they're professionals, they're insurrectionists, they're troublemakers, they're all of those things. But I believe they're paid, and we're going to find out through Pam Bondi and her great staff, her great people at Justice, who they are. And Mike, I think you're doing some investigations in that in Congress, but we're going to find out who they are, because they're really, I think what they're doing is unbelievably illegal. Just one thing, so they took the bricks away from people. They're walking in with satchels of bricks. Now, why do you have bricks? You have bricks because you throw bricks. They're very potent. If they hit you, they kill you. And they took them away. The military took them away. They saw him. What the hell is this? The guy could hardly carry me. Many bricks. He's a strong guy. Couldn't carry him. And they saw that, and they took him away. Then they found others with bricks. But they're ingenious. They also brought hammers along, very heavy hammers. And I saw them pounding the curb and pounding the sidewalk. And it was like a military operation. This guy's pounding strong, boom, big shots. And it was breaking up granite, the granite curbs. And the granite was breaking up, and the concrete was breaking up. And there was lines of people standing there, and they're handing him. And then he stopped handing them. They just went down and picked him up. It was so professional. I said, that's a professional organization. This is not like people at random. This guy's breaking up because they couldn't use the bricks. So who would think of this even? Did a lot of damage. A lot of curbs are broken. A lot of sidewalks broken. But I never saw that before. That's one I haven't seen. I thought I saw it all. And they have it on tape. And with that, people get killed. You know, they go to the bridges and they drop the concrete off the top of the bridge with a car coming along at 70 miles an hour, and the person dies. We had a lot of car problems. You saw that. They were all over the road. They were littered all over the road, where the cars got stopped by concrete going through the front windshield. These are bad people. If we didn't go, Los Angeles right now would be on fire. It would be a disaster. And we stopped it. And last night was very good. Nobody showed up. You know why they didn't show up? Because we were there. If it was just the police, because the police are great. I know those police, they're great, but they're told not to do anything. They're not allowed to act. Thank you.
Mr. President, how imminent is an Israeli strike on Iran?
Well, I don't want to say imminent, but it looks like it's something that could very well happen. Look, it's very simple, not complicated. Iran cannot have a nuclear weapon. Other than that, I want them to be successful. I want them to be tremendous. We'll help them be successful. We'll trade with them. We'll do whatever is necessary. You know, I stopped a war between India and Pakistan. And I stopped it with trade. I don't think I've ever seen a story written about it, but it was pretty cool. They were getting ready. Pakistan was their turn to hit, and eventually they're going to go nuclear. And I stopped it. I called each. I respect each leader greatly. I know them. And I spoke to them, and I talked about trade. I said, but you're not trading with us if you're going to go to war, if you're going to start throwing nuclear weapons around. And I said it to both of them, and they were both unbelievable, actually. They understood it exactly. They stopped. I stopped that war with phone calls and trade. And India's here right now negotiating a trade deal, and Pakistan's coming, I think, next week. And I'm very proud of that. Nobody died. Nobody, the nuclear weapons, they each have very severe, very substantial numbers of nuclear weapons. And I think we should get some credit for that. You know, the whole Republican Party should, because that's their mindset. Please.
Mr. President.
Yes, ma'am. What?
On your China deal, Mr. President, are you still concerned about the national security issues with Chinese students studying in the United States?
Look, I've always been in favor of students coming in from other countries. That includes China. And we have 500,000 Chinese students coming in. I've always been in favor of it. Does it mean that you have to watch people? Yeah, you have to watch students, but you have to watch other people also. I've always been strongly in favor of it. I think it's a great thing. It's good for our schools. I think it's good for our country. I'm also in favor of having them stay. I've been in favor of letting them stay. If you get educated for 4 years, you're willing to get educated for 4 years. I like people being able to stay. You know, they have some great students. You have some, these are Republicans clapping, you know, because a lot of Republicans don't like that idea. I happen to like it. I'm a real Republican, believe it or not. But I like the idea. They go 4 years. To me, that's almost like, you know, just buying your way in a very legitimate way. And, you know, you have stories where Apple wants to hire somebody and they can't hire him because he can't stay. He went to a great school. He finished first in his class. They made him a big offer, and everything's done. But he has no idea whether or not he's going to be able to stay. And I'm all for making sure that people like that can go to work for all of our great companies. And you know what they do? They go back to their country, and there are stories that are all over the place. They go back to their company, and they start a company just like they were going to start here. They end up starting it in China or India or someplace else, and now they're among the richest people in the world. They've got thousands and thousands of employees that make it great. This is happening all the time because they're not allowed to stay. And I think we'll probably end up doing something about that, right? I think. Yeah, go ahead. Go ahead. You in the blue, please. Light blue.
Thank you, Mr. President. How close are you to step back on between Ukraine and Russia? We see a very bad escalation. Are you going to leave it in the hands of the Europeans?
I'm very close to the situation. I'm very disappointed in Russia, but I'm disappointed in Ukraine also because I think deals could have been made. And, you know, we're losing 5,000, 6,000 people a week, soldiers mostly, but also people living in towns because they're getting hit by missiles again. How'd you like to live in a building and you think a missile has a good chance of hitting your building during the evening? It's horrible. Must be horrible to live like that. But, I mean, we'll get it, but it's, I'm disappointed that it's not done. We did great with India and Pakistan. We did very good with Israel. I thought, look, October 7th was a disaster. People forget, you know, they like to forget. That was a horrible thing. But, you know, none of these things would have happened if I were president. If I were president, none of it would have happened. You wouldn't have the Israel problem. Iran was broke. They had no money. We had big sanctions on them. Biden immediately let them get rich, $300 billion they have right now. But they had no money for Hamas or Hezbollah. They had no money for anything. It was perfect. We wouldn't have had inflation that was caused by oil, Chris. The oil price went through the roof. It was also caused by their spending, but it was caused more by oil than anything else. The oil went so high, got close to $100 a barrel. And that caused, and that also kept the war going with Putin, because at $100 a barrel, that was a big money-making experience. But now it's down to where it's not so good for them anymore. No, it's very important to get that solved. That's a bloodbath. That's a terrible bloodbath that's going on. Yeah, please, go ahead.
Stopping the war between them. India says that they cannot talk to Pakistan unless Pakistan takes actions against terrorists.
We're going to get those two getting together, you know? I told them, India and Pakistan, they've had a long time rivalry over Kashmir. And I said, I can solve anything. I'll be your arbitrator. I will be your arbitrator. I can solve anything. And I started the first question, how long has it been going on? They said, 2,000 years. I said, oh, that's all right. Maybe I'll take it.
Mr. President.
When I heard 2,000 years, I said, maybe I'll have John Hess solve that problem.
Mr. President, will you punish Israel for striking Iran?
Peter?
Thank you, President Trump. I have two. First, on immigration. What made you change your mind about targeting in California farmers and people in the hotel and leisure business?
Well, we're not targeting. In fact, if you look today, I put out a statement today about farmers. Our farmers are being hurt badly by, you know, they have very good workers. They've worked for them for 20 years. They're not citizens, but they've turned out to be, you know, great. And we're going to have to do something about that. We can't take farmers and take all their people and send them back because they don't have maybe what they're supposed to have, maybe not. And you know what's going to happen and what is happening? They get rid of some of the people because, you know, you go into a farm and you look and people don't, they've been there for 20, 25 years and they've worked great and the owner of the farm loves them and everything else, and then you're supposed to throw them out. And you know what happens? They end up hiring the people, the criminals that have come in, the murderers from prisons and everything else. So we're going to have an order on that pretty soon, I think. We can't do that to our farmers, and leisure too, hotels. We're going to have to use a lot of common sense on that.
And my other question about the Middle East. As the Israelis apparently gear up for some kind of an attack, a possible attack on Iran, are you trying to talk Netanyahu out of doing that, or are you so against Iran having a nuclear weapon that you're okay, he does his thing because it is not an American war?
Yeah, it's a very fair question. Look, I want to have an agreement with Iran. We're fairly close to an agreement. We are fairly close to a pretty good agreement. It's got to be better than pretty good, though, but it's got to be, I'd much prefer an agreement. As long as I think there is an agreement, I don't want them going in because I think I would blow it. Might help it, actually, but it also could blow it. But we've had very good discussions with Iran. Whether or not we get there, I can't tell you, but it'll happen soon. I say this, Peter, very strongly. They can't have, whether it's going in or not going in, they can't have a nuclear weapon. I'd prefer the more friendly path.
And can you tell us
what the Israelis told
you that made you start to evacuate the dependents
of servicemen and women who are stationed in the Middle East?
They didn't tell me anything, but I said, look, there's a chance of massive conflict. We have a lot of American people in this area, and I said, we got to tell them to get out because something could happen soon. And I don't want to be the one that didn't give any warning and missiles are flying into their buildings. It's possible. So I had to do it. You know, I had the choice. Do I do it or not? Doing it has its downside, but it also has its upside. Like, you're going to save a lot of lives if it should happen. Hopefully that doesn't happen. Right? Thank you.
Washington on Saturday for military parade.
It's going to be a great day.
What would you like folks to take away from that day? What would you hope that they would remember? And also, Mr. President,
our country is. and how strong our military is. We have the strongest military in the world. You know, it's very interesting. 3 weeks ago, it was the end of world anniversary, end of World War II. And I called France, and Macron, who's a good man, I said, what are you doing? He goes, we're celebrating World War II, our victory. I said, your victory? Your victory. Tell me about that. And then I called somebody else, and I happened to speak to President Putin at the time. Now, in all fairness to him, he lost 51 million people, and he did fight. Russia fought. Sort of interesting, isn't it? He fought with us in World War II, and everybody hates him. And Germany and Japan, they're fine. You know, someday somebody will explain that, but I like Germany and Japan too. But Putin is a little confused by that, you know. He said, we lost 51 million people, and we were your ally, and now everybody hates Russia, and they love Germany and Japan. I said, let's explain that sometime, okay? But it's a strange world. But I will say this, look, I want them to go away saying how great our country is and how great our military is. And I was making all these calls, and for some reason, I spoke to like 4 different places. Sir, are you celebrating? And I said, you know, we won World War II and World War I, right? We won them. And yet we're the only country that doesn't celebrate. Everybody's celebrating except us. And I said, we should celebrate too.
Several No Kings protests planned across the country on Saturday as well. What are your thoughts on those?
What are they called? No Kings?
No Kings.
I don't feel like a king. I have to go through hell to get stuff approved. A king would say, I'm not going to get this. A king would have never had the California mandate to even be talking to him. He wouldn't have to call up Mike Johnson and Thune and say, fellas, you got to pull this off, and after years, we get it done. No, we're not a king. We're not a king at all. Thank you very much. Go ahead. Yeah, go ahead.
Sir,
go ahead.
Mr. President, sir, you made a lengthy posting today on Truth Social about Senator Rand Paul. Do you expect to see him at the picnic tonight, sir?
I do. I look forward to seeing him, actually. I like him. He's the hardest vote in the history of the U.S. Senate to get. Probably won't get him, but he's a very tough vote. I mean, he's a very tough vote. He's always been a friend of mine. You know, I endorsed him and got him elected. I got him elected twice, but I don't think he understands how great this bill is. This is a great bill. No tax on tips, no tax on, you know, the Social Security payments. It's unbelievable what happens. No tax on overtime. You work overtime, no more tax. It's so, those are big, but they're minor compared to the big things. Taxes reduced. And let's look at the other side. If it doesn't get approved, a 68% tax increase, 68%, including the fact that the Trump tax cuts kick in, but it's a 68% tax increase and many other bad things. I don't even want to, some of them are so bad I don't even want to talk about them. I think it's one of the greatest bills we'll ever pass in this country, and I think that Leader Thune and this gentleman right here, what he's gone through on this with, you know, we started off with a majority of 1. Now I guess we have 7, so it's like easier, but it's really sort of 3. It's 7, but it really equates to 3, right? And we have great support. I mean, I can't tell you, I can't guarantee, but when you have a majority of essentially 3, where you can't lose anything more than 3 votes, and you get it passed, it's pretty amazing. And I think it's going to haunt the Democrats because most of the bill is common sense. It's tax cuts, it's border wall funding, it's military funding properly spent. It's all things that are like common sense. They're all good. There's nothing tricky about it. It's basic stuff. And we don't intend on getting one, think of it, not one Democrat vote in the House. Mike, not one. Maybe somebody will come along. I don't know how they can run for office. So many different things. We're gonna, very important, Medicare and Medicaid are gonna be strengthened, not hurt. You know, they're using fake narrative. Oh, no, they're gonna be strengthened. We're gonna strengthen them. They're gonna destroy them because under their policies, Medicare and Medicaid go away. Social Security under them is gonna be devastated. With us, it's gonna be kept, but much stronger than before. And very interestingly, I saw this and I proved it because for 4 years, I never hurt Medicare, Medicaid, or Social Security. I've already been there. but they're going to destroy Medicare, Medicaid, and Social Security. They're going to wipe them out, in my opinion, because their policies are so bad, the country will have no money to pay for them. We're going to make them stronger than ever before. Thank you very much, everybody.
All right, there you have President Trump live at the White House taking a series of questions about a range of issues. We covered a lot of ground there, and thanks for being with us on Bloomberg Radio, Satellite Radio, Channel 121, and YouTube, where you may have been watching the president. He's working his way out of the room now, shaking some hands, having taken the dive, as I mentioned, on a number of issues. From the matter at hand, he was there to sign resolutions repealing, essentially, state-level EV incentives in California. That was the whole purpose of today, but this went into a range of other topics that we can walk through here from Iran and beyond. I'm Joe Matthew alongside Bloomberg's Tyler Kendall in Washington. I want to seize on this matter of Iran for a moment because of its urgency. Tyler, the president was asked a number of times about this, knowing that there are talks set for this weekend in Oman. That's on Sunday, and we're seeing what could be a lot of bluster, but a lot of reports suggesting that Israel is in fact preparing an imminent attack against Tehran and its nuclear facilities. The president just said that could very much still happen.
Very well happen. That's what he said. He also said that the U.S. is fairly close to an agreement with Iran as these negotiators do go in, but that they will have to give us things they're not willing to. That's a direct quote from President Trump. Of course, these comments coming after we earlier saw a New York Post interview that the president gave where he said he was less confident that the U.S. really was going to be able to reach a deal. Of course, these are negotiations over Iran's nuclear activities in exchange for potential sanctions relief from the United States. President Trump has not taken off the table, of course, that there could be military action if there is not a deal reached.
All this, of course, well, almost on the eve of the military parade in downtown Washington. The president was asked about the No Kings protests, making pretty clear that he doesn't see himself as a king. We also talked about what's happening more broadly in California and specifically in Los Angeles, Tyler, when we get to the protests and the deployment of troops, National Guard and Marine Corps troops, and an important hearing that's going to be taking place today in court in San Francisco, knowing, of course, that Gavin Newsom, the governor of California, has sued the administration to turn back those troops. And that's where we want to start today with our political panel. Rick and Jeannie are both with us, Bloomberg Politics contributors. Jeannie Shanzano, our Democratic analyst, senior democracy fellow at the Center for the Study of the Presidency and Congress. And Rick Davis, Republican strategist, partner at Stone Court Capital. Great to see you both. Jeannie, I don't know if this court hearing is going to generate anything decisive by the end of the day, and we're hearing that it may well not. But does Gavin Newsom have any leverage in court to stop the troops who are in Los Angeles?
It's going to be fascinating. By the way, I don't know if you and Tyler agree. I thought maybe President Trump would break out into a song from Les Mis after last night. I was waiting
He had a big night.
Didn't get that. But, you know, the court is going to be fascinating, not only because it's Stephen Breyer's brother who is hearing the case, which is one fascinating aspect of it, but because it's going to be an uphill battle for the governor. The reality is that the president is likely going to have ground to stand on here, particularly as it pertains to the National Guard, number one, because it's not unprecedented. And number two, because they are going to argue, they being the Justice Department, that these are foreign folks that are in here and the state is not doing enough. And they're going to use the examples of the waving of the Mexican flag and to say that this is a national issue. He is the president, so he has every right to nationalize these troops. Hard to tell how this comes down, but I do think it's likely probably going to go the president's way.
We've got a headline on the terminal here and a story that we are preparing to follow today that lands in the noontime hour Eastern time, the IPO of Chime. Chime Financial, CHYM, the ticker, out of the gates here at $43, remembering the IPO price was $27. And pretty remarkable, Tyler, this thing is moving. We're up 65% here, again, coming out of the IPO price, topping, now approaching actually $45. And one of the stories that we're going to be keeping very handy today on Wall Street. This is something that, of course, follows the very successful IPO of Circle and brings us to an interesting place. The story behind this company is really fascinating, Tyler, because Chime has really made its mark as a bank for those with lower incomes, living paycheck to paycheck, 35% or more female employees, and they're giving the big boys a run for their money. In fact, competing with the likes of JP Morgan Chase and Bank of America. Big reaction today in the market.
Yeah, exactly, Joe. And the offering raised $864 million for the company and some of its investors, with 32 million shares priced above a marketed range of $24 to $26 each.
There you have it. We're just below $44 for a share of Chime, up 61%. We'll keep tabs on this for you and bring in some experts in our program as we want to stick with the panel on this. Rick, we just heard from the president, and we're going to be hearing from the court. We're going to be hearing from the judge at some point later on today in this Trump versus Newsom world that we are in. Has Gavin Newsom succeeded in becoming at least the temporary head of the Democratic Party?
Yeah, I think a lot of these initiatives like the lawsuit and even the troops, I mean, these are two of the most performative politicians in the history of the world. And so they use these platforms as political weapons. And I think it almost doesn't matter what the outcome is of the court case today, because Gavin Newsom's already gotten his value for standing up to Donald Trump, making the lawsuit, saying, you know, that he's not adding to the peace, he's creating controversy. And it covers some of his tracks on the fact that you do have looters, you do have a bad situation in L.A., and we hope it all resolves itself quickly, regardless of whether there's troops there or not. So President Trump, of course, you know, he's been warning about these things. He just repeated his concerns that he didn't act quick enough, you know, in the past, and so he's not going to hesitate in the future. And I think that as these other protests spread throughout the country, which there was even an altercation with ICE folks in Tucson, Arizona today. I mean, it's everywhere you can look. You wonder how much does Donald Trump really want to create a precedent that every time a window gets broken, you know, or a car gets burned, does he want to put in National Guard troops? So I think they're both creating a little bit of a trap for themselves, but these guys seem to always get away with it. So let the race begin for 2028, because that's more of what this is about rather than peace and security.
Right. And Jeannie, I want to talk a little bit more about the policies that led us to this point. As Rick was talking about immigration, we had Cliff Young of Ipsos here the other day who told us that President Trump is still polling really well when it comes to his immigration policies, but Americans aren't so happy with the implementation of them. How did we get to this escalation point if we look at the actual policies that are going into place?
Yeah, it's such a good point. And you know, we are seeing a little bit of a break in some of the president's momentum that you're talking about, Tyler, because he himself posted on Truth Social a concern that about the workers on some of the farms, whether they're the avocado farms, whether they're the ranches down in Texas, because he too is looking at these polls. And while Americans in those 7 swing states he likes to talk about voted for him to deal with the criminal element and to deport from there, Americans, particularly independents, not as happy about the deportation of working Americans, people who have lived here a long time, the quote unquote DACA folks. And so when the president posted that today, it was, I think, a turning point of recognition that he knows that this could get unpopular if he keeps up with this extreme aspect. And you saw Governor Newsom respond and say, turns out chasing hardworking people through ranches and farms and snatching women and children off the streets is not good policy. That's what the president is recognizing now.
The battle of political optics with Jeannie Shanzano and Rick Davis. Our great panel will be back in our second hour here on Balance of Power. Big thanks as well to Bloomberg's Tyler Kendall. Much more ahead. The president speaking about Iran and a potential imminent attack. That's next on Bloomberg.
Balance of Power, live from Washington, D.C.
It's the latest test of President Trump's economic policies. Welcome to the Thursday edition of Balance of Power, as the U.S. Treasury holds a multi-billion-dollar auction of 30-year bonds. And it's happening just moments after Chime debuted on Wall Street. Alongside Kaylee Lyons, I'm Joe Matthew in Washington. Thanks for being with us here on the early edition of Balance of Power. Investors today in the bond market, Kaylee, balancing worries about debt and tariffs, among other things, coming out of Washington.
Yeah, the question is going to be, are there demand for longer dated maturities when there are ongoing fiscal concerns about the trajectory of the debt deficit of the United States, with the one big beautiful bill, of course, still being pushed by Congress and the Senate specifically. An important meeting will happen at the White House later today with Senate leaders like Mike Crapo of the Finance Committee and the Majority Leader John Thune and President Trump to continue to advance that agenda. But as we consider the deficit, President Trump, just speaking at the White House earlier today, suggested he's not going to fire Chairman Powell, but once again encouraged him to cut interest rates, in part to make sure that the debt burden of the United States and those interest payments are not felt so heavily.
All of that while floating the idea of higher auto tariffs as he tries to repeal, signing resolutions today to repeal some statewide EV incentives and the gas car ban in California. We're spinning a lot of plates here. We're going to have a live update on the auction. Mike McKee and Ira Jersey are with us. We're also tracking Chime, and we'll be watching that through the day. It had a big pop at the open. We'll see where it goes for the session.
Yeah, it did. It actually opened 59% above the IPO price, which was $27. After opening at $43, we're now just around $39. But let's get a check on that and everything else moving in financial markets right now with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, spinning a lot of plates on the business desk today. A lot of moving parts to this market. You mentioned Chime. Let's begin there. We've got the Chime IPO with the stock surging right now 46.3%. Financial tech firm. First day out, ticker CHYM. By the way, that offering led by Morgan Stanley, Goldman Sachs, and JP Morgan Chase. But the important thing, stock up right now 45.5% on Chime. We've got that $22 billion sale of 30-year debt, a fresh test on whether spiraling deficits are causing investors to shun the maturity. We'll have more on that coming up for you here on Balance of Power. Equity markets higher, but certainly a lot of bouncing around, right to the numbers with the S&P now up 12 at 6,034, up by about 0.2%. The Dow up 20, up under 0.1%. The NASDAQ Composite Index up 32. For NASDAQ, that is a gain right now of 0.2%. Your 10-year 4.36%, with the 2-year 3.90%. Gold up $29 the ounce, 33.85, up 0.9%. West Texas Intermediate crude little changed, up under 0.1%. And Bitcoin right now down 1.2%, 107,771 on Bitcoin. Again, Chime Financial trading underway, bears repeating. That stock surging in its first day of trading. Right now, we've got Chime Financial up by 48%. The Boeing crash. Boeing shares down 4.2%, but we are now getting reports that a single passenger survived that fiery crash of the Air India plane today. That according to an Indian minister who is confirming again at least one crash survivor. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Keeping track of the stock market for us, keeping track of the Treasury market as well, which, as Charlie mentioned, of course, we just saw a 30-year bond auction that actually drew a lower yield than the pre-sale when issued yield, drawing 4.844% on that maturity. The pre-sale yield, Joe, was 4.859%. And as a result, while yields were already lower across the curve today in the aftermath of PPI data and considering other factors, we're seeing another tick lower today on the 30-year in the aftermath of this auction. It appears that the demand question perhaps not as bad as some had feared.
Yeah, that's right. And we have two great voices for you to walk us through this auction as it happens before our eyes. Michael McKee is here, Bloomberg International Economics and Policy Correspondent at World Headquarters in New York. We're also joined by Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Ira's going to take a minute to bear down on this. Michael, I'm reminded by the comments on Bloomberg yesterday by Jeffrey Gundlach, Double Line. The quote was, there's an awareness now that the long-term Treasury bond is not a legitimate flight to quality asset. How does that line hit now that we've seen this number?
Well, apparently Mr. Gundlach wasn't bidding, or other people weren't listening to him, because we stopped through here by more than a basis point. So it's the bid to cover was stronger than the last time at 2.43. So people are still wanting some duration in U.S. Treasuries. Now, it's hard to put this out as any kind of reaction that requires a safe haven, because there's a lot of news out there, but there isn't anything that would be driving people towards a certain issue of a U.S. Treasury at this point.
All right, so Ira, jump in here. How do you view this takedown, which seems overall to be pretty decent?
Yeah, so our system graded an A. So yeah, one of the highest grades that we've seen for a bond auction in a little while. So to go back to what Michael was just saying, when you look at bid to cover, which is the number of bonds that people want to buy versus the amount on offer, it was actually the highest reopening of the highest during a reopening over the last couple of months, and that's important, because look, the fact is that people do want long duration. There's still a lot of pension funds and other liability managers, so what we call LDI investors, liability driven investors, who need long duration assets, and there's not many other places to go. So people still have to buy treasuries, and there is a concern for sure that there's growing debt burden of the United States is going to make the U.S. debt unsustainable, but that might be true in other assets too, right? So if you go to Germany, for example, they're probably going to be issuing a whole lot of debt as well. Granted, they're coming from a much better starting place in terms of their deficit, but there's a few alternatives that are as liquid as treasuries if you want to buy long-term debt.
Well, Mike, it really speaks to the pushback we've been hearing from the White House. Everybody's talking about when the soft data finally creeps into the hard data, when reality is going to catch up with Donald Trump, when people are going to wake up to how bad things are. It just hasn't happened yet. What needs to happen? The passage of the reconciliation bill, when we can put real numbers on debt?
Well, that will lead to some kind of reaction when you can actually quantify what the debt situation is going to be. But I think what we're talking about here is both ends of the yield curve are not trading necessarily, and Ira can tell me I'm wrong on this, but I don't think they're necessarily trading in terms of the U.S. debt at this point, because as he pointed out, there's an independent demand for duration out there. And then on the short end, at 2-year notes, the Fed basically controls that. It doesn't move around very much if the Fed's not moving rates. It's in the middle where you're going to get the reaction, and we have seen that the belly of the curve on up has gotten cheaper. Yields have risen, but it seems like there's not a lot of direction at the moment, because people don't know where we're going to end up on debt or on tariffs, or where the economy is going to go from here.
Okay, well, Ira, we graded the auction. Grade Mike McKee. Was he right about that?
Yeah, he certainly was. And what's really interesting, we put out a chart earlier this week in one of our notes about the evolution of yields over the last 2 years. And one of the things that you've noticed is we haven't broken out of any ranges anywhere along the curve, whether it's the 2-year, the 10-year, the 30-year, doesn't matter. We're in the same ranges where we were in 2023. The big difference now, though, is that the 2-year yield is close to the bottom of its range, whereas the 30-year yield is toward the top of the range. So that's the yield curve steepening. Now, that steepening occurs for several different reasons. One is expectations that the Fed is going to cut interest rates, the timing of which and the magnitude of which is still in doubt, but nonetheless, the market is pricing for the Fed to ease at some point over the next 18 months. But then the long end is projecting some of those fiscal fears, but in relationship to the 2-year, right? So we look at this absolute level of 5-year, 30-year yields, and that has to be taken into account that, look, not so long ago, 2-year yields and 30-year yields were exactly the same. Now they're 100+ basis points apart, right? So you have to consider where all of the points on the curve are to each other, not only the absolute level of yields at any one time.
Still, Ira, you remember the freak out that we saw in the bond market, the yippee reaction, as the president called it, after Liberation Day. Technically, put debt aside for a moment, nothing has actually changed when it comes to the tariffs. They're all about to take effect again, as he said, unilaterally in 1 to 2 weeks. We have reciprocal tariffs that could kick in momentarily in August, the China tariffs. How quickly could we get back to that level of panic?
Well, it could happen pretty quickly, but I do think that the market has repriced, and it has repriced, like I mentioned, in terms of that curve steepening. So there's a couple of things that we have to realize. The reason why we worry about foreign demand is because 10 years ago, there was massive foreign demand because our current account deficit was huge and ballooning at the time. Today, that current account deficit has actually shrunk quite a lot. And if it shrinks more because our trade balance gets better with other countries, you'll see foreign demand just decline even further, because one of the big reasons that you see this foreign demand is the recycling of dollars due to the trade imbalance. If that changes, then you have to see more domestic demand for Treasury securities, and that is where you might wind up with somewhat of a repricing, in that people are going to say, okay, look, there's not enough domestic savings in the United States to meet the demand of a growing Treasury market, and because of that, you could wind up seeing in general slightly higher yields, and probably, in my view, a somewhat steeper yield curve over time as well.
And Mike McKee, before we let you go, do you want to note what we heard from President Trump at the White House in regard to the Fed chairman and the Fed's policy stance overall? He reiterated that he's not going to fire Jerome Powell, but looking at the inflation data, he still is of the belief the Fed needs to cut rates by 100 basis points or maybe even 2 full points, in part because he said that would mean we save a bunch of money on interest costs when we consider the federal debt. Does the Fed take that into account at all?
No. You get the same reaction from the Fed to that as if, Kaylee, you walked into the bank and said, I want you to cut the interest rate on my credit card because I've spent so much money that I can't afford the interest costs. The bankers would laugh you out. The Fed wouldn't be that rude, but they're not going to pay any attention to the president in that case. I mean, they realize that because rates are high, it is costing the government more money, but it's not their fault. Their job is to control prices and keep prices stable. So they're going to do that above all else, and the collateral damage comes about for other reasons.
All right, Michael McKee, Bloomberg International Economics and Policy correspondent, as well as Ira Jersey, who covers rates for us at Bloomberg Intelligence. Thank you both so much for joining us. Ira, of course, our chief U.S. interest rate strategist, helping us break down this bond auction, 30-year Treasury bond auction specifically. A lot of concern about demand for that maturity, and demand proving to be pretty solid. As a result, yields ticking a little bit lower. We're down 8 basis points on the 30-year to 483 as we speak. But of course, Joe, the demand concerns emanated from concerns over, in part, fiscal policies we were just discussing, and the ultimate cost of the tax package that President Trump is trying hard to push right now through the U.S. Senate, hence a meeting that he's holding at the White House this afternoon.
The idea, if you want permanence when it comes to business tax breaks or even the Trump tax cuts, you've got to find the money to pay for that somewhere. And senators seem to think the answer is salt.
Yeah.
Which could be a problem next door in the House.
Exactly. So let's get into this with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Stonecourt Capital partner and Republican strategist. Jeannie, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, when we try to imagine what will take place in that room between Mike Crapo, the finance chairman, and the majority leader John Thune and President Trump later today at the White House, what is the message from the president likely to be? Is he going to bless a SALT change, knowing it could take make it much harder for this bill to repass the House?
Yeah, I mean, usually the presidents don't get into too much of the nitty-gritty because they know that the deal-making on these bills are all interrelated, right? So cuts to that affect what you're going to be able to do with the Medicaid. Medicaid would then affect votes that you would otherwise have on another issue. And so generally they don't get all tangled up in that mess. What he will do is put increasing pressure on Majority Leader Thune to get this bill done before the 4th of July break, because he knows the longer this bill sits around, the more it gets difficult to pass anything. And I think at this stage the White House will take a bill under any circumstances versus a perfect bill. And the reality is the Senate is making big changes. So the question is, what will pass the House, after they get it out?
Rick reminding us of the old line, time kills deals. Jeannie, the fact of the matter is, if you're a Republican, even from your state of New York, and if you're obsessed with salt, you're still not going to vote for a massive tax hike on Americans, are you? If you vote no for this bill and it doesn't pass, that's what they get.
But the reality is, for people like Mike Lawler or so many of the Republicans in a state like New York, California, Jersey with high taxes, they are voting for a tax increase for their folks anyways, who have been suffering since the issue with salt emerged as a result of 2017. So for them, it doesn't make a difference. They know that they're politically going to be in huge trouble if they don't move forward in salt. And so I do think their threats are very, very real. And, you know, Rick is absolutely right. The longer this bill has stayed in the public eye, and you've seen the senators and representatives go home for holidays. We'll see that again for Juneteenth pretty shortly. You also see that public support for this bill, the more people learn about it, begins to go down. And that's what we've seen in some of the polls. And I think the president is well aware of that, which is why I believe he posted on Truth Social today and then reiterated in his comments his welcoming of Rand Paul, because Rand Paul has been very critical about the border funding for this bill. And President Trump is usually not so welcoming and supportive unless he knows he needs you or he needs to pull you along. So I think he's well aware of what is going on in these polls.
Well, that's not where the president's True Social post stopped today, Rick. We also got an interesting one specifically on the labor market and immigration, where the president said our great farmers and people in the hotel and leisure business have been stating that our very aggressive policy on immigration is taking very good long-time workers away from them, with those jobs being almost impossible to replace. He goes on to say this is not good. Finishes with changes are coming. An admission that labor shortages are resulting from his policy. Rick, therefore, what policy changes do you think we're really likely to see?
You know, it kind of echoes the John McCain comprehensive immigration reform of 2005, right? Which is, hey, maybe we need a guest worker program while we crack down on, you know, people here without permission. So it's really interesting. I mean, rather than approaching this as a comprehensive solution, the president seems really inclined to create controversy along the way. So obviously, at one point, Stephen Miller is at ICE last week telling them they're going to lose their job unless they step up the amount of deportations. At the same time, a week later, Donald Trump says, hey, I know these deportations are hurting farmers and other companies throughout the country. Maybe we ought to find a solution. Well, there's a solution there, right? I mean, it's called a guest worker program. It's been around for 20 years. And I'm not exactly sure if his voters will appreciate it, but it's exactly what we need today.
And history repeats. We should mention it was the congressional baseball game last evening. By the way, Republicans won it again. This evening, the congressional picnic on the South Lawn. We referred to this. Rand Paul's invited. Jeannie, can Donald Trump get work done there? They're going to be on the South Lawn looking at the stands that have been set up for the big parade, maybe a little punch. Can he close the deal tonight?
He's certainly going to try. This is, you know, perfect for Donald Trump. And Joe, I just saw that you showed us that we might see a cancellation due to weather this weekend.
There's
an
an isolated report there. I don't know. The fact of the matter is, though, it is going to be stormy and hot and raining, and we've got a lot of people who could be in harm's way. Jeannie Shanzano, Rick Davis, thank you both for the conversation. Kaylee, at the moment, the parade is set for 6:30 p.m. Saturday. Good luck getting into Washington.
Yeah, good luck getting into Washington today, tomorrow,
Also
basically any day leading up to the parade. Traffic's going to be a nightmare. We'll have more coming up here on Balance of Power on Bloomberg TV and radio.
Street. We do check markets all day long here at Bloomberg. We begin with Chime Financial. First day of trading. The stock now surging by 45%. It's a financial tech firm. First day out, the ticker CHYM. Again, Chime Financial up now by 46%. We're also just getting reports that a single passenger is said to have survived the fiery crash in Ahmedabad, India, of that Boeing 787 passenger plane. This is according to an Indian minister who is confirming at least one crash survivor. Stocks higher across the board. The Dow, the S&P, NASDAQ all gaining right now. S&P up 19, up 0.3%. The Dow up 64, up 0.1%. And NASDAQ up by 0.3%. Treasuries are extending gains after a solid $22 billion sale of 30-year debt. Right now we have got the 10-year yielding 4.36%, the 2-year 3.91%, the 30-year 4.84%. Gold up 0.7%. West Texas Intermediate crude oil flat on the day, 68.18 a barrel. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet, thank you so much, as always, checking on markets for us across asset classes. Charlie, just noting that we're essentially flat, at least on WTI crude today, but both for WTI and Brent yesterday, we saw a very big move to the upside, more than 4% on each, in part after the U.S. decision to pull U.S. diplomats essentially out of Baghdad, as well as issue warnings to family members of military members in the Middle East, all feeding into concern of something that might be coming, as there were reports last night that Israel could be ready to strike Iran's nuclear facilities. And that's something that President Trump today, when speaking and answering questions from reporters at the White House, did not necessarily play down, Joe. He suggested there could be massive conflict coming.
That's right. He said it could well happen, knowing, of course, that talks are still set for Sunday. Steve Witkoff will be in Oman, and there could be some posturing ahead of those talks. But this is a precarious moment. And Michael Allen from Beacon Global Strategies was the first to float the idea here on the program when Benjamin Netanyahu came to town, that is in fact what they were talking about. Michael, we know that President Trump waved off that attack at the time. It's become known since then, at least. Is he going to wave off this one?
I think he might try. I think he sees some benefit right now in holding out the prospect that the Israelis might go for it, because he wants to strengthen Steve Witkoff's hand as he goes to Oman this weekend. But when you really start to look at some of the factors that are going Israel's way, today, just this morning, the International Atomic Energy Agency, the UN watchdog group, declared Iran in breach of the Non-Proliferation Treaty. That's the first time in 20 years that this has happened. That is significant around the globe. It's not that I think Israel would be toasted if they were to bomb Iran, but it's sort of more understandable in the aftermath of this than it would be otherwise, especially when you consider that the next step might be to refer this to the UN Security Council, which also would trigger additional sanctions from around the world. And if Iran gets out of the Non-Proliferation Treaty altogether, that could almost be an invitation for Israel to go for it.
Okay, so may provide Israel some cover, but at the same time, wouldn't those very same things you're talking about signal that the U.S. has no real hope of getting a nuclear deal with Iran when Iran is doing such things?
I think it's really, really tough, because when you think about enrichment, our position is no enrichment in Iran. Their position is, this is one of our red lines that we can't give it up. And we're talking about a consortium. Could we do nuclear fuel rods of somewhere else in the Middle East? And Iran, I think, is basically saying, no, it needs to be inside of our own territory. And I think that's why the talks have foundered so far.
So let's say this happens. Does the U.S. provide logistical support, actual hardware? What would be the relationship? Or do we sit back and watch this happen?
So this is the million-dollar question. Have we turned over already the types of munitions that the Israelis would need? Presumably, they would want the Moab, the mother of all bombs, other bunker busters. They would probably want some refueling help from the United States. But what they really need is what we did the last two times there were missiles and drones going between the two countries. They need the U.S. Navy out there with Aegis destroyers knocking down some of these Iranian incoming. And I don't know if President Trump is ready to do these three things. Now, the Israelis may go for it anyway. They're famously creative and think pager operation and a million other things. So they may not need the bunker buster, or they may have an alternative plan. But these are some big question marks.
Well, and as you bring us back to what we've seen in the past when Iran has sent drones and missiles toward Israel, those were largely intercepted, not just with help of the U.S., but with Jordan as well. So when we consider the potential for Iranian retaliation here, is there some major damage that they actually can successfully inflict, considering they weren't successful in past iterations?
They might be able to get, presumably they would throw a lot more ballistic missiles and whatever into Israel, so it may well hit this time. But I think what they're really worried about, the United States in particular, is would the Iranians hit the Gulf allies of Israel and the United States? What would happen in Saudi Arabia? Remember, they hit Abqaiq last time, the big gigantic oil facility. They've also taken, at least the Houthis have taken shots at the UAE before. So I think the Iranians have signaled, you know what, if we get hit, don't think that it's just coming back at Israel. It may come also to your Gulf allies. So that's a big conflagration right there.
What do you make of the move in Iraq? We're trying to get U.S. personnel out of the way already. What is the target in Iraq that would be of value to Iran?
Well, just any place where there are concentrations of Americans in the Middle East that are within sort of
this is more
gun
symbolic
sites.
Than
it is.
else
We have troops
case, right?
there. We have a bigger American presence, generally speaking, and so I think it's prudent for us to take non-essential personnel and give them the opportunity to leave. But it's something that we need to look at. It's a factor. It's a signal for thinking about, well, the United States is starting to take precautionary measures.
Well, and how far in advance do we typically take those? Does that signal that it could be within days what we're talking about here, before Sunday, before Witkoff even gets to Oman to try to deal with things diplomatically?
So I have a feeling that Trump has probably said to the Israelis, let Witkoff go in Sunday, but I think it's very, very soon. You know what? I think the Israelis are also operationally ready. They made a bunch of bombing runs down to hit the Houthi. The way I understand it is they're able to practice some refueling, certainly the distance that it takes to get down there, and otherwise get into the nice right formations, have some operational readiness concerns addressed by that operation. So diplomatically, the air defenses being down in Israel, the military in Israel being really ready, you could read into this that something's going to happen soon.
You were Special Assistant for National Security in the George W. Bush administration. Would you be telling the president now that there's still an opportunity for a diplomatic solution, or prepare for war?
I would say prepare for war, but that is the moment at which you could have a diplomatic solution. When you got really, really close up to the line. So I would never rule it out completely, but I definitely think the United States needs to be thinking through, and apparently we are, what would the second, third order implications be of this type of strike? It would be big. Now, Israel has got a lot of creative ways to go after all these different sites across Iran, so this could be a really multi-day, maybe even multi-week type of operation.
Well, we'll plan to stay in touch with you as things develop. Michael Allen of Beacon Global Strategies, thank you as always for joining us as we continue to track this story for you here on Bloomberg TV and radio. One of just many stories around the world we have our eye on today. We're also watching, of course, a tragedy unfolding in India after a crash of a Boeing 787 Dreamliner with 242 people aboard an Air India flight. More than 200 bodies have been recovered after that aircraft crashed shortly after takeoff en route to London. And we want to get the latest now from Ryan Bean, Bloomberg U.S. Transport Deputy Team Leader, who's here with us on Balance of Power. Ryan, do we have any indication yet, knowing it's obviously very early into the investigation, of what actually went wrong here, what happened?
Unfortunately, no, we do not. This crash is just still hours old. Recovery efforts are underway. The first phase of a major disaster like this is largely dominated by search and rescue efforts. Investigators from the U.S. And from other countries are planning to travel to India to assist with the local authorities and their National Aviation Safety Investigative Team to begin that work. But that's going to still take some time before we really learn what actually happened in this tragedy.
Yeah. Well, we're hearing a lot of speculation, as is often the case, Ryan. The President of the United States, even at a podium a short time ago, suggested some sort of engine failure, and there are eyes on Boeing, there are eyes on GE. with the potential for major implications. Boeing's CEO, though, says the company's team stands ready to support the investigation. I wonder to what extent the NTSB will be involved here, knowing that it happened in another country.
They will be involved. Under Annex 13, the home country where an aircraft crash occurs, they take the lead, but they are supported by their counterparts from countries where aircraft are manufactured and where engines are manufactured. So the NTSB, being the sort of preeminent global authority on these types of investigations, will absolutely have a role, as will Boeing and as will personnel from General GE, who have said that they're both sending personnel to assist, and they stand ready to help the authorities.
Yeah, we just had headlines crossing the Bloomberg terminal that the CEO of Boeing has spoken to the chair of Air India, saying that Boeing's team stands ready to support the investigation. When we consider this Boeing aircraft specifically, Ryan, knowing all of the difficulty that Boeing has had, specifically with the 737 model after several fatal crashes, and of course the blowout of one part of the aircraft last year on that flight in the U.S., talk to us about the 787. This is obviously a wide-body aircraft. What is its track record? How reliable is this aircraft? Has Boeing had issues with this model in the past?
This aircraft has had heretofore a sterling track record. This is the first fatal accident involving a 787, and this model of aircraft has been on the market for about 15 years. There are over 1,000 in service today. It has, it's a workhorse for global airline fleets connecting international destinations around the world. So this is sort of uncharted territory. Now, the 787 has been under scrutiny for some quality concerns on the part of the FAA in recent years that prompted about a year plus halt to deliveries, while Boeing employees reworked elements of the fuselage that the FAA was concerned the work wasn't being properly done on it. But those planes have largely been through that process. Deliveries have resumed, and there has not been a major safety incident involving the plane itself. So this is sort of uncharted territory. And you mentioned Boeing's recent track record and the previous incidents that they've been involved in. This certainly doesn't help what Boeing's trying to do right now, which is get quality under control, resume deliveries, get the cash flow spigot going. We don't know, again, to emphasize, we don't know if there was any issue with this plane whatsoever, or if there are other factors at play here. But it certainly doesn't help the company and CEO Kelly Ortberg in trying to move Boeing beyond the difficult chapter that it's been in for the last several years.
Yeah, the timing is terrible for these companies all the way around. Ryan, thank you so much. Ryan Bean is Bloomberg's U.S. Transport Deputy Team Leader with his eyes on a developing story overseas. I'm Joe Matthew alongside Kaylee Lyons. We'll keep tabs on this as well as the IPO of Chime. The conversation later with Paige Smith, our finance reporter. Consumer finance looming large today on Wall Street. And we'll have more on that straight ahead on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Chime Financial, ticker CHYM. First day of trading and the stock pushing higher. Right now we've got Chime up by 44.8%. The stock opened at 43, just about 59% above the IPO price of $27 each. But Chime right now trading at 38.86. It is up again by 44%. We're also just getting reports that a single passenger did survive that fiery crash in Ahmedabad, India, of an Air India Boeing 787 passenger plane. Now, that's according to an Indian minister who is confirming at least one crash survivor. The plane went down shortly after taking off for London with about 240 people on board. Boeing's CEO says a Boeing team stands ready to support the investigation. Boeing, member of the Dow, down now by 4.5%. Meantime, out of Boston, just getting a report that a JetBlue flight landing at Logan International rolled off the runway and into the grass today. That report coming moments ago. JetBlue shares trading lower by 0.5%. The Dow, the S&P, and NASDAQ all advancing. S&P up 20 right now, up by about 0.3%. We've got the Dow up 69, up 0.2%. And NASDAQ up 64, a gain there of 0.3%. Treasuries are extending gains after a solid $22 billion sale of 30-year debt. The 10-year, 4.35%. The 2-year, 3.91%. The 30-year, 4.83%. Gold up 0.8%, 33.81 the ounce. West Texas Intermediate crude little changed, up 0.1%, 68.20 a barrel on WTI. Again, recapping, checking Chime Financial one more time, up now by 42.6%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Joe Matthew for Balance of Power today. And as Charlie checks on Chime for us, of course, doing pretty well on its first day of trading, having already had its IPO priced above the marketed range, opening substantially, about 49% above that price, even if we're trading a little below that level now at $38 a share, as Charlie was just mentioning. But this is just the latest in what have been a series of relatively successful IPOs, thinking back to Circle last week, Joe, and of course, all of it keeping our focus on financial technology in the fintech space.
Really compelling story. The CEO at Chime, Chris Britt, was talking to Ed Ludlow earlier today on Bloomberg TV and radio. Just a fascinating story about how we got here and why there's so much buzz around it. Fee-free banking, payments-driven revenue, and an audience that may not typically be banked, as they say. There's a really interesting trend here with many people who are of lower income, lower means, living paycheck to paycheck, but suddenly have a platform that they can do business on here. And I wanted to talk about it with Paige Smith, Bloomberg's consumer finance reporter, to get a slightly different wrinkle on this story, Paige. A third of the customers are women. What does this tell us about the state of the consumer and its relationship to banking?
I think that's a really good point. This company in particular, which to be clear is not a bank, but offers a heck of a lot of bank-like services to consumers that, like you said, mostly make under $100,000 a year and are turning to this financial technology company as, you know, for things like bread and butter savings accounts and checking accounts and places to put their paycheck. And as you said, it caters to folks that are, you know, maybe would go to a Bank of America, would go to a Wells Fargo, but is actually, they're instead going to Chime.
Well, and to your point about this not being a bank, just a fintech firm that partners with banks in order to offer these services, is there a kind of regulatory risk embedded in this story? Paige, is there a risk that that kind of relationship actually gets more difficult for Chime to execute and specifically make money off of?
Well, I would say, to use Chris Britt's words, you know, he has said repeatedly that the company has prioritized playing by the rules, but, you know, again, they are not a bank. They work very closely with banks. They have two bank partners, Stride and Bancorp Bank, and, you know, it's these relationships are common in the fintech space, and yes, regulators have looked at them in the past, but they have not looked at Chime in particular, I believe, and this is, it's certainly something to keep in mind, but I would say that, just to be clear, they are not a bank, but they're a fintech that provides bank-like services and works closely with banks.
And they're they're giving the big banks a run for their money here. When you start hearing about Chime in the same conversation as Bank of America or J.P. Morgan Chase, what does that tell us about the potential headroom for this company to grow?
They've said they're eyeing a number of different revenue opportunities, but the company is, as they've made very clear, they're a payments revenue-focused company. So they basically make money every time their customers use their Chime branded credit or debit cards. That's how they make money. It's a little bit different than how your standard Bank of America or Wells Fargo makes money. And as they've said, there's more opportunity to sort of take some of those existing customers away from the biggest banks, but also expand on folks who have maybe never had a relationship with a bank of any kind.
All right, Paige, we appreciate it. Bloomberg consumer finance reporter Paige Smith reporting on Chime's IPO. Again, the debut of trading. It has been trading just under an hour. CHYM is the ticker. We're at $38.75 a share after an IPO, which again priced at the beyond the upper end of the range at $27 a share. So a very healthy debut pop we are seeing for Chime here. And as we keep one eye on the NASDAQ and on Wall Street overall, of course, we're keeping another eye on the happenings here in Washington, including a meeting that will happen at the White House later this afternoon between President Trump and two very important people in the budget reconciliation debate right now, the Senate Majority Leader John Thune and the Senate Finance Chairman Mike Crapo, who, of course, Joe, is charged with making any tweaks to the tax policies and Medicaid policies specifically of the House-passed reconciliation.
Yeah, all the fun stuff here that's going to upset everyone in the House is going to probably come out of the Senate Finance Committee. So they do have some things to talk about here, and it's great to be joined by somebody who knows a thing or two about this. Patrick McHenry is back with us, Bloomberg Politics contributor, of course, former chair of the House Financial Services Committee, former Speaker pro tem. Great to see you.
Great to see you. I'm smiling because, yes, the consternation, the natural tension between the House and the Senate will be highlighted.
That's right. You know, we've talked about lately, Kaylee, and if you make these cuts permanent, you got money somewhere. If it comes out of SALT, the conventional find a reason for a tax hike.
Tax hike, but we've got narrow majorities here. The White House and Senator Rand Paul highlighted that he would otherwise be for a tax cut, but because the debt ceiling is included, he won't play ball. That makes it more precarious for the Senate to produce a reasonable tax package. Probably means less tax cuts, in fact, because he's not participating. More spending overall because he's not participating. That's quite frustrating when you're trying to make policy and actually have a more fiscally sound outcome. But I do think you're looking at permanence as a baseline conversation for the Senate. I think that is a net plus. The fact that we have a tax code that's expiring for individuals, and individuals are facing, and small businesses, facing a massive tax increase. Secretary Bessent said it very well before the Congress this week. This could be the largest tax increase in American history. So action is quite necessary for economic growth and economic activity. The debate has gotten become an abstraction from that fact point, which they're trying to draw it back to those really basic principles.
Yeah, and yet the debate has migrated onto very specific narrow issues like the state and local tax deduction, which affects just a handful of lawmakers in the House who happen to have red districts in a blue state. Mike Johnson was asked when he was leaving the White House about SALT changes, and he says he hopes the Senate changes it in a very small way. How do we translate he'll speak very small way into an actual number? Would reducing that amount by $10,000, for example, be considered very small?
They're going to risk it.
Okay.
The Senate's going to test it. This is a massive. So when you see the scoring, there are two pieces of the debate right now. Is that there is those on the lower end of the scale are going to see their net benefits from government be reduced, and at the top end of the scale, you're going to see a greater tax cut. That is driven around SALT and a debate about Medicaid. If you are working poor and you're not on Medicaid, this is a tax cut for you. If you're receiving Medicaid and you're gaming the system, yes, that's a huge loss. So work requirements are always going to skew as this you're cutting people. What you're saying is if you're able-bodied, you should not be on governmental services. So that becomes a point of debate. The second piece of that is the SALT deduction. A SALT deduction has the greatest impact on the higher end of the distribution for high-income individuals in blue states. The reason why we have the SALT deduction at $10,000, capped at $10,000 for the first time in American history, is because in 2017, Republicans had sufficient votes to go beyond blue state Republicans in the House. This time around, that is not the case. The Republican majority in the House is driven out of Republicans from New Jersey and New York. Without them, Hakeem Jeffries is Speaker of the House, not Mike Johnson. So they do have a serious role here. The Senate cares not one whit
And
about
they've let us know
this
it.
debate.
Yes, they
So the tension here is going to be a lot of performative acts around what is actually going to happen. I think we can fast forward here. This is going to be basically the House trying to be the sheepdog to steer the Senate to a package that the House will consume and pass and put to the president's desk. That is actually what we're hearing here between congressional leaders.
The House as sheepdog, not the Senate jamming the House.
Well, this is assuming the jam.
Yeah.
And trying to
assume the jam.
Trying to
limit the jam.
Trying to massage the product.
Massage the jam.
Such that you can consume the jam.
Okay.
Wow.
This
has gotten out of hand.
I like this a lot. No, all right. But
this is much more a Friday afternoon conversation.
Let's
I'm
make
sorry,
it
I'm
Friday.
taking it that way.
Bring us inside the minds of the SALT caucus. You're a member from New York. You're a tough guy. Hell no is what we're hearing. Not a dollar less than $40,000. You dealt with this all the time, though. How much of this is bluster? When you're alone in a room, are we really voting for the tax hike if you bring this down to $30,000? Maybe you're going to tell me yes, because you can't primary them with a MAGA candidate.
Okay, so the difficulty here is if you're a Republican and you're in the New York media market, you're one of the most sound, active politicians you can possibly be. You've been put through a meat grinder. You know what it's like to have the media blaring at you and to be like a unicorn in this space. So they're professional in how they're taking this. They're going to fight for as high a deduction as they possibly can because it benefits their constituents. That's really, and therefore benefits their politics and re-electability.
Sure.
And they are really proficient in how they act. They're sticking together, and they know how to negotiate. So is it going to be $30,000, or is it going to be some number between 30 and 40? We're going to see, but there's going to be a lot of performance between now and then, and a lot of heartache before the vote as well.
Well, and between now and then, there's other legislative efforts underway on the Hill and in the House specifically, where we saw a markup this week of the Clarity Act. This is the long-awaited market structure legislation, an iteration, shall we say, of the FIT 21 Act that passed while you were still in the chamber, trying to delineate authority between the SEC and CFTC here. Some concerns are being raised about this, though, and I wonder how you view the prospects, specifically the prospects of ultimately reconciling it with whatever the Senate would like to do on market structure.
So what French Hill constructed with this market structure bill in the House took what we did last Congress, built on it, refined it. I think it's a better product and much more balanced product than it was last Congress, and durable. I mean, this is a set of policy that can make its way unchanged, signed in law. What we saw with the markup yesterday is that the actions of the Trump family engaged in crypto has made it very difficult for pro-crypto Democratic members to participate in the policymaking here. So you saw complete performative acts around the president's family and their actions in crypto. That was what the whole markup was about. Not about the substance of the policy or some concern about the substance of the policy, but it was all about the politics of the Democratic politicians vis-a-vis the president and the president's family. That tells me it's not actually the legislation that's a problem. It's going to be giving Democratic members enough cover that they can actually participate and cast the votes they want to participate. And there are a lot of Democratic members of the House and the Senate that want to do that. Still, we saw 69 Democratic votes in the Senate, very high vote total for the stablecoin bill. I think the pairing of those two is inevitable post-tax bill. And I think those two getting pushed together as a single vote to go to a single bill to the president's desk is the most reasonable outcome of this summer.
So post-tax bill, meaning it happens this fall?
No, I
realistically, or really before the August recess?
I think what we're going to see is a major push to take the Senate tax bill through the House before 4th of July, and then July becomes crypto month. And the president have a bill at the end of the month.
Wow, we just named July. It's crypto month. Fantastic. Patrick McHenry, thank you so much. I didn't get a chance to ask you what would happen at the congressional dinner tonight at the White House. We'll do that next time you're with us. The great Patrick McHenry, Bloomberg Politics contributor. See you on the late edition of Balance of Power.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yes, indeed. Welcome to Bloomberg Business Week Daily. Carol Master, Tim Stanovic. We are back on the East Coast.
We are back. Glad to be back.
Is that all you got?
That's all I got.
It is fun to be back. Great to get some views from certainly the tech community in a big way, and we're going to try and work that into some of our conversations over the next few hours. In the meantime, interesting day. We're actually hovering near our highs of the session when it comes to the equity trade, but we have seen for a large part of the day geopolitical risks kind of keeping stock gains in check, but we did have a Treasury auction, and we did see Treasuries extend gains after a strong 30-year sale. So we're going to get into some of that in just a moment.
Yeah, we'll hear from Charlie for an update there. Also, we're watching the tragic news out of India very closely. The latest on what we know about the deadly Boeing 787 Dreamliner crash. We're going to have coverage throughout our 3 hours on Bloomberg Business Week Daily.
All right, and as we said, the Treasury auction and more from the economic world. Inflation in check, so too it seems, at least for the moment, Fed Chair Jay Powell's job despite renewed pressure from President Trump on rate policy. We're also going to add up what it means for the U.S. dollar, which has definitely moved on some of the day's economic news, and what it means more broadly for U.S. dollar-based investments. We'll get into that in just a moment.
2 percentage points of cuts is what the president wants, Carol.
I bet he does.
He went from a full point cut. And we're not talking, when I said this to somebody earlier, they were like, basis points? Did he mean basis? I said, no, 200 basis points is what he wants. So we'll talk about that in just a minute.
That's pretty aggressive.
Also, an IPO today is the very long-awaited debut of Chime Financial. It has happened, and shares are surging. So the big question, they leaving money on the table, Carol?
Yeah, that's a great question. All right, we're going to get into that. For a look more broadly at what's going on in today's trade, let's toss it over to Charlie Pellet.
Thank you very much. Welcome back to the two of you. We've got the Dow, the S&P, NASDAQ, all higher. Got to begin with the IPO, though. Chime, right now, it is up by 42.4%. Did jump as much as 66% in its trading debut after raising $864 million in an IPO that was priced above the marketed range. Again, Chime Financial right now is advancing. We got Chime up by 41.9%. I mentioned stocks higher. The Dow, the S&P, NASDAQ all advancing. The S&P right now up 18 to 6,040. That is a gain of 0.3%. The Dow up 75, up 0.2%. NASDAQ up 49. The NASDAQ Composite Index up now by just about 0.3%. Not all stocks higher. Not a broad-based rally. We got the Russell 2000 Index trading down now by 0.3%. 10-year 4.36% with the 2-year 3.91%. The 30-year 4.84%. Solid sale of 30-year treasuries. Reduced fears that spiraling deficits are causing investors to shun the maturity. Right now, again, the 10-year trading 4.35%. Gold up $27 the ounce, 33.82, up 0.8%. West Texas Intermediate crude up 0.4%, 68.43 a barrel, and Bitcoin now down by 0.5%, 108,381 on Bitcoin. Oracle ripping higher after earnings. Oracle shares up now by 13.8%. Adobe reports after the close of trading. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, it is indeed. All right, Charlie, thank you so much. Carol Master, Tim Stanovic back here on the East Coast on Bloomberg Business Week Daily. Hey, a lot going on this Thursday. President Trump says he is not firing Fed Chair Jay Powell again, but Tim, he is putting pressure on Fed Chair Jay Powell again.
We also got data that showed U.S. inflation remained muted in May. Also, weekly jobless claims rising to the highest since the end of 2021. And then, yes, the U.S. Treasury auctions continued. So a lot on the economic front, and that's why we have with us a Bloomberg News international economic and policy correspondent, Michael McKee. He joins us here in the Bloomberg Business Week studio. Mike, I want to just start with the data first, and then we'll get to 200 basis points and, you know, the latest from what we heard. We'll get to all of that. How would you characterize, given the inflation data that we got today and yesterday, the economy and where things are moving, at least in that direction?
Well, the word benign was tossed around a lot yesterday, and I think that's a fairly accurate representation of it. We were in an ordinary circumstance, you'd expect inflation to be continuing to fall, and that's kind of where we were going into the year. What people have been looking for is tariff-induced inflation, and there was less of it in both the CPI and PPI than people had anticipated.
Why is that?
It's probably a combination of things. Part of it is timing. Part of it is the limited number of tariffs that have actually been placed at the time. And it may be that some companies did not want to raise prices right away in case the tariffs went away. They didn't want to lose customers or make people angry, so they absorb it in their margins.
So maybe still early before we really see the full impact?
The general reaction of the economics community has been, hang on, wait for the June and July data when the tariffs really get put on and see what happens then.
What about the labor front, the weekly jobless numbers?
Jobless numbers are sort of telling the story that we already kind of know, that we're not losing workers. There's not a lot of layoffs going on. The rise in jobless claims last week that was mirrored this week, probably seasonally adjustment problems, because this is the time of year when people go off school payrolls, things like that, and they file for those who are eligible for unemployment benefits. So that isn't particularly worrying yet. We have seen a rise in continuing claims, so it's harder to get a job, but that's what companies have been saying, that they're not hiring, they're not firing. They're just waiting, as is everyone these days.
Mike, on the labor front, we heard from the president earlier today, and he said that his immigration crackdown is hurting U.S. businesses, essentially acknowledging that, particularly farmers and the hotel industry. He said policy changes are coming to address worker shortages. What are the data that you've seen when it comes to migrant labor, or when it comes to the farm industry? And then, I don't know how to characterize those workers necessarily, but are they broken out in terms of how the U.S. Department of Agriculture looks at it, or the U.S. Labor Department looks at it? Like, what specifically is he referring to here?
Well, what he was saying, he's heard from a lot of people in those industries. Because
so less about the data.
The payroll data we get is specifically called non-farm payroll.
Yeah.
And a lot of those people they work on contract. They're not on payrolls. They're not getting health benefits, things like that. So it can be very hard to track the people who work in agriculture. The agriculture department tries to do a bit of a census, but they can't really be completely accurate either, because a lot of those people don't want to be found. They don't want to be known, and it doesn't help you if you're a big farm owner to report you got a whole bunch of illegal people working on your property. So that's a little bit of a mystery, but it's fairly obvious what's happening, and we have seen a lot of anecdotal reports that there have been ICE raids, particularly in the San Joaquin Valley in California, and then everybody just disappears. All the workers go away for a week. They don't show up, and that has worried a lot of people, because it going to hurt the groceries that you're trying to buy.
So do we start to see that in prices? Is it possible we'll start to see that?
We did start to see it in prices. Grocery prices went up this past month, not a lot, but they broke a trend of falling. And so that's another area in which people are expecting to see that. Now, you have to realize that all these things come from different places. Like you've heard the avocado story. They all come from Mexico, and a lot of tomatoes and things like that. And early season fruits come from Mexico, and Mexico will have its own tariffs. And then we've got this beef screwworm infestation that has shut down the importation of beef in the southern United States. So that raises meat prices, but is not related to tariffs. So it takes a little while to parse all through these things. But we do know that steel tariffs were put on, for example, and we saw washing machine prices go up in the CPI by over 4%, and then we saw today steel prices went up in the PPI by more than 7%. So we are starting to see some aspects of tariff-induced inflation.
Two last things. Fitcher Jay Powell and the president making some comments. Is there anything smart that we should have around the pressure, or who might ultimately succeed Jay Powell when his tenure is over? Although he's still got some time.
He's still got some time. The president said again he's not going to fire him. I think we just get used to this. It's him waving the little squirrel or something around to distract us from what else is going on. Bloomberg reported this week that Scott Bessent is on the list. That's been talked about widely on Wall Street and in the economics group for a while, that he's on the list, not that he's necessarily going to take the job. And he said yesterday he would prefer to stay as Treasury Secretary, but they can change their minds.
Yeah, exactly.
Other than that, the lists are about the same.
All right, real quickly, 20 seconds, 30 seconds, the Treasury auction. Investors still want that 30-year.
Yeah, investors still want the 30-year, and it's important to realize that the 30-year it trades differently than the middle of the curve because there's a sort of different built-in demand for duration that needs to be satisfied, and the 2 years pinned by the Fed, so it's the belly of the curve that you watch, and that's where we've had some problems. But no, today we saw a nice stop through and a higher.
People looking long term, getting past today.
People
thinking
want
30-year.
People want those suckers.
They do indeed. Mike, thank you so much. As always, Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. Do want to point out the U.S. dollar did fall to its lowest in 3 years on that PPI data, while at the same time President Trump's tariff threats revived concerns over U.S. economic outlook. So together with jobless claims jumping to the highest since the end of 2021, although Mike just gave us some great perspective on that, the data pushed traders to add to bets that the Fed might be a little bit more aggressive this year.
Yeah, with a look at how FX and pressure on the U.S. dollar, we've got Jayati Bardwaj joining us, Director in FX and EM Strategy at TD Securities. She joined us here in the Bloomberg Business Week studio. JT, welcome. Good to have you. I want to start with the weak dollar. As Carol mentioned, I mean, we're seeing weakness that we haven't seen in years here in the U.S. Big picture, what is the signal that sends about the faith of the U.S. economy and the way that investors, both here in the U.S. and internationally, are thinking about the U.S. right now?
Thank you so much for having me. I think definitely the move in FX has been very interesting because we've seen yields go back up higher. You know, even equities have tried to go back higher to pre-Trump levels, but the dollar has just been collapsing. Nothing gets the dollar to rally. Strong U.S. data, hawkish Fed, tariff threats, you know, geopolitical uncertainty rising. Nothing is, you know, fueling any strength in the dollar. I think what this is indicating is probably a shift in global investor preferences. For the last 5 years, people have been long U.S. assets, and interestingly, they have been long U.S. assets unhedged, because you could also, you know, always rely on a very strong dollar return to get a nice boost to your portfolio. But that's not happening anymore. And from the data we have, we do see that investors are finally starting to change their hedging practices. They are now waking up to the fact that they cannot no longer rely on the dollar just coming back to its strong raging days, and they actually need to hedge that exposure. In order to do that, you need to be selling dollars in forward markets, which is likely what's structurally keeping the dollar so weak right now.
So that's the difference, the hedging that we're seeing that we haven't seen for a long time, where the U.S. was kind of Tina, right? The only, like, it just seemed like all investors wanted to be in dollar-based, U.S. dollar-based investments. So what we're seeing now is hedging, and that's making an impact.
Yes.
Is it a sign too? I mean, do you go as far, JT, that it's the idea that the U.S. is uninvestable? Tim and I like to ask this question because, yeah, it's a great headline, but it's more important. It would be a very different mind frame, investing mind frame.
I think that's the one question that, you know, we've been trying to answer. You know, the gap
the 30-year
between
Treasury auction just went well. Like,
yes.
So investors
People
still
saw that as investable.
Yeah, exactly.
So I would say the gap between the US and the rest of the world has been extremely wide for the last 5 years. I wouldn't say it has been completely bridged to zero, but the gap is definitely meaningfully shrinking enough from both sides. The US, thanks to its own policies, but the one silver lining from all of this is that it's actually forcing other countries to introspect. They're now looking at more fiscal spending domestically. They're actually also looking at cutting intra-regional trade, trade barriers. They're also talking amongst each other to, you know, have stronger intra-regional trading relationships. So that all is actually making the rest of the world more investable. I wouldn't say that the U.S. has completely, you know, given up its crown position. But I would definitely say that a lot more investable places are now coming up to the surface where they had been very underground for the last 5 years.
So is it, forgive me, Tim.
Well, is it about them being underground and becoming above ground in recent years? Or is it about risks that investors see to the U.S. in your view?
Great question.
I think it's both coming together at the same time. And you could say the source is the same, right? Because the U.S., thanks to its own policies, is actually now forcing the rest of the world to step up. The European Union is taking a much more proactive approach to talks with Russia, Ukraine, something they have not done.
Right.
The world realizes they can no longer just, you know, solely rely on the U.S. for everything. and they are being forced to step up and actually do a lot more themselves.
Well, just to push even further, I mean, and Tim knows I've asked this a lot coming off of Milken, which was back in May last month, but the whole idea and what we kept hearing from a lot of folks was that it's not the case of the U.S. being uninvestable, it's just that investors became overbalanced in their portfolio, overexposed, I should say, to U.S. dollar-based investments, and so now they're, reallocating and rebalancing, but it almost felt like, wait a minute, is that just an excuse to kind of cover the idea that people are turning away from the U.S. and not so comfortable with the U.S. and risk? And that's what. So tie that in also, if you would.
So for the last 5 years, the U.S. has been relying on the kindness of strangers because all the global portfolio managers and the savers of the world in Europe and Asia, they all had been piling money into the U.S. You had the chase for carry, you had the commodity shock where the U.S. was energy independent, and you had an exceptionally strong and growing U.S. So all the three factors which were driving investment in global markets resided in the U.S. with the U.S. So everything was a U.S. investment. U.S. equity investment has ballooned. In fact, foreigner investment holding of U.S. equities as a share of market cap has also been going higher. That also actually led to a very strong and overvalued dollar. So the overvalued dollar went hand in hand with very strong portfolio investment into the U.S., and that's why both of them are being questioned at the same time. The dollar as a diversifier, as a safe haven, we see those correlations are breaking down. The dollar actually, on some days, I actually think is trading a lot more like an emerging market than it is like a safe haven, unfortunately.
So wait a minute. So net, is this better for the global investment environment in the long term? Is this not so great for the U.S. investment market? Is it also all the result of President Trump?
I think net, it's a healthy recalibration of markets. Like the last 5 years, we've all come to points where we're like, is the U.S. markets, are they overvalued? Are they bubbled up? Are valuations expensive? I think this was a very healthy recalibration that was needed. For the last many years, most markets have been a pure dollar beta. What are U.S. rates doing? What are U.S. equities doing? What is the U.S. dollar doing? But I think this levels the playing field a little bit now, which is healthy, I think.
Is it the result of President Trump and his policies?
I think it is definitely. It is. One source is the policies of the current administration and just the volatility associated with it. The one interesting thing in all of this is that while the U.S. is trying to negotiate with 90 countries in 90 days, those other countries have only one country to negotiate with. So that is also one factor which is equating the U.S. with the rest of the world at this point.
Just about 45 seconds left. I know emerging markets and FX is what you focus on. Is Bitcoin on your radar at all in that context?
We prefer not to comment on Bitcoin. That's not under our purview of coverage. But I would say that when people are talking about the safety of U.S. assets, things like gold, cryptocurrencies, they do come up a lot more than they usually have. My answer is that while I cannot comment on cryptocurrency, I can say that you can potentially look for other alternative safe havens in FX. That is Euro. Euro is clearly shining out as one of those, the Japanese yen. We do see scope for them to see more upside this year. In fact, one currency, or one sector of currencies where you can see a good upside is Asia and Aussie, which is something which is not talked about a lot, but I just wanted to leave it at that. That's something which could see big gains at the end of the year.
Jayati Bhardwaj, thank you so much. Really appreciate it. Over at TD Securities, coming up, the latest on that Boeing plane crash, the Air India crash. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with that Chime Financial IPO. Shares surging now. We've got Chime up by 44.1%, had been up as much as 67% in its trading debut after raising $864 million in an IPO that was priced above the marketed range. Chime, of course, the financial technology firm. Right now, Chime is up by 44.4%. The Dow, the S&P, NASDAQ, they're all advancing, with the S&P higher by 18, gain there of 0.3%. Dow Industrials up 73 now, up 0.2%. NASDAQ Composite Index up 47 for NASDAQ. That is a gain of 0.2%. On an update for the rest of the market, the Russell 2000 Index is down 0.3%. The Bloomberg Mag 7 Index just about unchanged on the day, up by less than 0.1%. The 10-year 4.36%, with a 2-year that's currently yielding 3.90%, and the 30-year 4.84%. Gold is up $29 the ounce to $33.84, up 0.9%. West Texas Intermediate crude 68.20 a barrel, up now by just about 0.1%. Bitcoin just below $108,000. Bitcoin down 0.9%, 107,923 on Bitcoin. Oracle, after earnings, surging by 13.4%. Adobe reports after the close of trading today. Adobe up by 0.3%. Recapping, Chime Financial up 44% in its first day of trading. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here at Bloomberg headquarters in New York City. I will say, safe to say, that our focus has been certainly overseas following a deadly crash in Air India flight, more than 200 bodies have been recovered at the crash site of a London-bound Boeing 787 Dreamliner operated by Air India, with at least one survivor. We're talking about Air India Flight 171, which Tim crashed really shortly after taking off in India.
Yeah, I think what's so notable about this is it's the first ever complete loss of a 787. It's one of the deadliest in the past decade when it comes to civil aviation. This is a plane that has been around for years, more than a decade at this point, Carol. Mm-hmm. And it is one that essentially had a pretty great track record. Very modern controls, very modern components, very modern construction. Until the 737 MAX, it was Boeing's newest plane.
Yeah, and their most advanced twin-aisle aircraft, right? So this has certainly been one in the fleet that has certainly stood out. We should point out, in terms of details, there was, as we mentioned, at least one survivor in the crash. This was coming from India's Federal Home Minister, Amit Shah, talking to reporters in Ahmedabad. Shah, who met with the survivor and visited the crash site, said the official death toll will be announced after DNA verification. So we are being very careful in terms of what we report. But as we know at Bloomberg, you know, we get into the business and market implications of any story like this. But at first and foremost, this is certainly a story of people and loss of lives, Tim.
Yeah, Boeing CEO Kelly Ortberg said that he has spoken to the chairman of Air India. He says that the Boeing team stands ready to support the investigation. We've got with us an update on the Boeing side of the story. Eric Johnson is Bloomberg News team leader for Space Aviation Defense. He's also the editor of A Global Business of Space. He joins us here in our Bloomberg Business Week studio, usually based in Seattle, but he's here in New York. Eric, good to see you. A really tragic day, a sad day for essentially the entire world and anyone who covers and thinks about aviation. Human loss, tragedy. It's still the early part of the investigation here. We won't know the direct cause of this for quite some time, likely. But there's a lot of video, and that's sort of unique to in the past few years of what we've come to find as investigations into these aviation disasters. What do we know thus far about how this happened?
It's an incredible point. There is video that showed the plane just sort of slowly descending right after takeoff and plunging into this densely populated neighborhood, into a school. And, you know, you see this horrendous footage of emergency workers combing through wreckage, dousing rubble, the jet's tail sticking out of a building. And like you say, the 787, I mean, this makes it even more unexpected. This is, you know, the most advanced wide body in the fleet, a marquee jet. So it's very surprising for everybody.
You know, when you look at the footage, it looks like a kind of clean descent. So how do you look at something like that? And certainly from the Boeing perspective, trying to understand there's so many moving parts on a plane, and there's the plane and there's the mechanicals, there are the engines. We know our team has talked a lot, or George Ferguson has talked about the GE engines that were also on board. How do you think about all of what is involved and how much is kind of initial mechanical problems perhaps, or something in maintenance issues? I mean, how do we start to kind of unfold? How do officials start to unfold what happened?
Investigators are going to be combing through the wreckage. They'll be talking to at least one lone survivor who miraculously seems to have emerged from this. They'll be piecing together this over the coming weeks. NTSB and FAA officials are en route. India, per Annex 13 and ICAO, will be leading the investigation. They'll find the black box, but it's important to note it's early. We've just seen the footage. We've just, kind of piecing together what happened. So there's no sense at this point of even potential causes. There was no obvious sign of distress on the aircraft, but it could have been any number of factors that contributed to this. We'll find out about that in the coming weeks.
I think what's so notable about this in the context of Boeing's recent history of complete hull losses is that this is a plane that has been around for more than a decade. And yes, it has had its share of challenges when it comes to manufacturing. Early on, there were battery issues. I remember that right when the Dreamliner came out. That was 15 years ago at this point. But there's never been a complete loss here. What does it mean that this was a 787 Dreamliner?
I mean, it couldn't come at a worse time, right? You're walking right up to the Paris Air Show, which is the industry's big conclave annually. Boeing's looking to seize momentum by collecting major orders for its aircraft at the show. Kelly Ortberg has taken pains to stabilize production on the 737, its cash cow narrow-body model. There were signs of momentum, signs of progress. Investors were finally breathing a little bit of relief. And of course, there's turmoil. There's trade turmoil. There's questions about consumer demand. There's always that in the aviation industry. But this sort of, halts that clear momentum walking into the show and sort of thrusts Boeing right back into the spotlight.
Tim and I actually flew on a Boeing 737 MAX.
Yeah, MAX 9.
A MAX 9. And both of us, thought, boy, this is a really good-looking plane. It was super comfortable. There just were a lot of aspects to it that you can see, despite all the turmoil, a really sharp-looking plane. I do want to just throw one other aspect of the crash. The pilots apparently in command issued a Mayday call immediately after takeoff to air traffic controllers. That's according to India's civil aviation regulator, and that the aircraft was in command of a captain who had 8,200 flying hours and first officer who had about 1,100 flying hours of experience. This came from the Directorate General of Civil Aviation. From Boeing's perspective, as Tim said, it's been a rough couple of years for Boeing specifically. The 787 Dreamliner, how important a plane is it to Boeing?
Oh, it's one of the marquee jets in its twin aisle fleet. It's crucial for long haul travel. It's been very popular with airlines, right? It's the lightweight composite makeup, is good for fuel savings. It's a very popular jet, good orders and deliveries on that jet. So it's definitely a setback, and it's going to take a while to figure out how they move forward.
I think from a passenger perspective too, at least for me, it's always an exciting jet for me to fly. People might not always know the planes that they're in, but some of the marquee elements of a 787 are window shades that don't actually close, but that tint, and also an air pressure a cabin air pressure system that actually makes it more comfortable for passengers to fly because it essentially puts you closer to sea level than a traditional cabin pressurization. I mean, this is like a very luxurious plane to fly.
It's also, it's not quite as noticeable perhaps as like the humpback 747 that
Correct,
pretty much anybody can make out in the air, but it does have that swept back wing design. As you say, it's got these, sort of unique, passenger focused, elements to it that people really enjoy and very often can, recognize.
So, there is a story, too, on the Bloomberg, came out just before the open this morning, the FAA proposing adopting a new airworthiness directive for certain Boeing 787-8, 787-9, and 787-10 airplanes. And this was prompted by report of multiple instances of loss of transponder for planes entering airspace in the presence of continuous wave interference. And they said if not addressed, it could cause unenunciated loss of modest transponder function in traffic alert and collision avoidance system advisory messages. Forgive me for all the techno talk, but just to get an idea, what do we need to know about this?
It's very technical, but the point is that came out, that was known. It came out, and there's no direct link to this air disaster, the Air India disaster. So we'll see if there's any sort of conjoined element, but as of right now, it's too early to say.
What about the GE side of this and the engine side of this, right?
Crucial for GE, the 787 has 2 engine variants. GE was on this jet in particular.
And GE shares are down about 2.3% today.
Good note. And the question there is again, we don't know what caused this. So it could have been a bird strike. It could have been any number of things. And so it's too early to say the exact implications for GE or Boeing, but we'll be getting more details on that.
Air India is also in the midst of a refresh and trying to turn its image around. A CEO who joined just a few years ago, ownership by the large Tata Group in India. What do we know about Air India? And it's not necessarily its history, but how it's viewed in the airline industry.
Well, it's a major carrier. They open routes into Gatwick. That's part of the if you look at the passenger makeup, you have British nationals on here, obviously Indian nationals and others. And so, they've been thrust into a spotlight. It's a very difficult position to be in. The Indian officials, we've heard from some officials on the ground, Modi made some statements, and so they're taking it very seriously. They're all going to collaborate with Boeing and the FAA, NTSB, and others on the investigation.
Just to take a step back, when this story came out, I think I was in our makeup room, and they're like, what's going on with the skies? And we kind of got into a conversation of the skies being pretty crowded and so on and so forth. I want to take a step back, if we may. Have we gotten to a point, especially around major cities, where things are just too congested in general? Maybe we don't have the employees, the systems are old. Like, how do you look at kind of global flight today? Because, man, we just came back after taking several flights in the last week. It's something, the safety, security of it, we take for granted. But give us some perspective, context in terms of flying today.
I think it's on top of mind for Americans. The skies are congested. Bedford, Trump's pick to be the potential head of FAA, has talked about this issue of modernizing air traffic control. There's shortage of air traffic control workers. There's a clear narrative in this country right now of what can we do to invest in and modernize and upgrade our infrastructure to avoid incidences of this kind in our own skies.
All right, we're going to leave it there. Certainly, as you rightfully mentioned, Eric, we've got to wait a lot more information, investigation. It's just beginning, and it'll certainly take some time, as it should, to make sure there's a true understanding. But again, our thoughts go out to all of the families that have been impacted by this deadly crash. Eric Johnson, team leader for space aviation and defense and global business of space, editor here at Bloomberg News, joining us here in the studio.
Hey, still to come, a check on Wall Street. Kind of a mellow day of trading. Not so, though, for one stock that made its debut. We got all the details on Chime Financial's IPO next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. S&P right now up 16 to 6,038. That is a gain of just about 0.3%. Dow Industrials up 69, up 0.2%. And NASDAQ up 34 for the NASDAQ Composite Index, a gain right now of 0.2%. 10-year at 4.36%, the 2-year 3.90%, the 30-year 4.84%. Gold now up 0.9%, 33.83 the ounce. West Texas Intermediate crude down 0.3%, 67.93 a barrel. Chipmaker Micron Technology says it will spend about $200 billion on U.S. manufacturing, research, and development. Also, we do have shares of Micron Technology right now. They are lower, down 0.4%. Rival AMD down 2%. Intel up by 0.2%. First day out for Chime Financial. Stock in its IPO up now by 46%. And President Trump has reiterated that he does not plan to fire Fed Chair Jay Powell, but he is complaining that the Fed has not moved quickly enough to cut rates. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie's setting us up so well because we do want to talk about that IPO today. Of course, Chime Financial making its debut after the offering drew investor demand for more than 20 times the available shares. At least that's, I think, according to some of the latest reporting we've seen on it. Let's get into it. The stock, as Charlie mentioned, up about almost 46% as we speak. Let's get to what you need to know. Bloomberg News consumer finance reporter Paige Smith is in the house, along with Anthony Hughes, Bloomberg News ECM equity capital markets reporter, as we said, both here in studio. Anthony, we want to kick it off with you. Tim reminded me, we have been waiting.
Yeah, I think there were reports in like 2020, 2021 that this company was going to IPO. So it's been many years in the making. Anthony, I want to take a step back and talk about the IPO market, and then we'll talk about Chime specifically. But I look at today's move, up as much as 66%. Circle last week was up as much as 235% on its first day of trading. What's going on here where there's such a divergence from the IPO price versus what investors are buying on that first day?
Yeah, so the IPO market has improved a lot in just the last month or so. I mean, really, even 2 or 3 months ago, it was a pretty dire situation in the IPO market. But, you know, you have to put all this in perspective because really we're seeing a few IPOs and some have done really well. And really, Circle last week got everyone very excited, and in CoreWeave, which went public in March, was initially very poorly received, and now it's just taken off in the last month or so as people have sort of changed their perceptions a little bit of that company. So those two deals have certainly added a lot more sort of animal spirits.
It does seem like there's a mismatch in pricing here from the bankers who are actually, the whole point of this is to an IPO, initial public offering, right? You raise money for the company by selling shares. You raise money at that IPO price, but then if you see it trade on the first day of trading up 230%, maybe you're thinking to yourself, wait a second, I could have raised a lot more money in this IPO.
Bankers.
Well, it is a common question, yes. It's a common question, but I would actually put it in perspective and say that's a little bit, not necessarily the way you should look at it because, you know, we do see these IPOs come out of the gates very strong for technical reasons. I mean, when you do an IPO, when you actually raise the money, you have to think about what the issuer is trying to achieve, and they want to get in as investors, as new investors, and sometimes get existing investors to put more money in, get in what we call quality investors. And quality investors from the perspective of people in the business of equity capital markets is long-only investors. They're investors that have a long-term view. They've done the work. They've worked out. They've looked at the company. They've looked at the fundamentals. They've actually looked at where they think how fast the company's going to grow in the next few years and what it's worth. Whereas opposed to, say, on the first day, that may not be the sort of people who are buying in. I mean, you look today, and I think there's been a lot of comments from even bankers I know on these deals, and they'll say, like, wait a month or so and see what happens then. And I think even some of the recent IPOs, you'll see that some of them have pulled back a little bit. So, you know, it's worth not getting too carried away by that one-day performance, I would argue.
You don't want investors bailing as soon as the IPO expiration date is up. Paige, come on in, because why was now the right time? What's going on in Chime's business that we need to know? Talk to us about growth and metrics and why this is maybe a good time for them to go public.
Well, Chime is a really interesting company in that they're really going after a lot of customers that maybe would have banked with, like, the Bank of Americas of the world or the Wells Fargos. It's folks who are make around $100,000 or less a year. And I believe it was in their S1 or their filings that said that's like 75% of U.S. consumers, that's a huge swath of the population that maybe don't feel as like seen or as represented in these big behemoths of Wall Street banks that we know so well and talk about. But it's an interesting time for fintech too, right? Where there have been these folks that have gone public already, but are maybe there are a few waiting in the wings. Klarna comes to mind, but it's an interesting time for these folks to stay. We're on a positive growth trajectory. We see opportunities for more revenue. We're going to take this opportunity to move forward.
Paige, I heard you make the point earlier, reminding everyone, don't call this a bank. Chime is not a bank.
Correct.
But they provide a lot of banking services.
They do.
So they outsource, they essentially have a partnership or partnerships with banks, but they do a lot of the functions for their customers that traditionally we would know from banking.
Yes.
Savings accounts, checking accounts, debit cards, and the like.
And it's interesting, that's a good point as well, because it really speaks to how they make money. One of the primary points of how these folks make money, which Chris Britt, the CEO, has repeatedly said in the sort of roadshow leading up to this day, is that they are a payments revenue business. They don't make their money in the same way that banks do. They make their money every time a Chime customer swipes, taps, uses their debit and credit card. And they do work with banking partners
These
to
are
be able to
so-called interchange fees?
Correct.
Okay.
They partner with a couple of banks that are able to offer these banking services, so to allow them to offer the banking services.
One more question to you before we go back to Anthony. And they talked about the CEO and co-founder, Chris Britt, actually joined the Bloomberg technology team earlier.
And you and I have spoken to him quite a few times over the last year. Many times, yeah.
Yeah, and he talked about growing their active member base by over 23%, so that's increasing year over year. Do they hold on to members once they get them, or is the churn high? What do we know about that?
I have not looked at that data in particular, but they did point out some really, promising growth potentials in this area. Another offering they have, for example, is earned wage access, or this idea that you as a consumer can get your paycheck early.
All right, so good stuff. So they're investors are eating it up, at least today. Anthony, in terms of what we have seen in the broader IPO market, does what we are seeing with Chime encourage others potentially to come to market?
Yes, well, I think they say in financial services that past performance is not a guide to future performance, but it is a guide to future deal making. So I think that we are going to see more activity in the coming months. The only problem here is that we're coming into the summer and things slow down, and there's also a few public holidays coming up over the next month or so. So, there's not actually a huge, and ironically, we're having such good performances from some of these IPOs, but we haven't actually got a huge pipeline of companies that are really ready to go. In fact, there's very few.
We do not.
And so we'll be looking probably over the next few weeks for more companies to file, to go public, and maybe a few more interesting ones. I mean, obviously Klarna and StubHub are two of the bigger ones that are on file already, but they've been put in. They've been delayed since since what happened in April. But they could come back potentially, maybe.
Is it discouraging that the stock was up as much as almost 67%, up 66% its highs? It's now up about 43%. Still a strong gain, but is it? I don't know. In IPO world, give us some context. Is that disappointing that it's moved down? I mean, that's a pretty.
I think it's nice.
Big move off its high.
Yeah, I think it's nice relative to what we've seen over. The last 3 or 4 years when we've had things that have not necessarily done that well out of the gate. And sometimes they've done better longer term. But, it's not, I think maybe going into today, you might have thought it would have done even better than that. That's for sure, just because Circle and a few other companies did well. But, I think you have to think that, Circle does seem to have some sort of scarcity value. That's a good word that people use. And, does Chime have that? Well, I think it's really brilliant what they've done to get that many customers. And they may be sticky to some extent. And they have a lot of opportunity to add products. So it is an interesting business, but it's not a business that's getting as much it's not seen as special or as maybe it's an early generation of fintech. I suppose crypto has got a bit more of a meme excitement factor around it.
Speaking of excitement, Paige, I look at the DES page on the terminal, $14 billion valuation for Chime, up 42% in trading today. I think years ago, this company was worth over $20 billion by venture capitalists. Just 20 seconds. Talk to us about the ups and downs here.
Yeah, in 2021, there was a valuation that it was valued at $25 billion, just to be exact. And yeah, it is certainly down from those highs, but keep in mind the tenor at that point in time was one of a lot of fervor and excitement and just very frothy, if you will, in the fintech land.
She didn't say stonks, but we know that you're talking about
I think there was a bubble.
Yeah,
Her thought
2021.
process.
I've heard that.
Bloomberg News consumer finance reporter Paige Smith and Anthony Hughes, of course, ECM reporter here at Bloomberg News, both in studio. Coming up next, more of the gainers and decliners.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. We've got just a little bit more than an hour to go until we wrap up trade on this Thursday. Meantime, as we look at markets, we're pretty much just off our best levels of the day, but up about 18 points on the S&P, just a little bit higher. There are 83 points to the upside when it comes to the Dow Jones Industrial Average, and the NASDAQ 100. We're looking at a gain of about 44, 45 points, but again, on a percentage basis, just up about 0.2%, but certainly more bullish, she says, than we saw earlier in the session.
Okay, we'll see what happens.
Yeah.
We'll see what happens. Along with Carol Masser, let's take a look at some stocks on the move today. With us is the Bloomberg News cross-asset reporter, Denitsa Sikova. Denitsa, are you taking us back in time
Yes, I'll
to
take
like
you
2021 right
back
now?
in time to 2021 and even further back.
I don't want to go there. I don't want to go there.
Yes, same. I'll go further back, talking about Pokemon cards. So we're looking at GameStop.
Oh my gosh, all right, that is further
We're looking
back.
at GameStop. It's down as much as 25%. There are two developments. So first, the company is focusing on collectibles and specifically trading card business. We know it's been very popular for Pokemon cards. There have been lines. People have, it's made up 29% of the revenue. In the first quarter, it's been a big part of the business. But investors, needless to say, didn't take that very well. The big drag started earlier this morning when we heard the company announce plans to offer $1.75 billion worth of convertible bonds, which would make the video game retail one of the biggest issuers of equity-linked securities. We know this is a very popular trade book. More and more people have been using it, but the name that obviously comes to mind is Michael Saylors and his company Strategy. They allowed this to happen in March, and this is the second time they do it, but it hasn't been taken well. The company is down about 30% year to date, so pretty rough start.
It's like borrowing money to buy Bitcoin.
Exactly.
Right? Essentially.
Pretty much, yeah.
And, as long as Bitcoin keeps going up and up and up, good trade.
It's usually
good.
For strategies, he's been great.
But, if something happens, not so good. I'm just going to point out for GameStop, almost 12% of the float is shorted. So investors continue to, have a little bit of a skeptical view on this one.
For sure.
Say that?
You just did. Yeah.
Too late.
I'm not going to stop you.
Horses left the barn.
All right, a couple stocks in the biopharma space that you've got your eye on.
Yeah, let's talk about BioNTech. The ticker is BNTX, and then CureVac, the ticker is CVAC. So BioNTech agreed to buy CureVac, which was a former rival when it comes to the COVID vaccines. We know, obviously, BioNTech partnered with Pfizer and became one of the biggest vaccines in Europe, and then CureVac's vaccine actually wasn't approved, but they have pivoted away from infectious disease work and focused on cancer immunotherapies, which is something BioNTech is expanding, so clearly that's a good acquisition for them. What we're seeing is that the reaction for BioNTech wasn't that big. It was about 2.5%, now it's flat. But CureVac had a great day. It was up 40%, now it's 30-something.
It helps to be the target, right?
Exactly. And obviously the company, after COVID, didn't get the same type of boost as most vaccine makers that were approved, so that's a much-needed relief there.
What?
M&A. Usually it's M&A Monday, but it's Thursday, and we're getting some news.
Yeah, maybe, a little slow to the gate.
Maybe. Hey, Oracle, also on your radar today.
Yes, another big winner. The ticker is ORCL, soared to record high, and it's based on a 70% projected gain in cloud infrastructure. So the stock is up about 14% today, 20% year to date. So you can see how one-day move really changed the picture for the stock. The company has been gaining traction in its effort to become a major player in cloud computing. And it's kind of an interesting niche in the AI boom. It's just renting out computing power and storage. And it has struck very important partnership. First, it has the OpenAI partnership, the Stargate. It also has a partnership with Amazon. It has a partnership with Meta Platforms, with Elon Musk XAI. So clearly a lot of optimism. The company had quite a few difficult months, and but that cloud computing business is definitely adding a big boost and the stock is up 20% year to date.
I love this. I feel like coming off of that Cisco event that we did in San Diego, we talked so much about, Cisco historically networking, routers, but really infrastructure, and they seem to be firing on a lot of cylinders when it comes to the AI infrastructure build.
Yeah, and here you have Oracle CEO saying that Oracle could become one of the world's largest cloud infrastructure companies. Remaining performance obligations reaching $138 billion in the quarter that ended May 31st. It's pretty remarkable.
Yeah. A lot. Sure. I think it's the #1 gainer in the S&P 500. So now the stock's up about 20% year to date.
Really big gain.
That's a good one. Hey, Bloomberg News cross-asset reporter Denitsa Sikova, thank you so much for that. Hey, for more conversations like this one, check out our Stock Movers podcast. It is a look at the gainers, the decliners, biggest winners and losers in the stock market. Listen to Stock Movers. You can find it on Apple, Spotify, or anywhere you get your podcasts. Yes?
We got a great program.
You awake over there?
Coming up a little later.
You sure you're awake over
I'm awake. Yeah, there's a lot happening. We are expected to potentially hear from the president.
It's almost Friday, buddy.
It's almost Friday. He's signing some executive orders a little later. That was scheduled for about 3 o'clock. He's running a little late. If he does make comments, we will bring them to you.
All right, for those watching on TV, the close is coming your way. Be sure to check it out. But also, feel free to stay with Tim and me. Bloomberg Business Week Daily continues.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The U.S. and Iran nuclear talks are still on for this weekend, and there's a lot riding on them. President Trump today.
Well, I'd love to avoid the conflict. Iran's going to have to negotiate a little bit tougher, meaning they're going to have to give us some things that they're not willing to give us right now. I'm the last person. I've kept us out of wars.
CBS's Jennifer Jacobs at the White House.
We are told that the 6th round of U.S.-Iran talks will go ahead on Sunday. What I'm being told by people outside of the administration is that it's possible that Iran has overplayed its hand here. President Trump could argue that he gave Iran a credible deal.
In the meantime, CBS News has learned Israel is fully prepared to launch an operation into Iran. U.S. investigators are on their way to India to assist in the investigation into the crash of an Air India plane. CBS's Chris Livesay has more.
It crashed just shortly after takeoff from Ahmedabad. The nationalities of the victims ranged from Indians to British citizens. The plane went down in a densely populated area just outside of the airport.
At least 240 people were killed. Homeland Security Secretary Kristi Noem held a news conference in Los Angeles today where Senator Alex Padilla tried to address her.
Hands up, hands up. Also, I want to talk Senator Alex Padilla. I have a question for the Secretary.
He was forcibly removed. On Capitol Hill, Defense Secretary Pete Hegseth was grilled again today about the deployment of troops to Los Angeles.
California's Salud Carbajal, who served in the Marines, called the deployment political theater and asked Hegseth if the Marines have orders to protect property, quote, by any means necessary.
Sir, I would say the ICE officers and police officers being attacked is not political theater. The National Guard and Marines.
Just yes or no. Just yes or no. When Carbajal asked if the Marines are authorized to fire warning shots, Hegseth was clear.
No.
Christopher Cruz, CBS News.
3 Democratic senators were called today to testify about their sanctuary policies. New York's Governor Kathy Hochul being questioned by Florida Republican Byron Donalds.
I never remember you calling for secure borders at all, Governor Hochul.
Certainly have.
That doesn't sound like him to my memory.
Many conversations I had with the White House. We asked for federal resources. I mean, you're putting a federal problem on our laps, and you know what? It gets old after a while. I wish you would just do your job.
If your party actually would do the job of securing the nation the way President Trump has now had to do twice, we wouldn't be in this predicament.
On Wall Street at this hour, the Dow Jones Industrials up 80 points. This is CBS News. Jennifer Kuiper reports on a ranking of companies shaping today's global markets.
Topping the annual Forbes Global 2000 list for the third year in a row, J.P. Morgan Chase. It gained 30% in the past year and has over $4 trillion in assets. Forbes writer Hank Tucker says also on the list,
Berkshire Hathaway at number 2, and the top 10 are also Microsoft and Amazon, some international, overseas-based giants as well.
Significant changes in company rankings include NVIDIA at number 47, which moved into the top 100 for the first time. Jennifer Kuiper, CBS News.
The CIA today released 1,500 pages of previously classified documents relating to the assassination of Senator Robert F. Kennedy. They revealed that he met with the CIA to share his observations after a trip to the Soviet Union in 1955. That information of high value during the Cold War. The documents also revealed the CIA investigated whether his killer had ties to a foreign power. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about an hour away from the closing bell on this Thursday. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker studio here at Bloomberg headquarters in New York City. We're pretty much holding on to our gains of the day. I look at the S&P 500, more names, about 290 in the S&P 500 to the upside, 212 to the downside, but there's a lot going on. It's a busy Thursday.
It is. Hey, we're going to bring you the latest on the Air India tragedy. Julie Johnson is going to be joining us from Paris. We're going to have George Ferguson from our Bloomberg Intelligence team from England a little later in our program as well, so we'll keep you updated on everything happening there.
Yes, indeed. Let's get to the markets. Let's get to Charlie Pellet with a check on the trade. Hey, Charlie.
Well, hello there. You mentioned it absolutely correctly. Lots of moving parts to this market today. Earnings, economic data, sale of 30-year treasuries. That sale was solid, reducing fears that investors are shunning the maturity due to spiraling deficits. Stocks higher. S&P up 20 right now at 6,042, up 0.3%. We've got the Dow up 88, up 0.2. NASDAQ right now up 0.3%. The 10-year, 4.35%. The 2-year, 3.90%. And the 30-year, 4.84%. Gold up $31 the ounce, 33.86. That is a gain of 0.9%. West Texas Intermediate crude oil, a little change right now, 68.16 a barrel. And Bitcoin now down 1.3%, 107,500 on Bitcoin. A single passenger survived that fiery crash of an Air India passenger plane in the northwestern Indian city of Ahmedabad, killing more than 240 people. That plane bound for London. It's not clear what may have caused India's worst airline disasters in a decade. This was the first crash of a Boeing 787 Dreamliner since it went into service. Boeing shares down 4.8%. First day of trading for Chime Financial up by 39.2%. And Adobe reports after the close up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Just in the last couple of hours, we're seeing some shocking footage, I think, to a lot of people out of Los Angeles. U.S. Senator Alex Padilla of California was forcibly removed from a press conference held by Homeland Security Secretary Kristi Noem, his staff posting video of it. With more, we head to the Bloomberg News Washington, D.C. Bureau and to Joe Matthew, the co-host of Balance of Power on Bloomberg TV and radio. Joe, the video, I think, is pretty shocking to see of a senator being handcuffed and forcibly removed, pushed to the ground by at least one member of the FBI. We did see the Secret Service out with a statement that they said they thought Senator Padilla was an attacker. What do we know here?
Yeah, it's interesting to read the statement from Homeland Security, Tim. It is a shocking video if you watch it. I don't know if this is something that we can get our eyes on here, but it's not just that he was removed from the room and being pushed by a couple of men in plain clothes. We don't know exactly what authority they had to remove him, but he was brought outside of the room after identifying himself as a senator, saying that he had questions for Secretary Noem, forced to the ground, rolled over on his belly, and handcuffed. We know since then that he has met with the secretary. Apparently, she brought him into a room for a 15-minute conversation. It is unclear exactly what they discussed. But yeah, the statement from Homeland Security says Senator Padilla chose disrespectful political theater, interrupted a live press conference without identifying himself or having his Senate security pin on as he lunged towards Secretary Noem. We don't see evidence of lunging in that video. We also do hear him identify himself, so the statement is a bit curious at this time. That's a really good point. Democrats are outraged right now. If you watch what's happening on the Senate floor, they're moving into the chamber to protest what took place. Senator Booker, I should say, along with others, including Adam Schiff, are speaking live on the floor in protest here. We heard from Chuck Schumer as well, saying it made him sick to his stomach.
Yeah, it's pretty difficult to see. We're trying to get that video up for everyone who is watching on Bloomberg, on YouTube, and on Bloomberg Originals. In the meantime, Joe, I mean, what has been the information flow, the conversations between officials of that state, of the city of Los Angeles, and federal officials of the Trump administration?
Yeah, here we go with this video. If you're with us on Bloomberg TV or on YouTube, it's not easy to watch this, and I'm not sure we've ever seen anything like this for a United States senator. This is a small club in Washington, D.C., and I would not be surprised to hear Republican senators expressing some outrage over this as well, because they do tend to look out for each other. Communication between state officials in California and at least the administration, Carol, really hard to quantify. I mean, we've heard the governor, Gavin Newsom, and Donald Trump, president of the United States, arguing about whether and when they even spoke on the phone. So I think that's part of the issue here that California has, is that the administration is simply acting unilaterally and not in concert with the state government or certainly the city government. This again happened in Los Angeles, where we've got a curfew in place now and a White House that's taken a lot of credit for what the president says is avoiding the destruction of Los Angeles, knowing that the protests were held to a pretty small area of the city.
Joe, I'm not sure if I'm making a bad assumption here. I mean, he was handcuffed as he tried to confront Homeland Security Secretary Kristi Noem as she was briefing reporters on what is going on in terms of the immigration crackdown in L.A. Was he charged with anything, or is there anything? It was just a case of removing him. No, it doesn't look like he was arrested. Okay.
Yeah, he was detained briefly. This could have been 10 minutes, Carol, 15 minutes. That's unknown, because it was shortly after that he found himself in a room with Kristi Noem, who we're looking at there. What they discussed is unclear. Homeland Security is clearly trying to cover itself here. Senator Padilla's office did issue a statement, by the way, that we should notice. He said that he was in the federal building to receive a briefing and was listening to Secretary Noem's news conference. He tried to ask a question and was forcibly removed by federal agents, forced to the ground and handcuffed. He is not currently detained, and we are working to get additional information. I would expect a very big round of interviews from the senator once he's ready.
If you're watching on YouTube or Bloomberg Originals right now, the video that we have cuts off as soon as he's escorted out, but another video that's embedded in the Bloomberg News story on the terminal and at Bloomberg.com shows him taken into a hallway and actually being held down on his belly, as you mentioned, Joe. It appears to have two FBI members of people wearing bulletproof vests. I see a badge, I see a gun, I see two uniformed folks holding him down and handcuffing him, one of whom says has a vest that says FBI on the back of it.
That's the first time we saw credentials, Tim. You're right. Once he got into the hallway, where I suspect uniformed officers were standing by for security, whether it was her staff, private security, or just plainclothes officers in the room starting the shoving is one thing we have yet to learn.
Joe, you've been following U.S. politics for a long time. I mean, we have certainly seen stress points in this country, but to see something like this, I'm not quite sure how to put it into perspective.
That's for sure. It feels like a real breakdown right now. And of course, this follows a weekend of violence on the streets of Los Angeles that brought us to this moment right now, but also just a lot of very contentious rhetoric coming out of the nation's capital here. And we're on the eve of a big military parade here in the city of Washington that has a lot of people talking about the optics, the contrast between what we're seeing in Los Angeles and here in Washington, D.C. This is a difficult time to be in the political business here. And we talk to a lot of lawmakers every day who acknowledge this. This just went up a notch, maybe a couple notches. When lawmakers talk about lowering the temperature, well, it keeps getting higher. And we're seeing this play out on the Senate floor right now. We know for a fact that the Congressional Hispanic Caucus is marching to Speaker Johnson's office right now. And this is something that's happening before our eyes. People are going to get out of work at 5 o'clock when you guys are coming off the air and we're doing our late edition of Balance of Power. This is going to start sinking in, and I suspect it's going to have some momentum.
Yeah, and the inability to really have conversations about really critical and serious issues in this country. This is just another sign of that. Hey, Joe, thank you so much. Busy day for you. And Joe and Kayleigh, of course, will be back on Balance of Power. They'll come your way at 5 p.m. Wall Street time on Bloomberg Radio and Television, so be sure to check them out a little bit later on today. All right, folks, we are going to continue to track that story for you on the domestic home front, but we do want to get to an update on that plane crash in India today.
Yeah, more than 200 bodies have been recovered at the crash site of a Boeing 787 Dreamliner operated by Air India that was bound for London. This is according to police officials. We've got Julie Johnson joining us. She's Bloomberg News senior aerospace reporter. She joins us from Paris, where the Paris Air Show is set to kick off next week. Julie, we spoke to Eric Johnson earlier, and he reminded us that this couldn't come at a worse time. Our thoughts are with the families and everybody who's been affected by this tragedy. In the context of what you're doing in Paris and what's happening at the air show, what was set to happen at the air show, what does this mean?
Great question, and I think we'll know more tomorrow. I think this was a day for Boeing to really focus on the tragedy and its response to Air India and to the regulatory authorities who are now taking a close look at the plane and the crash and what went down. And the air show is secondary to all of that. And so one of the questions we have is whether Boeing will have much of a presence here at all. I don't know. They certainly had planned to, and this was going to be an important moment for Boeing CEO Kelly Ortberg, who's really been kind of nose to the grindstone since he joined the company in August, with good reason. It's been crisis after crisis. But they were having some good momentum, and then today happened.
Well, Julie, and one of the things, you guys are so smart about this, George Ferguson of our Bloomberg Intelligence team too as well. I mean, and we just talked with another member of our team about there's a lot to be known. We don't know because you look at the video, there is the video where things look okay and that there's no signs of problems. And then, of course, until there is, obviously. I mean, there is a chance that it isn't a Boeing Dreamliner problem, correct? It could be the engines, it could be mechanicals. Like, we just don't know yet. We do know, it sounds like the plane did radio in a Mayday. But again, there's a lot to be known and whether or not it is a Boeing problem or something else.
That's such a good point, Carol. And with every one of these tragedies, everybody is off to the races. In terms of trying to figure out or hypothesize as to what went wrong. And just from experience, the conventional wisdom in the first 24 hours is almost always wrong. So there's a lot we don't know. But this particular plane had been flying for Air India for 11 years. It was actually, I could get into the wonky history of the plane, which is kind of fascinating.
Yeah, please. That's why we like you, among other reasons. But you know this stuff so well.
Well, this, the Dreamliner really had a troubled start, and Boeing had outsourced a lot of the development to its suppliers and then did a bad job of managing them. So the first 60 planes, basically, the company said, we're going to set those aside, where, the company took control over more and more processes. And they came back later and did massive modifications to reinforce these planes. So this was plane number 26. This was a really early Dreamliner. And it was interesting because they were in the spotlight. They were flawed. Boeing fixed the flaw. They went on to be successful in service. This was a workhorse plane for Air India. So that was sort of the story of the 787 program. I think writ large, troubled start, and then it has really, this jet has been just a really good performer. I mean, there have definitely been some issues here and there, but if you talk to United Airlines, my God, they love this plane. So, so that was just kind of fascinating to me as well, that this pointed to the old Boeing that had put, you know, money and costs above everything else. And the new Boeing now is trying to break from it. But then, you know, it's a reminder of how fragile the recovery is at Boeing and how quickly, you know, the narrative can turn ugly, and not even for things that might, you know, that they did or that are under their control necessarily.
Julie, wasn't there also a battery issue that grounded the fleet of 787s a little more than a decade ago?
Yes, that's right. Early, and this was part of the early teething problems and the design issues, and the you know, we could debate whether Boeing did vigorous testing of the batteries before they put the plane into the service. This plane is highly electrical, by the way. Really, really advanced, and in the electrical systems that you know, power it and that help operate it. Anyway, so yes, there were 2 lithium-ion battery fires in 2013, and the plane was grounded for 3 months. And at the time, that was shocking, and it hadn't happened in decades. And so Boeing went back and sort of redesigned a fix for that. So that was definitely not a good moment for Boeing. And then in 2020, the FAA and Boeing halted deliveries for the better part of 2 years over some sloppy factory, imprecise manufacturing, not to get into the weeds. No, but yeah, so this plane's definitely had some issues, but in service it's been very safe, and the engine has performed really well also, and that's going to be looked at as part of this.
Which is why we talk to you guys and try to be real careful, right? Because there's a lot to be known, and it will take some time. In the meantime, our thoughts go out over to all the people who lost their lives in this accident. Julie, thank you so much. Julie Johnson, she's Bloomberg News senior aerospace reporter, joining us there in Paris, getting ready for the big aerospace show, which is something where a lot of headlines come out of, orders come out of. The timing, we know that this will be top of mind for everybody who's there.
Yeah, we appreciate Julie staying up late and joining us from Paris. Hey, meantime, we are a little less than 40 minutes until the close of equity trading here in New York. Let's head on over to Charlie Pellet for an update. Hey, Charlie.
Hi, thank you very much. Do want to mention the Boeing shares trading lower. Boeing, of course, a member of the Dow. We got Boeing down now by 4.8%, and there is word from the Associated Press that a single passenger did survive the fiery crash of that Air India Boeing 787. Stocks higher across the board, with the S&P up 21 right now, up 0.4% at 6,043. The Dow up 83 now, up 0.2%. NASDAQ, the composite index, up 55, up by about 0.3%. The 10-year yield 4.35%, the 2-year 3.90%, and the 30-year 4.84%. Gold now higher by $32 the ounce, $33.87. Spot gold up 1%. West Texas Intermediate crude 68.12 a barrel. A little change there, down 3 cents. That is a drop of just under 0.1%. Bitcoin right now down 1.1%, below 108,000, 107,748 on Bitcoin. Among the names reporting today after the close of trading, we will be hearing from Adobe, the stock higher ahead of earnings, up now by 0.4%. Recapping, S&P up 21, up 0.4%. That Chime IPO, by the way, cannot ignore that, up 35.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Our Bloomberg Tech Today conversation is brought to you by Cisco. AI moves fast, and the path forward isn't always clear. Cisco gives you the infrastructure, security, and observability to stay on course. Cisco, making AI work for you. Visit cisco.com/AI.
All right, so as you know, it's a busy Thursday, a lot going on, and that includes in the IPO market. IPO is definitely having a moment. We talked about Chime Financial earlier today, surging as much as 66% on the company's first day of trading. The IPO priced at $27 a share. Circle Internet surged 170% on its first day of trading last week. And then you had the cryptocurrency exchange Bullish Global confidentially filing paperwork with the SEC for an IPO in recent weeks. There's a lot going on. That filing, according to a report last week, Tim, in the FT.
Yeah, so the IPO is the culmination for a lot of venture capitalists. The question we have is, how are things looking for them earlier in the process, for companies that are raising money right now? For that, we check in with Bob Curley, CEO of Bridge Bank. It's the tech division of Western Alliance. Bob Curley is Deputy Chief Banking Officer of Regional Banking at Western Alliance. The bank has more than $80 billion in assets, got a market cap of around $8 billion. He joins us this afternoon from San Jose. Bob, your focus at Bridge is on every stage of the life of a startup. So you focus from them raising money all the way to IPO, and you go past that. Tech and life sciences is your specialty. How would you characterize the environment right now? We know IPOs are pretty hot, but what about earlier on in the stages?
Yeah, there is a mix of things going on in the industry, most of them good. There's robust capital available to founders these days. And so a lot of people are making choices today, whether they go public, as that window, as you covered earlier, is wide open. No telling how long that will last, but it does look like this will be a nice run. But alternatively, in the old days, IPOs and M&A were your solution. Today, you have a third option, which is to stay private for longer. And there are plenty of sources of capital to be able to do that. And of course, Bridge, Western Alliance is one of the sources for that.
So talk to us about, in terms of activity and what you're seeing. I think we love talking to different aspects of financial markets and kind of our business world, including anything to do with certainly startup companies and entities, in terms of, Bob, of what it tells us about the environment, more upbeat, more not, certainly when uncertainty has really been the narrative and the watchword for all of us. And I think it's safe to say, I remember hearing somebody on surveillance this morning that, you know, the one thing we know that is a very effective tool of this president, I don't think I'm speaking out of turn here, is that ability to catch people off guard. And so uncertainty will probably be with us until the end of his tenure in his second term. So give us an idea of what you are seeing and how you would describe kind of the environment when it comes to startups, the capital raise, and everything around them.
Well, I think you're dealing with a couple of things. One is you have a whole cadre of companies that raised money at very high valuations during the zero interest rate environment, the ZIRP period. Those folks are trying to figure out where they go from here. A lot of them were priced to perfection. And obviously with the increase in rates, among other things, they are finding sometimes that fundraising is more challenging. What those folks have been focused on is bringing their burn down, getting themselves to be more sustainable, and now addressing whether there's a growth story behind it. They will go in one of two directions. They will resume a growth story, or they will manage the company for cash. The third option is, if neither of those paths are available, they will have to look for a soft landing for the company. Those are the companies that were funded in the, I'll call it the halcyon days of the post-pandemic period. Then you have a whole nother group of companies that are up and coming that I think could be some of the most exciting companies we have ever seen. Those include very popular AI companies, but a whole lot of companies that benefit from the formative technology developed by AI, which would lead you into robotics, into defense, into space, et cetera. So I think we're entering a whole new area of great returns, great opportunities on the new front, while we also contend with or deal with the companies that were left behind.
Is there enough money out there to kind of keep these companies private for longer? It seems to be the mode as of late, or certainly what we've seen in the last few years. And sometimes that can be great in terms of giving company the space to do what they need to do. It also, though, can keep alive companies that probably shouldn't be kept alive. So give us an idea of how liquid it is out there and the money that are chasing startups at different stages of their life right now.
You're absolutely right, Carol. The amount of capital being deployed into the space today is a multiple of what we've seen before. Put in perspective, $60 billion in venture debt was done this past year. The next highest year was in 2021, where it was $41 billion. So it gives you a sense for the growth in that period of time. It is almost double last year what it was in 2023. So we're seeing all different sources of capital. I think the most important thing, if you're a founder, you want to align with investors who have been there, done that, who have been through the cycles. We've been doing this for 20 years. We've seen a lot of people come in and go. They're referred to as the tourists. But I would say at this point in time, there are more options on the table. And I think it's also becoming more accepted in the boardroom that people will consider debt because of its non-dilutive nature or less dilutive nature as an alternative.
It's an alternative, but it's an alternative that comes at a price because of and look, there are entire businesses that are made up of venture debt and entire publicly traded companies that really just focus on venture debt. But what are we talking rates here in an environment such as this?
Yeah. So the old prime rate or reference rate is the rate. And depending on how early a stage, you may also have a little bit of warrant upside. However, Tim, you got to compare that to equity dilution, where ownership is being given up. And the primary tool of using venture debt in the earlier stage companies is to defer that next capital raise so that you can knock down milestones and or attract customer bases that you wouldn't otherwise be able to do, which obviously has a positive impact on the valuation that you're able to drive for the company. So in a sense, it's a way of staging when I raise the amount of equity capital I think the business needs over time.
I want to get into, Bob, in particular, what you're seeing in terms of AI and where the money's going. We just came off of an event, Tim and I, in San Diego on Tuesday at Cisco Live 2025, and we talked to a lot of their key executives in terms of what they are doing and AI strategy in particular. They've got a lot going on, and it seems like they are working aggressively to pivot to the AI infrastructure build. But it's been fascinating, right, to watch over the last 2 years where it seemed like NVIDIA and OpenAI, but it's branching out to power needs and, software and so on and so forth. But where are you seeing capital deployed, be it debt or equity, in terms of capital raises when it comes to AI? What's interesting? What are the trends that maybe aren't being talked about as much?
Okay. Well, certainly you're absolutely right. There's a huge amount of money being deployed into the infrastructure for AI and the pure compute power you need to accomplish that. Those tend to have very large investors, very large dollar amounts involved, and hence you tend to have mega funds that are focused on that. I think what's particularly interesting is I would call it applied AI. And that's companies that are taking AI capabilities and focusing it on functional areas, solving a single problem, for example, or a group of problems, or applying it to a particular vertical, which is using AI technology, but then applying it to real problems that clients have today and solving them very much the way application software would have years ago, but ever more efficient with the AI capability.
In terms of where venture capital is flowing, it does seem like a lot of the big money is going toward the LLMs, but on sort of the smaller side, the deals that we don't hear about, Bob, I'm wondering where you're seeing in the layer that you're seeing built on AI, where the money is going there. What can you tell us about what's being attracted where within the Valley?
Yeah, so a little more than half of what we see is somehow AI deployed. I think we have to be a little bit careful now. I was around for the whole internet craze, and everyone put a .com after their name. And so there are different levels of AI involvement and AI capability. But having to put that in place, what I would say is we're seeing the ability to take AI and gather great amounts of information and create quick learning, where someone's able to develop what would have been over weeks, maybe even months. They can have a summary of data very quickly. And so we're seeing it applied in security situations. We're seeing it applied in cyber. We're seeing it applied clearly in defense. And we're seeing it applied in healthcare. So again, I view the greatest opportunity for mid-sized funds is in these applied AI categories.
You mentioned that you were around for the .com boom and bust. So I got to get your take on if you think there's a there right now with the rise of AI versus sort of what we saw in the late 90s, early 2000s with the bust of .com. Are you seeing similarities there, or is this completely different?
Well, we say the bust of .com, and certainly there were a number of casualties associated with that. That's because I think investors knew at the front end this is going to be a huge change in our economy and the way we look, the way we do things. And so there was a frenzy to make sure I got in at any price. And as a result, a lot of business models were funded that probably shouldn't have been. But that was all in an effort to be associated with what turned out to be one of the greatest developments in technology. I think we're at a similar turning point. I think we're at a point where artificial intelligence is that enabling technology. But I believe there will only be a few winners of it. And there's probably many more companies getting funded, particularly on the LLM side.
Bob, just 20 seconds here. Silicon Valley Bank and all that entailed. Many worried about the future of Western Alliance at that time. Everything back to normal after that, or at least back to where you were before? And again, just got about 15 seconds.
It really has. We leveled out a little bit for a quarter or two, but with the backing, with Western Alliance track record and Bank for All Seasons, we resumed growth, and we're now setting records.
All right, Bob Curley, thank you so much. CEO of Bridge Bank, Deputy Chief Banking Officer of Regional Banking at Western Alliance.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ, they are all advancing. S&P holding very close to session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a modest bid right now, with the Dow currently up 73 points. S&P's gained 17, and NASDAQ is higher by 0.2%. The U.S. 10-year yield is at 4.36. Gold is in the green. Oil is little changed. And Bitcoin, that's lower by 1%. Among the main 11 S&P sectors, leaders were utilities and tech. Telecom was under pressure. And leaders to the upside in the Dow, UNH and Merck, while Boeing fell 5% after the crash in India and led to the downside. After earnings, Oracle jumped 14% to an all-time high. And in the IPO space, Chime opened at 43. The IPO is priced at 27. Wrapping things up, the AMD CEO says the AI chip market will exceed $500 billion by 2028. Live from the first word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes to go until we wrap up the trading day.
Did you have a bachelorette party, Carol Messer?
I didn't really.
Yeah.
We had a shower. I had a big shower.
I had no bachelor party.
Really?
Yeah.
No?
No, it was a busy time.
Like not even a bunch of you dudes like taking a biking ride
That's
somewhere?
what I wanted to do that, but it didn't. I wanted to do it with my brothers, and my brother had just had a kid, like a brand new kid. So I was like, we can't really make
brand
this
new
work.
kid versus an old
Yeah.
kid? Hey, I just had a 19-year-old.
Well, like he couldn't really leave.
I totally get
but
it.
Anyway.
Yeah, I know. Okay.
We're off topic here.
I know. Well, it's just that kind of a thing. Let's talk about the markets because there's a lot coming at us. Let's get to it. Eric Weiner, special guest for us, senior editor, Equities Americas at Bloomberg News. Love having him at this time. He's right here in our Bloomberg Interactive Brokers studio. Markets aren't, they're up, Eric, but it's not like massive gains. And yet there's so much going on behind us.
So yesterday was the big shock. After the CPI print came in so nicely, we assumed that we'd get to the record on the S&P 500, and instead we ended up down. Today, producer prices came in also looking good, and we're up a little bit.
Yeah.
It's basically like the most unloved rally we've seen in a while.
Okay. I think it's telling that
Enter
Carol and
Mr. Context Guy.
I think there's something telling here. No, you know what? I'm not going to do it. I'm not going to do it. What I'm going to do is I'm going to say we've spent the last 1 hour and 43 minutes not talking about a U.S.-China trade deal or anything that happened in the last 2 days. And I think that's because a framework for a trade deal is not a trade deal.
Oh, that's absolutely true.
And I think that that's what happened yesterday to the markets. They said, wait a second, we're not actually seeing anything of substance here emerge.
Well, so you're getting at what we're hearing from traders, which is that they're not expecting anything to emerge for a while. They also can see that China is slow walking this. They also know that China knows that this could all be canceled by the courts. So as you say, moving forward really requires an agreement with the U.S. and China, and we probably aren't going to see that for a long time. And that creates this situation where if you look at the way that the market has moved over the last 4 weeks, we're up about 1.4%.
Mm-hmm.
In the prior 4 weeks before that, we were up 12.5%. So we basically have gotten as far as we can go. And now the question becomes, Do we take it over? Do we step in as an institutional investor? Do you step in and buy this? What do you do when you know that really there isn't anything that is there isn't anything to stop gains, but there also isn't anything to galvanize a change in the market tone?
Oh, okay. I can tell you what will change maybe market tone in just about a month. Guess what? We get JP Morgan earnings.
What? Are you seriously doing this?
No, I'm thinking.
Didn't we just get NVIDIA earnings?
We kind of just did, but I'm thinking that's going to be the next kind of gut check on things.
I think people are kind of concerned about earnings going forward.
Mm-hmm.
So to JP Morgan's earnings, there was some news, it wasn't yesterday, it was 2 days ago. Citi said that they are adding capital to their reserves for bad loans. So, right. So this is where you start getting concerned about what consumers are buying, and really it's going to be about the outlooks, because it's the second half of the year. This will be the second quarter. And so they'll be saying, okay, for the rest of the year, we're expecting whatever. And if more companies pull their outlooks, if more companies say there's all this uncertainty, we don't know, and the numbers don't come in beautifully, we could see a drop from records.
Before we get Jamie Dimon commentary, we get Jay Powell commentary.
Well said.
Next Wednesday, we hear from the Fed chair. 200 basis points cut?
Wouldn't that be a shocker?
That actually made me laugh when it hit the terminal.
You're not the only one. I was with three colleagues. All of whom our audience would know, and I will not blow up their spot, but they are all on the TV side. And we got this headline, and I said, guess what the president is calling for? And I said, 2%, and then somebody said 2 basis points, and I said, no, 200 basis points.
So the problem with that is that would actually cause a panic in the market.
It would mean the economy is falling apart, right?
Right, exactly. It means like the world is ending, and we need to save everybody, get into the lifeboats, all that. The thing, though, is if you look at the numbers that have come in, you would think it's kind of, we're ready for him to say something dovish, something where, I'm ready to think, we're ready to think about cutting and everything like that. But if you heard Janet Yellen talking today, she's saying she expects the Fed to go slow, and she expects inflation to rise to 3%, and that's headline on the CPI, which was 2.4. She expects the inflation to go to 3%. By the end of the year. What's
because
that?
of tariffs or?
Tariffs mainly, yeah. And so if you're expecting, dovish, smooth jazz Jay to come on in and, make everything really cool, I don't necessarily know that that's the case. But yes, that actually could. So if he came out and said, hey, listen, we're actually in a place where we're thinking that, we're ready to start moving, and whatever he would say that would sort of set up, and then you'd have the Fed speakers coming through, setting up this, move lower, that would actually goose the market. But I don't know that we're going to hear that.
It's smooth jazz Jay, or it's like Waymo Jay, right? Like you get into a Waymo. I'm obsessed. I'm obsessed. I know. It's like you get into a Waymo and it's like I'm in a spa.
I take full credit for this, by the way.
No, I totally give you full credit because you were all in after your ride, and then I'm like, I got to do this. I got to check it out.
You're like turning into a Californian, or like you did in Arizona though. You did in California, you did in Arizona, you did everywhere. Everywhere you go, you get in a Waymo.
I just, I want to be Tim when I grow up. That's what I want to be.
We all do.
Any signs? I know, totally. 45, 50 seconds, signs that investors, any signs that they're moving into cash or cash-like investments? Like, it's making me wonder, was it a conversation we had with you
there is.
About, okay, we bounced back. Maybe it's time to, I'm out.
Well, the returns on treasuries are nice. So it's not like it's a bad deal. There is some hiding out going on. What we haven't seen is there was a big pile of money that was ready for shorts that got moved in and sold.
Right.
So what we're not seeing is just a ton of positioning against the market. What we're seeing is just sort of a wait and see mode, and then you have retail buying.
Good stuff. what was it? Slow jazz?
Smooth jazz.
Smooth jazz.
Smooth jazz.
Jay.
That's what we call him.
Smooth jazz Jay.
He either does smooth jazz or punk rock.
I thought he was Grateful Dead
Grateful
guy.
Dead.
He is a Grateful Dead guy.
Yeah, not punk
He is a
rock.
Grateful Dead guy.
Eric, thank you so much. Eric Weiner, Senior Editor, Equities America at Bloomberg News, joining us here. Coming up next, we're going to head over to our TV team very soon, counting down to the close on this Thursday.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are just about 7 minutes away from the closing bell. You heard Charlie and Bill Maloney breaking down the numbers. We're just little change, but we're pretty much holding on to our gains, just rolling over, but just up slightly, up 14 on the S&P 500, up about 1/4 percentage point, and just up about 1/10% on the NASDAQ 100, up about 26 points. We do get some earnings, I think Adobe, right, after the closing bell, and maybe a few others. So we'll break those down as they cross. We're going to head over to our TV team in just a moment. What's on your radar?
Well, in the meantime, we spent a lot of time each hour talking about the tragedy out of India, the Air India crash of the 787 Dreamliner. One story that is the second most read, and that's the most read story on the terminal in the last 8 hours. The second most read story is actually something that we brought up with Mike McKee earlier, Carol. It's about President Trump conceding that his immigration crackdown has been hurting U.S. businesses. And he said policy changes covering farm workers in the hotel industry will be made to address worker shortages. This is something that we talked a lot about during the campaign.
Yes, exactly.
And some fascinating data in this story that we didn't get to with Mike.
Yeah.
I didn't know this. 850,000 crop workers in the U.S. Okay, that's how many there are. They're the ones who are doing all the picking of what people are eating.
I think about it just coming back from California, having taken a ride, and it was just all of the almond trees, all of the fruit trees. I just went on my way up to Yosemite, just mile after mile it felt of farmland, and it made me like, oh yeah, like you need folks to farm this land.
Yeah, all over, up and down the
And the
California
pickers.
coast, the San Joaquin Valley, the San
You know
Fernando
this well.
Valley,
This is your home
full
state.
of areas that grow the food that we eat. 850,000 workers do this. Almost half of them are undocumented. This is according to the U.S. Department of Agriculture.
Think about the folks that we've talked, whether it's farming, whether it's construction, whether it's hospitality. There's a lot of folks, I mean, you see it if you live in any major city, that often in the morning, in the early hours, whether it's around 7 a.m., 6:30, 7 a.m., that there are often workers that will gather on various corners that are picked up, especially by construction workers or contractors, that they rely on in order to get jobs done. And when they're not there, that means a slowdown, certainly for construction folks, contractors. A lot of them are small business owners. That means a shutdown in some of the business that they can do, the amount of activity. And that's certainly, as we know, small business, the backbone of the U.S. economy.
Just brushing up on my California geography.
Yeah.
Central Valley, the San Joaquin Valley,
Yeah.
is the valley that I meant, where the food is grown.
So let's get to what the president said in a post on Truth Social. He said, our great farmers and people in the hotel and leisure business have been stating that our very aggressive policy on immigration is taking very good longtime workers away from them, with those jobs being almost impossible to replace. Changes are coming.
So that's an interesting framing, because what we've heard from the administration is that people who are in the U.S. illegally should not be in the U.S.
Right.
And there are many people who are supportive of the administration who call these individuals criminals, and on that premise should be deported as a result of their status in the country. So I'm curious about how the carve-out is going to be created, where certain folks who are here undocumented or illegally are allowed to be
How do
here,
you
but
pick and
others
choose?
exactly. That's what I'm getting
And
at.
I guess there are others on, you know, when you come to this argument that are saying, okay, yes, I get it. It's illegal, right? There is a process for coming across the border. And so maybe what we need to do, some would argue, that we need to look at that system and how do we facilitate it so that especially the workers that we need in various aspects of this economy that are so important to the productivity and growth of the economy, that they are there. And how do we, either the court systems, the logistics, whatever needs to be done, how do we facilitate that so that happens and so that it can be done in a legal way?
I don't know.
Yeah,
I don't know the
either.
answer.
I don't know either, but it's an interesting one. And I think it's safe to say that would be a 180. And as you said, it'll be interesting to see how he, you know, where he says that we can have illegal immigrants. How do you do that? I don't know.
No
it's pretty
idea.
tricky. Great read on the story. As Tim said, this is, I think, your second most read story on the Bloomberg Terminal on this Thursday. Folks, we just have about 2.5 minutes to go until we wrap up trading. We're holding on to our gains, slight gains, if you will. A lot going on behind the trade when it comes to geopolitics and other issues. Over to our TV colleagues. Closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to the closing bell with a global simulcast. It starts now. Scarlett Fu in the TV studio, and Looky Lou, Carol Masser and Tim Stenovic back in the radio booth as we welcome our audiences across all of our Bloomberg platforms and our partnership with YouTube. Great to see both of you here again. I'm not sure you missed a whole lot. It's been kind of a weird market action the last few days, and today certainly no different.
Yeah, it's interesting, right? The moves are kind of slight. I mean, we are holding on to our gains, and it looks like a little bit of an uptick here in the last few minutes of trading. But, you know, behind the small moves, there's so much going still on when it comes to certainly U.S.-China trade, whether or not the president is backing off certain policies when it comes to immigration. There's just so much churn, I feel like, in terms of news behind the trade.
Yeah, Eric Weiner was just on our program, and he shared with us a surprising technical, to me at least, which is, and I'll get the numbers a little off here, but approximately over the last 4 weeks, we've seen a 1% gain on the S&P 500, roughly. The 4 weeks before that was a 12% gain. So I won't say we've been treading water for the last 4 weeks because 1% is nothing to shake a stick at, but taken in the context of the moves that we've seen over the last 8 weeks, hasn't been much.
Yeah, so it's a slow grind higher, climbing a wall of worry. I'll throw out all the cliches at you. But, the other thing to keep in mind is we're talking about the weak dollar. The Bloomberg Dollar Index at a 3-year low, that's going to be a tailwind for so many companies in the S&P 500 that depend on overseas sales.
Well, here's the real question, guys. Carol, did you sit next to Tim when you traveled to San Diego?
I did. We actually sat side by side and we survived. And
did you talk?
Actually, a little bit.
I only responded to her questions.
I did. I did fall asleep.
You only speak to Carol Massar when spoken to on an airplane.
Wow. All right. Well.
Well,
I don't know. I don't know if this is related, but the main indexes that track airlines are lower here on the day by about 1%. Meanwhile, the rest of the market is in the green, with the Dow Jones Industrial Average up about 100 points or 0.25%. The S&P 500 continues to sort of inch higher, up about 23 points or 0.4%. 6,045 and change is your closing number. The Nasdaq Composite up 0.25 percentage point. The Russell 2000, that's your main laggard, down about 8 points or 0.4%.
All right, so let's dig into the S&P 500, guys. Not quite an even split. Scarlett, actually 300 names to the upside in the S&P, so a little bit more of a bullish tone. Can I even say that? 201 names to the downside, 2 unchanged.
Yeah, that's fair to say. You look at the IMAP and it kind of shows up that way as well. You've got 8 sectors in the green, led by utilities, where 30 out of 31 big cap utilities finished higher on the day. PG&E is the exception there. Tech lifted by Oracle.
That's always a good sign when utilities lead the charge, right?
Yeah. But then you also have tech leading the way too, largely on the back of Oracle, but still, tech and utilities. Maybe they're both safety trades because, big cap tech. And then healthcare up 0.8%. The laggards of the day, communication services, consumer discretionary, and industrials.
Very interesting. All right, so let's get to some of the individual gainers. Hey, Oracle, that is your number one gainer in the S&P 500. Finishing the day with a gain of more than 13%. Company reported fourth quarter results that beat expectations, and they projected a 70% gain in cloud infrastructure sales this fiscal year, so really giving a bullish outlook. You okay?
Yep, all good. Sorry.
Okay, good. No, that's okay. Giving a bullish outlook for the closely watched business. Stock, by the way, is up more than 20% year to date, so definitely an outperformer. Datadog, I don't know, for some reason when I say Datadog, I think of you, Romaine. Don't you like this name?
I don't know where you're going with that, but yeah, let's continue.
You always talk about Datadog. No, I didn't mean it. Do not read anything into that.
I read everything.
I know. No. Sometimes a cigar is just a cigar.
I do. He has a dog.
Yeah.
I do.
Okay. So maybe that's
called
it.
Data?
No.
Oh, that'd be funny.
She's called Carol.
Number one gainer in the NASDAQ 100. All right, moving along. Up about 3.5% in today's session. Wolf Research upgraded the software company to outperform from Pure Perform. They say it's one of the best positioned names in their coverage to benefit from AI adoption from both an adjacent, more workloads to be observed, and direct new AI offerings. Point of view, according to the analyst Alex Zukin. Price target at 150 a share, and so the stock closed at 122 and change. So some upside certainly there, according to Wolf Research. Cardinal Health, 4.5%. This was a top gainer in the S&P 500. Shares hit a record here today after the healthcare distributor boosted adjusted earnings per share guidance for the full year and gave long-term growth targets that impressed Wall Street. Stocks up about 35% year to date. I know it was a record intraday, so okay.
Can I just add a couple honorable mentions?
No. I have one more.
Wow.
Shine.
Okay.
Shine Financial, which
Okay.
I was assuming you were going to get in there. So I asked Finley, if I could add this into, I know that was that was going back. Finley, if I could add a fourth name. Shine Financial, guys, up as much as 66% in IPO today, finishing the day with a 37% gain. We're talking about an IPO that went pretty well, priced above a marketed range. So, doing pretty well. What are you going to add?
I'll add another honorable mention. That was my honorable mention, by the way. I'll just add MB Materials having a great day, up 14% on the back of that news about a potential loosening of rare earth rules here in the U.S. Tim?
All right, let's do decliners. I got my eyes squarely focused on the tragedy that happened in India earlier today. Watching shares at Boeing down 4.8% on the day, fell as much as close to 6% earlier in the session. 787 Dreamliner traveling from India to London's Gatwick Airport crashed just shortly after taking off. This was the first ever complete loss of a hull of a 787. It's a plane that's more than a decade old. It's got advanced lightweight composite materials that improve fuel efficiency. There's about 1,150 of these jets in service, just an absolute tragedy. 2025 is right now one of the deadliest years in the past decade when it comes to civil aviation. Also affecting...
And I just want to point out, Tim, we
ahead.
are actually waiting for a press conference from the U.S. Transportation Secretary, Sean Duffy, on that.
Yeah, we're going to dip into that one on radio, too, when he does start to speak. Shares of General Electric now doing business as GE Aerospace, the engine manufacturer, down 2.3%. These were the engines that powered that 787 Dreamliner. They're the Gen X 1B engines. GE Aerospace actually is going to put together a team. They're going to go to India to analyze the cockpit data of that 787 Dreamliner. This according to a report earlier from CNBC. Once again, GE shares down 2.3% today. And finally, how about some Pokemon trading cards? Because that's what GameStop is saying is the future. Shareholders not loving it, falling 22.5%. What's that?
Not Bitcoin?
Not Bitcoin. I guess this week it's growing trading card business. Ryan Cohen said at the company's annual shareholder meeting, he's the CEO, that GameStop will focus on growing its trading card business. The business of Pokemon and sports trading cards is in line with our heritage. It fits our trade-in model. It appeals to our core customer base, and it's deeply embedded in physical retail.
Adobe earnings crossing the wire. Looks like a beat and raised quarter. Revenue up about 11% here at $5.87 billion. The street was looking for 5.8 even. Adjusted EPS coming in at $5.06 a share. The street was looking for $4.98. The company's guidance here for the third quarter. This says revenue will be in a range of $5.88 to $5.93 billion. The low end of that range is the average of street estimates. The company also says digital media revenue, a key metric now, of course, given everything going on with AI, $4.37 to $4.4 billion. And once again, the low end of that range is effectively the average of analyst estimates. You see that reaction in the shares, up 6%.
So the big question is really how the company really frames what's going to happen once its price increase comes into effect. It announced it back in May. It takes effect, or took effect June 17th. Takes effect June 17th. I'm getting my dates all wrong. But that's a big question mark because you've got upstarts like Figma and Canva that can take away some of the casual users, but the enterprise users will probably stick with Adobe. And how much will we see that really jump in the revenue line?
All right, guys, just quick check-in here on the bond market as we're waiting for more earnings to come out. One of them is Adobe, trickles out as well. Buying across the curve, what was really interesting here is that we are off the lows of the session when it comes to the 2-year, despite those jobless claims and continuing claims, as well as that softer PPI. Also, on the back end, we had that 30-year auction. Went all right. We got through the auctions this week. Everything worked out okay.
Yeah, so interesting to see. Hey, RH just starting to cross the Bloomberg terminal. Company's saying it still sees fiscal year revenue of up 10% to up 13%. Keep in mind, as we wait for some more numbers to come out, this one's been beaten up big time year to date. It's down about 55% with almost 21% of the float shorted. So any outperformance, we could see some short covering, but we'll see, because right now we are seeing the stock bouncing around just up about 0.4%.
This is Bloomberg Business Week Daily. Report.
Don't actually release the numbers in a sort of clean fashion, so it'll take us a moment to get to them. But it gets to this idea here. We talk about kind of the dichotomy between what we're seeing on the business spending side when it comes to Oracle, when it comes to Adobe, and of course what we see on the consumer side when it comes to RH, at least luxury consumers. Alex Steele, a big fan.
Oh, yeah. Yes. Romaine loves the RH. Sees second quarter revenue growth of about 8 to 10%. So those numbers coming in as well. And again, those full year revenue growth about 10 to 13%.
Yeah, exactly. All right, guys, that is a wrap. Our cross-platform coverage. Good to be back with all of you guys. We do it on radio, TV, YouTube, Bloomberg Originals. Alex is heading out. Scarlett and Romaine continuing certainly on the TV side. Tim and I continuing here on Bloomberg Business Week Daily. Guys, we will see you all together, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, you are listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stanovic live here in our Bloomberg Interactive Brokers studio. We should remind you that we are awaiting a press conference by U.S. Transportation Secretary Sean Duffy to talk about the air control system and any updates on that Air India crash, of course, involving a Boeing Dreamliner. We've been talking about it, as you would expect, throughout the day here at Bloomberg. So as soon as that begins in Washington, D.C. at the DOT, we will take you there live.
We're getting shares of RH. I almost called it Restoration Hardware.
No, that's what it was known for a long time.
Yeah, it's now called RH, right?
No, it's RH now, yeah.
Up 12% in the after hours. The company out with some headlines, out with some news. As Romaine mentioned, the way we get these numbers is really difficult because of the way that RH publishes the numbers. So we're just now getting them in. 21%, or 52% rather, of upholstered furniture will be produced in the U.S., 21% will be produced in Italy by the end of fiscal 2025. The company also reporting first quarter adjusted EPS came in at 13 cents. The estimates were for a loss of 4.6 cents. The company also saying first quarter net revenue coming in just below estimates at $814 million. Estimates are for $820 million.
Yeah, and I think what's interesting, as we mentioned kind of earlier, is that this stock has taken quite a beating this year. It's down about 55% year to date. And as I also mentioned, that almost 21% of the float is shorted. So any signs of outperformance, and we certainly saw that with the first quarter adjusted EPS number, that was a big beat, that we could see some short covering, and that is why you might see the stock bumping up in the after hours. The company also delaying the launch to spring of 2026, delaying launch to spring of 2026 due to tariffs, delaying launch of a new concept planned for the second half of 2025. They're now shifting that into the spring of 2026. So quick check on this stock in the aftermarket. It is up, Tim, about 14%. So again, that second, it looks like that outperformance certainly maybe is why we're seeing investors move into that stock.
Yeah, RHC's tariff disruption hitting revenue by about 6 points in the second quarter. We're going to bring you more updates as we do get them from RH and other companies that are continuing to report. In the meantime, I want to talk a little bit about private credit and private markets. The influx of wealthy individual investors is set to reshape private markets, bringing new risks around liquidity, transparency, and valuations to this still largely opaque industry. This according to a report published on Tuesday by Moody's Ratings. We've got with us Christina Paget, Associate Managing Director, Head of Leveraged Finance Research Analytics at Moody's Ratings. She joins us once again from New York. Christina, good to have you back with us. We've spoken to you quite a bit over the last couple of years about private credit, specifically leveraged finance. I'm wondering about the research that you and the team have done over at Moody's and what you found in terms of new risks as this market has grown.
I don't know if we've seen a dramatic change in terms of the kinds of risks that we've identified. Maybe they're just getting more dramatic. You know, we get closer to a size in which there are systemic implications, and so that becomes part of the challenge. There are some changes, though, that I would want to highlight. Some of the relationships between the direct lenders and LBOs, when they were exclusively bilateral, there were some strengths to that relationship. The tightness of the documentation for those transactions, some of that is loosening further as demand increases for assets themselves. So there's the risk on that side. And then, as we highlighted in the report, the presence of a retail investor does change some of the dynamics. Again, it probably exacerbates a liquidity issue. That we thought was balanced by long-term capital.
Christina, anytime there's like all of a sudden everyone wants to run into an asset class, it always makes me a little nervous. And I just feel like in the last year or two, the momentum behind private credit has just, the velocity and the run towards it just seems to have grown exponentially. And so it makes me nervous that money then maybe isn't as particular in terms of where it goes, because you're going to have a lot of money chasing similar assets. It drives up values, but it also then maybe puts pressure on money to go into places that aren't as beneficial, safe, secure, transparent, pick your word. So is that kind of what you guys are thinking?
Well, some of what you've just described is what we highlighted in the report. And I guess the thing I would add is that sometimes also it allows for more leverage in the system, which is obviously something as a credit analyst we are concerned with. The flip side to that is that with the expansion of private credit, we saw more liquidity enter the space broadly. And if they're really taking the risk off the bank's balance sheet and putting it in the hands of a different set of investors, that doesn't have to be an increase in risk. And if the life insurance, long-term investing is finding that there's attractive assets within private credit, that may be a safer place for those assets to be than on banks' balance sheets again. So some of this migration could be beneficial to the overall system. But you sort of take the words out of my mouth, right? When you say if there's too many investors in too short of a time pursuing these assets, we might see sort of too much asset appreciation and some poor decisions being made. I think the other thing that we tend to highlight is the concentration among, not that many large asset managers. And so those are some of the things that we highlight as concerns.
Why is that a concern? Because, you have the folks at the traditional banks that we talk about all the time. I've heard some of them say, express not disdain, but criticize private credit in the sense of, well, they don't have to deal with the same regulatory environment that we do as big banks. Is that a concern to you?
Sure, and I don't think we're shocked that, one set of competitors is criticizing a different set of competitors.
Exactly.
But we are fans of a certain kind of regulation, the kind of regulation that brings transparency to an asset class. So the banks are obliged to submit to much greater regulation, but also provide much more data, to the federal agencies. That's very instructive, and there is a limit on that same kind of transparency on the private side, and that does give us pause.
So, we think of the ratings agencies to kind of, hopefully be on top of all of this. But is it hard to be on top of everything that's going on in the private credit world? Because those investments, I don't know, like how much information can you really gather on various private credit investments? I mean, obviously, like if folks are creating the funds, if they're not doing well, investors aren't going to continue to put money into them. So in some ways, there's a checks and balance system. But I do wonder about other ways to have checks and balances on these types of investments. How do you guys do it?
Well, some assets are much more visible than others. So for example, the largest share of private credit today are the business development corps in the U.S. They have to value their loans every quarter. They have to provide other kind of credit metrics. Many of them, most of them, are publicly traded. So there is some information there, and we rate probably the majority of them. So that has some value. But it's also up to us to take that information and put it into our own systems and make sure that, for example, everybody is valuing that loan the same way. There are other parts of private credit that we do have less insight into. It is depending on how you measure it, is how big the market itself is hard to say. There is that aspect as well. But
Christina, we're gonna
do rate the insurance company.
Right.
And they give us access. So
we're going to have to leave it there. Christina Paget, Associate Managing Director, Head of Leverage, Finance Research and Analytics at Moody's Ratings.
Some headlines, Sean Duffy saying India will lead the investigation. The U.S. will assist.
4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Lots of earnings after the close of trading. Adobe out with a strong sales outlook for the current quarter, quieting investor anxieties that the leader in creative software is falling behind in a competition with AI-focused upstarts. Now, after an initial move higher after hours, Adobe shares are now trading lower by 1.4%. We also heard from the luxury furniture company RH, the old restoration hardware, surging in late trading after keeping its outlook for the full year unchanged, easing investor concerns that tariffs and a weak housing market would hurt the company's performance. After hours, RH shares, they're up now by 15%. S&P 500 index did inch higher today. The Dow, the S&P, NASDAQ all gaining. S&P up 23, a gain of 0.4%. The Dow up 102 points, up 0.2%. NASDAQ up 46. That was a gain of 0.2%. 10-year 4.35%. The 2-year 3.90%. Gold up $31 the ounce, up by 1%. And West Texas Intermediate crude up 0.4%. 68.37 a barrel. According to New York State Controller Thomas DiNapoli, New York City may face annual deficits of up to $13 billion due to under-budgeting costs for social services and overtime. Recapping, S&P up 23, up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. As we mentioned, we are bringing you the latest on everything when it comes to the tragedy of this 787 Dreamliner operated by Air India that crashed, helping turn 2025 into one of the deadliest years in the past decade for civil aviation. Right now, Sean Duffy, the Transportation Secretary, is giving a press conference. Much of the press conference not focused on this crash, but a couple headlines emerging. The Transportation Secretary saying that they're deploying the FAA and NTSB teams on Air India crash, though India will lead the investigation and the U.S. will assist.
All right, so let's get more on all of this. Joining us right now from, excuse me, I'm a little confused.
London.
We are going to go to London.
Yeah, let's go to London and go to George Ferguson. He's Senior Aerospace and Defense and Airlines Analyst for Bloomberg Intelligence. He joins us from London. George, I want to get, you've been flying actually today. When we heard from you earlier on Bloomberg, I heard that you were in, was it Oslo earlier in the day? This is all setting up, all setting up for you to, I think, do some European work in the coming weeks. George, we're hearing from Sean Duffy that India will lead this investigation, the U.S. will assist. Is this typically how it works when it comes to how the FAA investigates?
I think it is pretty standard. I think the FAA obviously gets involved because it's a U.S. built aircraft, but typically I think they let the nation, that's the airline operates in, lead the investigation.
Okay, so let's talk a little bit about what we've been able to glean just in the few hours since this tragedy. I want to talk about just the process of determining what happens here. And I think when you hear Boeing and you hear plane crash, unfortunately, a lot of people's minds turn to what happened with the 737 MAX and the disasters that were truly a result of, I guess we could call it a manufacturing defect, a software defect that led to a long time grounding of these airplanes. Given the history of the 787, what's the right way to think about this tragedy?
Yeah, I think that we don't have, and we don't know for sure, right? But I think most of the signs point to the fact that we don't have that kind of problem here, a systemic manufacturing problem. I mean, one of the things I look at is this airplane was in fleets for 11 years. That's a pretty long time to be flying. It's gone through some level of maintenance at Air India at this point. And the way the airplane crashed, it was in somewhat controlled flight, but looked like it couldn't get altitude. Typically on takeoff, when an aircraft can't get altitude, there's some sort of problem with the engines. Those are GE engines on Air India's fleet. Again, 11-year-old engine would have been maintained since it left GE's factories. So I'm wondering if it's either some level of maintenance or conditions there in the area today.
George, because of that, both Tim and I were, listening to you earlier, I believe it was on Bloomberg Surveillance, and really kind of breaking it down and just saying that, you look at the video and it seemed like everything was okay until it wasn't. So you bring up the maintenance issue. How quickly do they figure something like that out?
So I would imagine that it's not going to be hard to find the recorders in this jet, and so that ought to give them some sign as to where different throttle positions were and how much thrust the engine was producing. So I'd imagine, in fairly short order, they could probably get at least a sense for that, which I think is going to start to point them the right direction in the investigation. My guess is you're talking a couple of weeks, not extended periods of time.
We did speak with Julie Johnson a little earlier, and she reminded us that there is this sort of checkered past when it comes to this plane, which includes some manufacturing issues just a few years ago. But before that, the battery issues, and before that, with the earliest planes, there was the sort of retrofitting that she talked about. To you, George, does it make sense to be talking about that in this context, or has the track record of the 787 essentially proven that it's not something that has to do with the defect of the plane?
Yeah, to me, again, the track record does indicate, I think, that the airplanes have been performing fine. For sure, I mean, some of the latest challenges we had in the airplane was joining of the fuselage pieces together. But again, what we saw was an airplane that was very much intact. It just looked like it couldn't develop enough lift. And so I'm just thinking it isn't, some of those defects that we're thinking. There was no fire that the battery box issue would suggest if you're having that would be going on. So it just seems like, again, it was just too stable. It was just too stable and really, again, looked like an airplane that couldn't develop enough lift. And so to me, the first place I'd be looking, I imagine investigators will too, will be to see how the engines were performing at that moment.
Well, you mentioned engines, right? And I'm looking at shares of GE, George. They were down about 2.25% today. Boeing was down about 4.8% today. It's just one day trade, and obviously it's not surprising to see that kind of reaction. Before we go back to GE, I want to ask you about Boeing as we get ready for the air show, the Paris Air Show. And I just wonder, is it just... Boeing's just had such a tough time, and it felt like they were just kind of getting back on track. Tim and I were in a 737 MAX, and it's a really nice plane. And
everything seemed brand new.
Everything. It was just hard not to be impressed with it. Is this a problem for Boeing, or it's not just, especially if it turns out to be something like a maintenance issue? Because it just seems like everybody's like, another thing in the air, another thing with Boeing.
Yeah, I do get the sense, like you said, that there's a lot of concern. Boeing has had quality issues. The questions are, is this a manifestation of another quality issue or something we don't know at Boeing? Again, I from everything I've seen so far, I would tend to think it isn't a Boeing quality issue. We never like to see airplane crashes, and for sure Boeing's had its challenges, but Airbus does get them from time to time. Yeah. But everything I'm seeing don't lead me to believe that it's a Boeing quality issue, and I wouldn't even think potentially a GE issue. I think it was in the field so long that it's probably not a GE issue.
Will it bother either of them at the air show? I mean, often we get orders out of these shows. Do you think any of this is going to color any of that or change any of that?
I think unless we would hear very shortly that, again, it was a problem with some of their manufacturing.
Yeah.
No, 787 is one of the airplanes. I think that you'll see a lot of competition around 787 and A350. Both of the manufacturers, those are two competing products that they would like to increase production rates for. I suspect supply chains could probably boost to higher build rates in the near future on it. So we're kind of watching that competition at Paris Air Show. I think that could be some of the source of orders for both Airbus and Boeing, the A350 and 787.
George, in the story, the Bloomberg News story about this tragedy, it includes information about who was commanding the aircraft and who the first officer was. The commander of the aircraft, 8,200 flying hours, and then 1,100 flying hours for the first officer. 8,200 flying hours, that is a long career when it comes to any type of aviation.
Yeah. Yeah, I mean, it doesn't seem like...
That's serious experience.
Yeah.
Yeah, it wasn't an experience. I mean, it seemed like and the captain had a bunch of time. So, yeah, I sometimes, things, I'm a Dita bot. I'm not doing a great job of pronouncing it, I'm sure. From what I understand, is a hot and high city. And so remember that airplanes also have to work harder. Engines have to work harder to get airplanes out of those kind of cities. So I'm wondering that if that is probably part of the problem here, where the engines were just worked really, really hard, and maybe something went wrong in the engine that just wouldn't allow it to produce full lift and get out of there.
Do we know, is this kind of a newer route? I thought I had seen Air India had recently opened this up, but I may have read that incorrectly. But is this a route that's been taken often?
Yeah, not sure about that. For sure, I've heard of flights in and out of the city. And some cities you just have to sort of manage around temperatures and how much you fill the airplane, how much fuel you put on, how many passengers, how much cargo. But I'm not sure if it's new route.
Hey, listen, because you are over there in London, I'm assuming, I don't know, are you headed to the Paris Air Show?
I am.
Tell us what's kind of, we always love checking in with you. And obviously this is a difficult story, a tragic story, and a story of human lives that are lost. But in our last minute, curious about kind of what's top of mind as that show gets underway.
Yeah, and so we're going to put a report out tomorrow on the Bloomberg terminal. But I think, we don't see a lot of orders coming out of the show this year. I think tariffs are probably going to be the dampening factor. I think everyone wants to figure out what the effects tariff have on their aircraft deliveries. We're watching deliveries, seeing recent deliveries, last month's deliveries for Airbus and Boeing. Airbus had a few into the U.S., but less than usual. Boeing had really none into Europe, where I think they're both experiencing tariffs. So I think that kind of puts a gray sky over lovely Paris.
Just in the last 30 seconds that we have with you, it seems like Boeing is starting to be used as a bargaining chip to its advantage when it comes to the way that the president is negotiating these things. What's your view on that?
Yeah, we're expecting more of that. And I think that's one of the reasons Boeing probably has the best potential for more orders. Orders have been light in the last couple of years. I think as Boeing's customers watch build rates and look for confidence that Boeing is getting that production act together. Boeing is starting to show that. So we think this year could probably be pretty good. And we think the president's going to probably try to use it to balance trade with partners that might be, in his words, offsides on trade. So could be a good year for sales for Boeing. I'm not sure it's going to come through at the show, but we're looking for a pretty good year for sales.
Yeah, and you can see investor sentiment has certainly been much more optimistic on Boeing. That stock's up about 15% year to date, and that's even with the more than 4.8% drop in today's session. George, thanks. We know it's later over by you, and we're glad we could touch base with you. Busy day, and I know you've got a busy week ahead. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst, our go-to on all things when it comes to airlines and aerospace, of course, here at our Bloomberg Intelligence team, joining us from London. We're getting ready to wrap up in just a moment.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We are keeping an eye on RH shares. The luxury furniture company is surging after hours. Last check up 18%. It kept its outlook for the full year unchanged, easing investor concerns that tariffs and a weak housing market would hurt the company's performance. Again, bears repeating. RH after hours up now by 18%. Also after the bell, we heard from Adobe. It delivered a strong sales outlook for the current quarter, easing investor anxiety that the leader in creative software is falling behind in a competition with AI-focused upstarts. Last update, we told you Adobe was down. Right now, it has reversed course after hours. Adobe now up by just about 0.6%. But again, the big story, RH surging by 18%. Turned out today to be an update with the S&P 500 index eking out gains for a fourth session in 5. S&P today up 23, up by about 0.4%. The Dow up 101, up 0.2. NASDAQ up 46, up 0.2%. 10-year 4.36%. The 2-year 3.90%. Gold up $31 the ounce to $33.86, up 0.9. And West Texas Intermediate crude up 0.7%, 68.66 for a barrel of WTI. Bitcoin selling off right now. Bitcoin down 2.4%, 106,261. Again, recapping stocks higher. S&P up 23, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, Democratic Senator Alex Padilla was handcuffed and forced to the ground by officers as he tried to confront Homeland Security Secretary Kristi Noem while she briefed reporters in L.A. He's the son of Mexican immigrants. He's California's first Latino senator. He's not currently detained, his office said. He was in the federal building to get a briefing from military officials commanding troops ordered to L.A. by President Trump. Senator Padilla spoke to reporters in Los Angeles after the incident.
I was there peacefully. At one point, I had a question. And so I began to ask a question. I was almost immediately forcibly removed from the room. I was forced to the ground, and I was handcuffed. I was not arrested. I was not detained.
Senator Padilla speaking to reporters in Los Angeles after the incident. I want to go to Washington, D.C., where we find Bloomberg News congressional reporter Stephen Dennis. Stephen, we spoke with Joe Matthew just after this happened, and he mentioned that he wouldn't be surprised if we started to hear from other lawmakers as a result of this shocking video. We should mention the video of the incident is absolutely shocking. I think everybody would agree about that. Have we started to hear from his colleagues in the Senate?
Yeah, so a steady parade of Democratic senators is going to the Senate floor and decrying this action. They consider this to be sort of an authoritarian move by the Trump administration and outrageous, and point out that Padilla, as a U.S. senator, has a right to be in that building. And that he has protections, too. You're not supposed to put your hands on a senator. On the other hand, Republicans and the administration have charged him with crashing this press conference, not identifying himself properly with having a Senate pin on him. Although if you listen to the video, he clearly says, "I'm Senator Alex Padilla. I want to ask a question." And then they grab him, push him out of the room.
Do we know who the two men were who grabbed him and brought him out of the room before? Perhaps it was 3 men at this point before we saw uniformed officers.
Yeah, it was several. It's not clear to me exactly which agency they were for or with. But Padilla's complaint here is that if he's being treated this way, then just imagine what other people who are not U.S. senators and how they are being treated. Now, the reaction from Republicans has been mostly muted up until a few moments ago when Speaker Mike Johnson attacked Padilla's behavior and said that he should be censured for his crashing of the press conference. So at least one major Republican leader siding with Kristi Noem's version of events, the Homeland Security Secretary, and criticizing Padilla rather than the agents who pushed him out of the room, forced him to the ground. So this looks like the kind of thing that's going to continue to fan the flames of division here over the whole LA raids and raids that are potentially going to go on in lots of other cities in the coming weeks. You know, this is all going on at the same time, you know, within hours of Stephen Miller, the president's deputy chief of staff, rallying Senate Republicans behind closed doors on giving the administration many billions of dollars to enforce these immigration laws, which would allow a lot more assets for deportations, for ICE agents, for border security, for deportation flights, all kinds of things. And so we'll see what happens in the next few weeks. There has yet to be a significant outpouring of Republicans on behalf of Padilla or complaining about the treatment.
Stephen, precedents in terms of, I don't know, other press conference by different administration officials and Congress people, senators asking questions. Does this happen often? I want to be smart about this historically in different administrations. Are there moments where, you know, a state senator, you know, is on their home turf and there's a administration official, maybe from the opposite party, is giving some kind of press event and they want to ask a question? I mean, does this happen a lot?
Yeah, I mean, this is pretty new in my experience. I mean, I've been covering politics for 30 years. I don't recall something like this exactly. Ron Wyden's been a senator for a long time, said he's never seen a senator treated like this.
But I mean, an occasion. I mean, an event where, like, there is an administration official holding a press conference. Do we typically have local senators or Congress people who are there on the ground asking questions of administration officials? Does it typically happen?
I think it's happened a few times.
Okay.
I seem to remember it happening a few times, but it's clear Padilla was frustrated. He said that he was in the building to get a briefing and heard that Noam was giving a press conference, so he took upon himself to sort of crash the press conference and try to get some answers on camera. So I think he was looking for a confrontation. You know, clearly the Democrats and Padilla are very unhappy with how President Trump has handled what's going on in Los Angeles. And so, you know, the thing is, there's a fairly long history of lawmakers getting arrested in protests. You know, John Lewis would get a former congressman from Georgia who was famous for his civil rights marches. He would regularly get arrested as a member of Congress in sort of sit-ins and civil disobedience and protest, called it getting in good trouble. So there are a number of arrests like that I've seen at the White House and in other kinds of peaceful protest events. But those arrests typically of members of Congress are very tame and don't involve, you know, wrestling people to the ground.
No, some really good context and perspective. No, I totally get that. Stephen, thank you so much. Bloomberg News congressional reporter Stephen Dennis joining us on the phone in D.C. All right, everyone, you know immigration is certainly a big part of President Trump's platform and administration. So, too, as you know, are tariffs. And the fate of President Trump's trade war lies in the hands of the courts as a legal battle really plays out over his use of emergency powers to impose tariffs. Now, the potential for higher tariffs on European wines, including a previously threatened 200% tariff, has caused concern and uncertainty in the wine industry. Bloomberg has been all over this story. Some businesses are exploring strategies to mitigate the impact, such as adjusting pricing or highlighting domestic alternatives. We've got a great voice with a global view on how all of this is impacting the global wine industry, and we decided to check in with him. Christian Wiley is with us, Managing Director at Bodega Garzon, here in our Bloomberg Interactive Broker Studio. Christian, it is good to have you here. It's a very newsy day. There's a lot we want to talk to you about, but we wanted to ask you about kind of the macro environment. Your winery, founded back in 1999, we've seen a few financial cycles since then, some geopolitical events, some of them, you know, very serious. How difficult is this environment, the tariff battle? How difficult is it, and how is it impacting you guys? And welcome, welcome to our studio.
Thank you. Thank you very much for the warm welcome, Carol and Tim. It is uncertain times. The tariffs, of course, came on top of a lot of complications into the alcohol wine industry, and you just basically need to keep going. You have a long-term strategy, and the most beautiful thing is that wines just get better with age. So we have to be patient. But it is a challenge right now. It's tough.
You know, when we think about so-called New World wines, I think a lot of people often think of, in South America, maybe Argentina or Chile. Uruguay, not really on the map as a wine destination as much as other areas. Why is that?
Well, I mean, it's not on the map because they've been drinking all their wine they've been making for the last three centuries. But then Garzón comes into play, and this is an incredible investment of Don Alejandro Bulgeroni. It's a $250 million capex. It is the largest investment ever in the industry of wine. And this is right next
in the region or in the
world?
wine in the world?
In the world.
Wow.
So this is right next to the beach, to the Uruguayan Riviera. So you have Jose Ignacio, which is like the Saint-Tropez.
Yeah, if you're watching us on YouTube or Bloomberg Originals, you can see the stunning photos right now.
And that was showing kind of the investment that you guys have been making.
So it's done in a very, if you like, forward-thinking way of the most committed to sustainability. We're the first winery in the world to be 100% LEED certified, and we work, to express the place. It's a new terroir that is, the vision is for Alberto Antonini, who's like the top winemaker from Tuscany. And then one of our pillars is the experiences. So we have Francis Malman is our chef. So you experience these beautiful wines with an incredible view right next to the ocean in a place that it's like the Saint-Tropez of South America.
You don't spend $250 million on CapEx unless there's growth going on. Tell us about the business and in terms of top line growth, but it also sounds like it's also experiential that you guys have incorporated. So give us, we're Bloomberg, we love all the numbers. So give us an idea in terms of the growth that you guys have seen.
Well, we've basically gone from a place that didn't grow vines to a vineyard that has more than 1,000 little parcels, little blocks. We've gone from 0 to 60 markets. We're selling all over the world. It's become the main brand in Uruguay, but it's also the leader in the States, and to Brazil, to Japan, to China, UK. And it's growing very fast. Normally, and
what's fast? Is it high teens? Is it above that in terms of year over year?
I mean, 100% many years.
Wow.
Doubling the business many years in a row.
Wow.
Including COVID, and as you said, all the different cycles. Wow. Right now, yesterday we toasted to our first year with our new partners in the US with the Winebow. And again, we did really well in a very tough year. But you have a level of investment that it's really projected very, very long term. We have projects for hotels. We have real estate on the beach. Wow. Mr. Bulgeroni has an incredible golf course designed by Phil Mickelson and Angel Cabrera, that it's a PGA Tour preferred golf course. We make our own extra virgin olive oil. So we talk about the Garzón universe.
What is the biggest revenue driver? Is it the wine or is it the real estate? Dare I ask if it's even the olive oil?
Yeah, right. The first one was the olive oil, the extra virgin olive oil, and it's won like the best extra virgin olive oil in the world a couple of times. The wines are what's driving the revenue, and it's not just selling wine as a product; it's also the experiences. So we have 50,000 visitors a year, and this is in the middle of nowhere, as you just mentioned, Uruguay.
Yeah.
And it's all very high income and net worth people. It goes from 20,000 people living there in Punta del Este and Garzón to 2 million tourists around New Year's.
It's a lot.
And a lot of them are celebrities like Clooney or Gwyneth Paltrow or Messi or
Stanovic or
Master. I was just going to say, that's kind of our crew, Carol.
Well, I'm here to invite you. You have to corroborate the story, right?
We only have, unfortunately, about a minute and a half or so left. You did bring in some bottles of wine, and tell us about what you brought. I don't want to mispronounce Balasto, Tanat, Albarino.
Albarino. We'll start with the white wine.
Yeah.
This is Albarino. We are the main grower of Albarino in the Americas. It's the white grape variety, like the queen of Spain.
Yeah.
We have the same kind of granite and Atlantic Ocean influence, similar to Galicia. And this is actually our best-selling wine in the U.S. Perfect for summer or the end of the spring, if you like. Top 100 Wine Spectator. So an awesome value. This is like a $22 retail.
That's great.
So there's a beautiful opportunity there.
Tell us about the reds, which I am a red kind of gal.
Okay, if that's this is for you. Uruguay is the country of Tanat, like Malbec would be Argentina.
Oh yeah.
This is a great varietal from southwest France. It's known to be rustic and really tannic. We have kind of tamed that, so it's very fresh and vibrant, and it's also been top 100 Wine Spectator. So we have insane accolades. Actually, Bodega Garzón is won the New World Winery of the Year. That's among another like 10,000 producers.
I mean, those things matter because it really gets people, whether it comes up in a search or people, gets noticed. Just got about 20, 30 seconds for Balasto. Tell us about this one.
So this is our Grand Van, our icon. Balasto is actually the soil, is the meteorized granite. It gives minerality, so the wines are quite ethereal. We have a lot of rainfall, so we have very nice natural acidity, makes your mouth water. This is an assemblage, and it's sold through La Place de Bordeaux, so it's like Uruguay's ambassador. It's through negociants all over the world for collectors and
so that's the red I want.
Michelin stars.
That's the most expensive one too. The bottle is.
Balasto's for you. This is. It depends, but it's probably about $180 a bottle.
Okay.
My husband says if it's the most expensive item out there, I'm going to find it. No, but it's still reasonable. No, but this is what's
so that
great.
means you have good taste.
I do have good taste. But what's great about wine, and we learn this by talking to individuals like yourself, is that there is a range, and price point doesn't tell you whether it's good or bad. You can really find good wines all along. Christian, a busy news day, and we're so glad. I think we needed a little bit of this on this Thursday. Christian Wiley, he's managing director at Bodega Garzón, joining us right here in our interactive broker studio. Thank you so much.
Thank you very much. It's been a pleasure, and I hope everybody has a great day.
And come back and tell us about how things progress.
Will do.
Look forward to it.
Thank you.
I'm Tim Stenevec along with Carol Masser. Let's take a look at some stocks on the move today. We are joined by Bloomberg News cross-asset reporter Emily Grafeo. Emily, what's on your radar?
Okay, so I'm looking at shares of Oracle, the ticker here being ORCL. Soaring to a record high today after an earnings beat. The software company projected a 70% gain in cloud infrastructure sales for this fiscal year.
Hit a record, right?
Yes, it hit a record high. And so this was all driven by the focus on AI, cloud computing, and then we saw a slew of upgrades. Barclays, Jefferies, Evercore all raised their price targets.
Yeah, pretty upbeat for them. I mean, this one, the number one gainer in the S&P 500, but that AI trade, right, still happening.
Mm-hmm.
On the flip side, shares of Boeing moving lower in the S&P and the Dow.
Yeah, that's right. So Boeing shares fell as much as 6% today, of course, after the tragic airline crash involving an Air India Boeing 787 Dreamliner. We saw a number of other airliners decline today, and then we also saw shares of General Electric decline. The plane was powered by 2 GE Gen X engines. So all around the news was really weighing on that, all of those industries today.
As George Ferguson of our Bloomberg Intelligence team reminded us several times, Julie Johnson, too, of our Bloomberg News reporting team, saying that, until all of the investigations are done, it could turn out to be something that was in terms of maintenance issues. So, despite the stocks being under pressure, time will tell.
Let's end on a lighter note. Maybe talk a little bit about Pokemon trading cards.
Okay, so GME, GameStop, does this have anything to do with Pokemon? Am I missing something?
Pokemon trading cards. You give us what?
Well, I was I'm seeing that headline now. I was gonna come in and say that the stock is down as much as 24%, biggest drop in a year because they're raising a bunch of money in convertible bond sales. Which
you would be correct.
Right, that dilutes the stock. But I'm also seeing, Tim, that they did said they're gonna focus on growing their trading card business, which I guess is bad for the stock as well.
Because they're trying just lots of different things,
it sounds like. Yeah.
You're a gem. That was a lot of ground to cover, and you did it so well, as you always do. Bloomberg News cross-asset reporter Emily Grafeo. For more conversations, check out our Stock Movers podcast, 5-minute episodes, winners, losers. You can find it on Apple, Spotify, or anywhere you get your podcasts. A very busy